very good morning to you all and happy Thanksgiving. And because it's Thanksgiving, we decided to get somebody to come in the morning that is charming, good looking, entertaining. And he missed his train, so we grabbed Pete Ward instead and dragged him in at the last minute. How are you doing, sir?
Yeah, good. Thanks, Rich. Thanks for having me back on.
We're very excited. It's been a while, actually.
Last time I was on with Angie.
Right, okay.
You were off gallivanting around the country doing your roadshow.
That's right. Yeah, with you trying to lure me into the bars in Manchester at 10:30 at night, well past my bedtime. How are you, sir?
I'm good. How are you?
What's going on? Any marathons lined up?
No, nothing of late. I've got back at it though recently.
Yeah. You're wrong.
Into Christmas.
You've got a marathon lined up this afternoon, sir.
Oh, well, yeah, taking you out.
I'm spending far too much time with this man today. We are off to lunch with our good friend Jamie, who Pete says. Apparently, you told Jamie that he's your #1 client. You've told me I'm your #1 client. How many others, Pete Ward?
Aren't we live on the show?
It's all right, none of them watch anyway. We've only got the top clients online here, don't we? And that includes this morning our #1 viewer, Monkey Man himself. Good morning to you. Good morning, Charlie Hustle. Monkey Man already talking about Broadcom. With $140 calls. Yeah, so we'll cover that, Monkey Man, in a second. We'll also cover Direct Line. That's an interesting one as well. But coming up on, excuse me, coming up on the show today, a gentleman that I was in a bar in Angel with last night. There was 6 of us. Went out for a bit of a team bonding session.
Yeah.
And we went to Wall Street Wednesday.
What sort of team? Which team is this?
So this is the marketing team.
Wow.
You're
getting everywhere.
Yeah.
Already been here a month.
3 weeks. Yeah. Somebody just actually asked in the kitchen, went, so are you still a client then? I was like, yeah, that's all I am.
Yeah.
Client and come in to talk stocks every morning.
That's it.
So we went to Wall Street Wednesdays in Angel.
Oh, cool. I used to live around there. Whereabouts was that?
Right opposite. What's the street that the tube station's on?
So you've got Old Street and you've got Essex Road that run together through the triangle, and then you've got Angel at the bottom.
So yeah, so when it comes into like at the diagonal and the bottom and goes down, it's on that crossroads.
Okay, I've got you.
Right at the bottom. So it's great. So of course the drink prices change, demand determined by demand and supply.
Right. Okay. Okay. Good.
So I was on the Camden Pale Ales. That was at one point it was £6. The next thing I look at, it's £4.50.
Brilliant.
So I had to go and get another one, obviously.
Well, then everyone runs to the bar, hitting that price, getting it higher.
And I've got a couple of photos for us actually. I'll get them up afterwards. But they ring a bell, and that's like the equivalent of happy hour, I guess. But the market's crashing.
Right.
And all the drinks are down 20% for the next sort of 5 minutes.
Brilliant. And was it busy?
It was busier the week before because it was the Schooner Scorer Special Social.
Wow, I've tried to say that after a
The
few.
Schooner Scorer Special. If anybody hasn't seen,
So you're going there week on week.
So no, I wasn't there. I missed that, unfortunately, because it cost £10 to get in. I don't pay to go into things. So so we went last night. But long story short, Aaron Bright is on the show this morning. That's where I was going to. So Aaron and I are going to talk macro. So if you are interested in the macro side, the way things are at the moment, the potential ramifications of Trump, then we're going to be speaking macro at 9:05 this morning. And of course, Ange has the Tom takeover at 8:45. And then you are with us, well, until you got some work to do, I guess.
Yeah.
So it's about 4 p.m.
Yeah. Yeah.
Now, yeah, so, right, I assume that the Broadcom whale that bought 6.6 million of January 2025 calls in Broadcom there. Let's just see where that price is. Where's Broadcom trading now? Yeah, 160. So they're buying in the money calls. Interesting. Right, let's go into that in overnight action. Right, and a very good morning to the Duke in the chat there this morning as well. We've got a lot to talk about because we've got a bid this morning, don't we?
We do indeed, yeah. Direct Line and Aviva. So they came in for them just after the UK close. I think it was Aviva that were trying to pick up Direct Line. It was that way around. And they were looking at, I think it was a £3.28 billion takeover, which was a stock, cash and stock deal. And I think it put the share price to £2.50.
Okay, so there we have it on the screen. If we can get the Direct Line graph up there, please, gents. Yeah, you can see producer Fred's off. You can see the gallery is fast asleep.
We call them charts.
There we go. Right, so there is the Direct Line price. So the bid is up
about 158. And it's a significant premium, but they
57% premium.
Yeah, they quashed it straight after, pretty much coming out saying it massively undervalued the company, and therefore they have rejected it. So I mean, we'll have to see where it comes in the pre-market. I mean, obviously it's going to be higher now that it's kind of a target, but it's probably going to be nowhere near that price.
Yeah, I mean, we were actually chatting with Junior Fred this morning. I said, right, because so Junior Fred is our intern, who's in IG. So we've got him into the seat to take the place of producer Fred, actually doing a better job as well.
Where is real Fred?
Real Fred's in France.
Oh, okay.
Enjoying his oysters, his seafood, his glass of wine. He did send me a picture yesterday. I'm not even, it looks wonderful. I'm sure he's still watching. But yes, Daniel San is taking his seat, and I gave him the exercise this morning of where will Direct Line open.
Okay.
It's a tough one.
Yeah. What's
your guesses?
175.
Oh, you think?
Yeah.
Oh no, I'm a buyer there.
Oh really?
Yeah.
What, you think much higher?
I think it's got to be £2.10.
What do you think they'll come back again with?
I'll make you 210 to 220.
Thinking about it.
In one Guinness Zero at lunch.
210 to 220. All right, then I'll sell it at 210.
Right, right. Peak short at 210. There we go. There's our first trade of the morning pre-market. We did actually have to used to do pre-market trades.
Yeah.
In the old days, and it was always BlackRock would come in, ask for a price, and some of the sort of fast money would always want early morning prices as well in stocks that had reported. And the idea was that, say the BlackRock somebody might have a $10 million order over the day. If you give them the first $1 million at the wrong price, at least you know what the right price is.
Right.
So they come in Tesco's, and Tesco's has been double upgraded this morning. So they might ask us, right, what are Tesco in $1 million? And Tesco closed at 358. So I would make them Tesco 362 to 362.5 this morning in $1 million. And whatever they did, you knew, well, that clearly I made the wrong price, because if it was the right price, they just didn't trade.
Done anything, fair enough.
So it was a lose-lose situation, but it meant you got the order for the rest of the day. So
they got a double upgrade this morning.
Double upgrade, and I think Sainsbury's as well, and that's at JP Morgan. So JP Morgan obviously very well respected.
£4.10 target actually.
A 4.10 target.
Yeah. 4.10 target, and Sainsbury's again 2% called up in the pre-market. Double upgrade again. JP Morgan raised from underweight to overweight. Price target £3.10.
310. So more upside on Sainsbury's then. So JP Morgan clearly positive on the sector this morning, where that's a 20%. Yeah, 20% upside to Sainsbury's. So looking up 2% in the pre-market.
2%. Yeah, that's right.
Yeah, I fancy Sainsbury's will get more of a. I think Sainsbury's will be up 0.5% more than Tesco's.
Yeah. You think so?
Just because everybody's. I think Tesco's, the story's kind of been well known about, and it hasn't been weak at all. What are they on the year? Moved from £3 to £3.60 on the year. So a stock like Tesco up 20% the year. It's kind of a good story considering the FTSE's done nothing, isn't it?
Yeah. No, the FTSE has done nothing.
Yeah.
But yeah, it's starting to try a little bit into the year end, but
Now, Tucker, do you get your food at Tesco's?
No,
No.
no.
Well, so just obviously a lot of IG staff watch this program as well. So we do have a note for staff. The sixth floor is closing, so the cafe on the sixth floor is closing. Sometimes the till doesn't work.
Oh, the scanner, yeah.
On the scanner.
Yeah.
So yeah, people have to write their IOUs on the list next to the till, and then they're meant to go back and pay for it. When they go back and pay for it, they score their name out. So just a note to all IG staff: if you haven't paid your bill, then please go up and settle that. I do have a list from services. And there's the latest. So yeah, so we've got 4 people.
That's very good.
That are still to pay their debts. So I love.
You'll be going out with the facilities team as well.
I love how you're Pete Ward, and then P Ward and Wardy, as if you're trying to get away with it being a different person.
Unbelievable. Funny thing is, I do actually think I've got a small debt with it.
You do. That's what and I'll tell you what, your debt's a little bit bigger than you think it is as well, because I've been adding things to your list.
Exactly. Yeah, everyone's Pete Ward up there.
Good morning, Andrew McKelvey. So looking at Cerebly Gold Q3 figures, that's one I can look at as Pete runs you through the Vivendi potential.
Oh, so
spin-off.
Vivendi, yeah. So the potential spin-off there. So it's yes, I listened to it this morning. Basically, Vivendi is spinning off 4. Basically, it's got 4 parts, or a conglomerate rather, and it feels that the sum of those 4 parts will be worth more if it spins them off, as opposed to the price of Vivendi at the moment.
Makes
so
sense.
they're spinning off something called Canal Plus.
Canal Plus.
My best French accent for Fred. And that's a sort of streaming media service. It's got a valuation of about 8 billion euros.
Okay.
And that's being spun off, and it's potentially going to be listed here in the UK.
Yeah.
On the LSE. So it'll be the first sort of large, interesting IPO, I think, since maybe 2019. And it's just lit a little bit of touch paper underneath, whether or not maybe the FTSE's becoming a bit more of an attractive place. London's becoming more of an investment hub. So they're looking to do that IPO. They're also looking to pick up a South African streaming company as well, which has got a 2 billion market cap. So in theory, you could be looking at a 10 billion market cap beast within the UK, which is exciting.
And a bit of IPO fun before our Sheen.
Yes, Sheen. Yeah, Sheen. Yeah. Exactly. Yeah, it's all coming. But then they've also got another arm which is spinning off on Euronext and a few other bits and pieces. But that's the general big scoop, I guess, out there at the moment.
And I mean, look, I haven't traded Vivendi for a long time, but I wonder if it's trying to demonstrate value, has that price moved? Not really. It's down on the year as well. I mean, France has been weak. France is down 1.5% this week. But that is, oh dear, that's not demonstrating much value to shareholders there at all, is it?
No, so you can understand the need for change, I suppose.
Yeah.
So we'll see how it gets taken, I guess.
Okay, so Canal Plus,
Plus.
potentially coming into the FTSE.
That's it.
And then also, we've got that story next year. But the Financial Times running a story this morning that, and it's for premium customers only, they say, that the FTSE doesn't lag the US as much as you think.
Right.
If you take out the top 70 names in the US.
Top 70?
Top 70
right. Okay.
of the S&P 500. So then it gets down to then it's only 1.3 times the multiple.
Okay.
And not 2 times the multiple.
Oh, yeah.
So I think we're maybe clutching at straws a little bit. The other worrying thing is that US regulators last night approved the first 24-hour stock exchange.
Really?
I am not a fan of that.
So what is that in addition? Obviously, at the moment, the US stock market, it runs from our time, 9 a.m. until 1 a.m. And so what they're just saying, they're going to fill that additional bit where it is actually closed and just keep it continuous.
And I think that's exactly it. So it's backed by Point72's venture fund. That's, of course, Steve Cohen's fund, Point72. And there's a 2-part plan by the SEC or together with the SEC, to initially launch in regular hours, then expand to include nightly sessions between Sunday and Thursday, once the broader market infrastructure is in place.
Crikey.
Yeah, that's, I don't know, there's something nice about a stock opening and closing.
Yeah, no, there is, and you know, some stock markets still even have a break in the middle of the day. So this is a big jump ahead from that. I think, yeah, a little pause for breath here and there is probably not such a bad thing.
Yeah.
Just for everything, you know, everyone concerned whether or not you're working there trading, whether or not you're doing, you know, analysis or commentary. You know, they need a little bit of a pause, I guess.
Which markets is it that pause for a break in the day? Is that the Scandi markets?
I think it's Japan.
I just wondered that Ronnie seems to disappear every lunchtime for quite a while, so I thought it might be Scandinavia.
Yeah, a couple of meatballs.
I owe my coffee.
Why?
So we had a coffee bet on where Aston Martin would close last night.
Yeah, he was saying at the close, actually.
Yeah,
he was like,
he was,
won,
yeah.
It was above 100, right?
You
wouldn't touch it.
I was going to be 101. We also had one of our fearless leaders at IG talk about Aston Martin yesterday, asking me if there's any value there, and of course I said I can't give advice.
Who was that?
I can't shop him out. But
right, I thought he was on the show.
Yeah, no, this was in a chat yesterday afternoon. But yeah, they did close at 102. After let's take a quick look at that chart yesterday. Yeah, you can see that they actually managed to stay above that placement level. Remember, 13% of the company placed at £1 the previous night. So yeah, that'll be interesting today. One to watch. So we've got Direct Line to watch. We've got Aston Martin to watch.
Yep.
Obviously, we're watching Aviva.
Yep. Tullow Oil. Another one to watch. They've had their numbers out this morning, so an RNS basically putting a November trading update out there. Oil production towards the sort of lower end, but still within guidance. And then also their free cash flow around 150 million to 200, saying that it suggested 200 to 300. So broadly in line. Okay. Still got cash, still generating, still within their revolving credit, still kind of doing what they're meant to do. But I mean, that's a share price that's just been beaten up. So not going to be hugely exciting, I don't think, on the open. Another one's Morrison's as well. They've ceased doing any deliveries with Ocado.
Oh, really?
Yeah. So that was in the news this morning.
That's terrible, isn't it?
Depends what else they're going to do. Maybe they're going to do it themselves. I don't know. I just saw the headline.
So that must just leave Ocado with Marks and Spencer's.
Correct.
Wow, that's interesting. Okay, so Ocado one to watch this morning as well. Right, let's look at Sarabi Gold that Andrew was talking about in the charts there. Nice performer from back in August last year. Stock up from 22 pence to 91. Let's look at the news that we've had. Oh, no, I don't. Sorry, Andrew, I don't see that news there. So please enlighten us on that, on those details there. And then, yeah, Tullow, Direct Line. We had weakness yesterday on that PCE number. So inflation yesterday coming in at 2.3%. It did edge up slightly. So you can see what happened to the S&P right on the open. It didn't really move at 130 when the numbers came out, but as the day went on, we dropped from 60.13 down to 59.88 at the lows, and we've leveled off just above 6,000 now.
So I'm told, the Morrison's news is they've stopped with Ocado out of Erith, which apparently is in Kent, but that's the only place.
Oh, in one. Okay,
So I'm not sure why that was on the RNS headlines.
Because we do actually have our Christmas.
Thank you, Luke Moore. Message me.
We've got our Christmas meal.
You thought Christmas was cancelled?
Ordered with Ocado to be delivered on like the 23rd.
Surely yours is Ocado M&S though, right?
Well, I'm hoping so. But my sister ordered that. So my sister and my mum and my brother-in-law are coming down to spend Christmas with me.
Oh, lovely.
So, but hopefully that doesn't mean I'm cooking.
Well, I think if you're hosting, you've got to cook. But then that is just kind of putting stuff in the oven these days.
Yeah.
You'd be all right.
Yeah, but the argument is, so somebody has to sleep on the sofa, and my 77-year-old mother will not take no for an answer. She wants to be the one sleeping on the sofa,
Right.
and I argue with her, and it's one of the very few times I've seen my mother get angry in suggesting that I would sleep on the sofa instead of her.
Wow, you got to do it then.
I mean, I've got to, but she won't let me. So, yep. Also, Doc Martens getting a kicking.
Yeah.
Is that one you're going to stick the boot into this morning?
Well, I like your puns, but it's actually being called up 2%.
Oh, is it?
Yeah, up by its bootstraps. There you go. H1 revenues 324.6 million, EBIT 24.4. It seems a return to positive growth by H2. So that is actually being called up by SureCap. And so we'll see where that one is on the uncross as well. So you've got Sainsbury's to watch, we've got Tesco's to watch, we've got Direct Line, we've got Aviva, we've got Tullows, Doc Martens, lots of different things to go. But that'll be pretty much all the excitement, I think, because obviously today is Thanksgiving in the States. So equity markets closed over there for the US.
Which is exactly why we've got you in this morning, to give us the entertainment factor while we're talking about Doc Martens and Direct Line. So yeah, you can see Doc Martens. Yeah, if it's, you know, we're gonna see some life come into that one. What a fall from grace. Because these were, you literally could not get these for hell nor leather in COVID.
You ever bought a pair?
I have. I bought. I think because you couldn't get them in COVID.
Never wanted to. Never thought about it. Never.
Oh really?
Yeah. My sister had a pair years ago, like in the teenage sort of goth phase.
So you borrowed those?
Yeah, like most of her clothes.
Yeah, big shout out to Pete's sister there, lending him your Doc Martens. But yeah, so I had a friend Tanya in Queenstown, and definitely had a thing for her, but she didn't, you know, even give me a second look, of course. But she was wearing Doc Martens one day walking through town and thought they looked very cool. So that was my mission.
Is she the friend that didn't wear much?
Go and she's an actress. She's on a TV show at the moment.
Retreat.
Yeah. You're as bad as Ronnie. Ronnie forgot he was on the show yesterday, I think, and just came in firing all the.
I did see him throw some things at your way.
Within a minute of the start. Right. Anything else? Now, reminder: we are without producer Fred, so we need your help from home. What are you looking at this morning? Because I've got this thing in my earpiece. Got the earpiece in, but also we've got you guys on the chat this morning. So Andrew helping us out. Morning to Carl. Morning to, oh, that's a new name I don't recognize. Irish. Right?
Yeah.
Good morning. And good stuff away from the numbers also. And he was having a late night. Can't see the bottom of the chat there. That is the bottom of the chat. The cricket, right, there's a cricket bat there I couldn't see. There we go. Good stuff, Neil. Right, so shall we go to a quick break and then come back and see if we've got any other upgrades?
Yeah, interesting one just in, before we go to the break, ASML shares are seen going to be up 3%, and that's one you cover quite a lot.
Right.
They're saying here that the media has reported that US sanctions are stopping short of the prior proposals that were put out there, so a boost there because that's been kind of heavily beaten down on the back of potentially more sanctions, tariffs.
So ASML, God, it has been, hasn't it? Wow, what a fall from grace there. That has been terrible. It obviously had that drop when they had the warning. Was that the start of October, or was that? I think that was a bit longer. That was probably September.
Yeah.
But yeah, that is. I didn't realise ASML was down at 627 now. I might look to sell puts on that.
Mm. Well, yeah, I think isn't it now that like Nikon's gone and Canon and all these, ASML's really the well, not the only player out there, but realistically got a big share of that market.
Yeah.
So yeah.
And I would imagine the vol's probably quite high as well, seen as, you know, the sector that it's in, and the fact that it's down 40% since July probably leads the vol to be a bit higher as well. Good morning, Carlo. And right, yeah, there we go on this Rably. Andrew talking about cash up to 20 million, Q3 EPS 11.3 cents. And Andrew thinks it looks like a positive statement. Not one I've traded, not one I've traded. Has it changed its name, or where is that base? Where does it have those gold mines? Because it does look like it's had a good year so far. Interesting one. We're going to go to break, and then we shall be back shortly for the opening bell.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
So welcome back, everybody. We've got 2 minutes until the opening bell. So we're just watching the auction prices, because remember, I have made a market to Pete from the street here. And what price did I make here?
210, wasn't it? 210, 220?
210, 220.
Line.
Pete sold me at 210 in direct line. So I'm long, he's short at 210, and they're currently on crossing at?
210 in 65,000 shares, but it is whipping around.
It was 205 a minute ago, and he was getting all confident.
32.3%, so
30,
decent jump.
30%. Oh, well, so it's not going to open until 8:05 anyway.
No, so it'll be an extended auction, yeah, that's right.
Right, indications. We have Aviva down 2% on the back of that bid.
Yep.
Doc Martens looking up 3. And Ocado is just a market mover because it's moving its delivery from Erith to Dordon.
Correct.
And expanding its store network. Expects a neutral cash impact. So, right, there we go. Also, it looks like Numis are upgrading SSE. So SSE upgraded at Numis. Okay. Having downgraded to hold when the stock was over £19 a share, we now upgrade our rating to buy.
I've got some intel for you, man, on Serabi Gold.
Oh, right. Go
Yeah,
on.
results for 3 and 9 months. Impressive jump in revenue over the last 3 months owing to inventory sales. Doesn't expect to continue in final quarter of the year. Profit before tax for 9 months is $17.8 million versus 4.6.
3. Pete
we go.
is going to
We're
ring
going
the
live.
bell,
Let's
like
go.
nice and high. There we. Oh no, over the other way.
This way.
Absolutely shocking. Right, we're never letting you touch that bell again. Right, Sainsbury's straight up there, up 2.6%, Pete Ward. Let's see what else. Aviva down 3.3. Do we have
going up on the back of it? They're up 3%.
ASM?
Tesco's at 1.6, Prudential at 1.5, so they're all getting a little bit of a boost.
ASML up 5%. That's the one I want to buy. 5's a little bit rich, isn't it? Right, I'm going to put an order in there at 650. Let's see if I can get.
The train is leaving the station, Rich. Come on.
Is you already long these, aren't you, Pete Ward?
I wouldn't comment.
651. Buying 20 shares. 651, 652, 652. Right, that order is going in.
Never going to get them.
Already dropping back to 656.
Patient buyer.
Right, so we've got ASML up 4.6%. What have we got in the FTSE? Tesco up 3. Sainsbury's up 3. Tesco up 2. Heard it here first.
Yeah, Tesco up 2. Tello's are called down 4.5. You've got Tesco's 2.3. Sainsbury's up 3%. You've got JD. They're up now above the pound level again after getting hammered on the old profit warning at 103. And then Admiral again higher, and at the bottom of the board we've got Imperial Brands and Aviva.
Imperial Brands down 2.7. Now it is a Thursday, Pete Ward. What happens on a Thursday morning?
Don't know.
Ex-dividend.
Yeah.
Imperial
there
Brands,
we go.
ex-dividend. So
There we
that's
are.
why it's down
Lovely.
2.7. Do you remember the occasion that I phoned you up and asked if you traded a certain line of Burberry?
Yeah, the check line.
The Czech line of Burberry. Managed to get him early bird.
Yeah, we've got. I think we've got Luke Cooper with that one as well.
It's just a classic. Right, Sainsbury's seems a little bit rich, up 2.8 on the back of that upgrade, but it is JP Morgan. Double upgrades for Tesco and Sainsbury's, remember. JD Sports up 1.3. Kingfisher trying to bounce after that profit warning earlier this week. SSE up on the Numis upgrade, up 1.1%. ASML, I'm in there trying to buy at 652. It's up 4.5. And that is on the story about
Sanctions.
the sanctions.
Not being as bad as what they first thought. So, yeah, they're getting a bit of a rise. Yeah, I mean, they've got a long way to go back to where they were, but yeah, decent start, 5%.
Decent start. Porsche up 2%. Thank goodness, because I am still long the European autos. Porsche, BMW, and Volkswagen all up. Yeah, that's been a shocking trade. I bought that on, it must have been Friday, on the back of the Besant appointment.
Right.
And then it obviously went wrong because Trump then came out and tried to talk the big game again.
Yeah. So Lagarde's come out, I think, maybe overnight as well, saying that she needs to basically not have a trade war and have a discussion and work out this sort of speculated 20% because it's good for no one. So, like everything, business to be done. I'm sure there's negotiations that are there. It's a lot of posturing, isn't it? It's a lot of noise. It's a lot of just general chit-chat, which got him elected effectively. But realistically, he's got to make deals. So you might come right with that one, but paper trade, you are wrong.
Yeah. And incidentally, he is already starting those negotiations because he spoke with the president of Mexico last night, and they had a discussion, and apparently it went well, according to the Mexican president. But yeah, it's just all posturing, and none of it's going to, we're going to hear noise until mid-January.
It is interesting though. I was looking yesterday because obviously we had some data out from the States. Consumer spending slightly higher than where they wanted it to be. People saying that the Fed aren't going to get to that inflationary target of 2%, and then you've got the impending, tariff scenario, which could spark inflation again. So then, is the Fed going to drop rates at the same rate they're expecting? All this sort of stuff. And then I read something this morning that says that the tariffs introduced in 2018-19 by Trump didn't ultimately prove to be inflationary. So again, it's more, oh my God, there's these tariffs coming. They're never going to drop rates again. The whole cycle is going out the window. That, you know, the dollar gets bid and all the rest of it. It's just a load of nonsense, I think.
Yeah, there's a lot of worry, but then generally, I mean, back in 1819, you couldn't get inflation no matter how hard they tried, right? They could not get up to that 2% target. You know, let's see where the bonds are trading.
There was a shock announcement overnight in South Korea. Actually, they've dropped their rates for the second time, consecutive time, on the back of their economy kind of just struggling a little bit. And
sorry to interrupt, Pete Ward, but we are hearing that Direct Line is now up and running up 32%, £2.12, Pete Ward.
Open 215, so bang in the middle. What does that mean? Equal.
Well, you were short at 210, so what does that mean? You tell me.
I'll run it.
Now, let's go to this thing's wild. Like, how much is this going to trade today? That's not.
It's climbing now, 217, 219, up 38.25%.
Yeah, because
they don't get moves like this in the FTSE 100. This is big stuff.
They rejected it because they want more, right? Because it's fundamentally undervalued the company, obviously, which is the standard rejection line. But £2.15 to £2. If you're a Direct Line shareholder, do you hold out for £2.65 or do you take £2.16? You know, that's because now this is the second bid. So the second bid.
If we learned anything from Anglos, it's
that's true.
Bank your money.
Yeah.
Or do what the book says. Take 80%, leave 20. Then you've got something to cheer on, but you've got some money in the bank.
Whose book's that?
Axel Rudolph's.
Oh, is that Axel's? Well, yeah, taking 50% off, especially if you're long at 150.
Yeah, exactly. I mean, it's a gift, right?
Yeah.
Before Christmas.
Oh, 33%.
Christmas is back on.
But I genuinely don't know what I would do with that, because 33%, incredible in the morning, but then there's the human nature of being greedy and saying, well, it's got to be more than 250, therefore it's probably 260 to 265.
Yeah. But you know, these things, we've seen it before, didn't we? We saw it with
Anglos was a disaster.
Anglos, we've seen it with Rightmove. Big premium, you know, goes hostile, bang, 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 still nothing, capitulates.
Yeah.
So you don't want to get left holding the baby. But yeah, you've also got, you mentioned them earlier, the old Doc Martens.
Yeah, how's Doc Martens doing?
So would you believe it? They are number 2 in the FTSE 250 after DLG, up 16%.
Wow.
At 68.
Wow. That's, but yeah, if you look on the actual chart, then
It's
they were
a nice bump either way.
Back here in September, but yeah, that's certainly nice. Some nice bottom picking for anybody that's been in there.
Yeah, indeed.
At the into the high 50s.
Yeah.
So this is the question now in Aston Martin, isn't it?
Up as well, up 5%, 625, 630.
Why is that?
I don't know. I guess. I don't know why that's up, other than it's lower than where it was before, and I guess you get the age-old, it might be busy into Christmas scenario, I suppose. But yeah, we'll probably touch on more of that sort of stuff come December.
Oh, I thought you were good at touching more on that stuff at lunch this afternoon.
Not with your Guinness Zero, that's for sure.
Yeah. Well, I've got to be on the Guinness Zero because I'm going to these ETF awards tonight.
Oh, yeah.
So very fancy black.
You will go to the opening of an envelope.
the opening of any envelope. ETF awards in, I think it's in Park Lane tonight. But yeah, we'll be.
Oh, nice.
Got the old bow tie and everything on, but that means I've got to stay sober with you at lunch, which is just the worst scenario, because listening to your story sober is just.
I'm sure you'll manage.
One. And then off with my good friend Tom. So from Finfluencer. What a great name for a company.
Yeah, it's good.
Finfluencer.
Yeah.
So Tom Slatter and I off in our black ties.
He's the one that won Finfluencer of the Year.
He's the one that
Yeah.
organised Finfluencer.
Ah, he organised it. Okay,
Yeah,
got it.
So a good friend Michael is the one from Shifting Shares that picked me to the post.
Oh, nice. Another good name.
Yeah, Shifting Shares is good, isn't it?
Yeah.
It's better than Rich Macro Trades.
Yeah.
Doesn't exactly roll off the tongue. Right, what is rolling off the tongue of you lot in the chat room this morning? Andrew is talking to ads, so those mines are in Brazil. Very interesting. Andrew's just sold 80%.
Done the Axel Rudolph.
80% of the position. Nice.
Never going to be unhappy with that.
And so you had Direct Line. We've got to get Andrew on the show at some point. He's had some absolute cracking trades this year.
Brilliant. We like to hear.
Yeah. Right. So
what we've got now? Yeah, I guess just I suppose a small note for those wondering what's happening with Thanksgiving. We've got sort of our market hours, which are all on the website. But realistically, all you need to know is that the US equity market is closed today.
Right.
So we will continue to make index pricing, out of hours pricing, all that sort of stuff.
So we can trade futures.
Index futures are open until 6 p.m.
Okay.
We will offer out of hours pricing on all of it. But obviously then the spreads do widen out. US rates closes at 6, metals and energies close at 7:30, all that sort of stuff. And then you've got Black Friday, as we all know, which comes.
What day is that?
That's this coming Friday. Again, equity markets close early at 6, but they are open.
Right, so they open at 2:30 tomorrow, but they close at 6.
Yep.
Right.
Correct.
Okay, and obviously all sessions won't be open today, but futures are, and again until 6.
That's right.
And right, ASML coming back almost at my limit there at 652. Sainsbury's has dropped back now, only up in line with Tesco's. I don't know, Tesco's there. I'm tempted to knock some out actually.
So you were long into the double upgrade?
No, I'm short puts.
Ah, okay.
Fine. I think you put those on for me about 6 months ago.
A long time ago, yeah.
Yeah, so short puts in Tesco, but 365, not sure that's going to hold. I mean, I'm not talking about much. I'm talking about, maybe it should be up 1.2, 1.3 or something. So it's right, Airbus. Yeah, what about those German autos? Haven't really managed to hold. They're now only up 1%, coming off a little bit. Air France up 70 basis points. And on the losing side, not really much. Rheinmetall down 20 basis points. That is it. So a reminder, Imperial Brands ex-dividend, Aviva down 1.6. Aviva bouncing. So, maybe it's not such a bad deal. Maybe that's, well, is the market saying that they walk away and they don't upgrade? I doubt it, because you never put your best bid in first, do you?
True.
I mean, schoolboy.
Yeah, that's true.
That is bid, risk arb, and special situation number 1. You never put your best bid in first.
But if they've come out saying it grossly misvalues the company, I guess that's what you'd say in return, right? So that you end up somewhere in the middle.
Exactly.
So, yeah.
That's what you say in your wage negotiations.
Yeah. What have they? Yeah, exactly. Yeah. So what have they got? They come in roughly valuing it at £2.50. They're saying it's grossly undervalued. So where do you think you come in next? 275, 280.
So then we turn to valuations, right? And the 5-year performance of the two companies, Aviva up 23%, leaving it on a PE ratio of 10 times earnings. Direct Line is down 43% in the last 5 years. I mean, what is going on?
So it's difficult to come out and say it massively undervalues the company then.
Well, but it's only on 8 times earnings.
Yeah.
So if Aviva buys a company on 8 times earnings, I guess it probably isn't anymore after it's increased this morning. Then you get some synergies together. Then it's not like it's it's not going to, on relative valuations, it doesn't look crazy. But why are these insurers sub 10 times earnings? It's incredible. There's legals as well. Legals. Oh,
What have you got
I
there?
assume that I just got done in ASML. Yes, I am the
Nice.
proud owner
Oh, you got the little ping on as well now.
ASML. I've got that ping.
Yeah, brilliant.
So
You'd learn that from Tom.
yeah, that is the Sosnoff getting done ping on the bell, so you know exactly what's going on. I've never seen a man so scorned as when his bell
But it
didn't
didn't
work
work, yeah.
in Dublin. So for when we were doing the tour, it was brilliant because now I know. I put to take the Abercrombie position off my tasty last night. I put a cheeky little low offer in. See if I can get that. No, I think that might log me out actually. Let's see. Nope, there we go. Brilliant. Right. So yeah, I was short the 120 puts in Abercrombie, and I could probably see this across here. Where's my
In your history.
activity filled, cancelled, working, other? No. Where's my?
It should be filled if you change your activity to yesterday.
Ah, there we go. That's the date, isn't it? 27th. How did I do? There we go. Yesterday. Right. So working. Yeah. So there's the Abercrombie. So I put in a cheeky bid there at 40 cents when it was trading something like 35 to 60, and I got hit in it halfway through the evening in the.
Yeah, nice. Did you get the little ping?
Oh no, it wasn't. It was at 4:20 p.m. I did. I got the ping on my mobile. Very happy.
The system works.
So, yeah, but I also took off the CrowdStrike as well. So I had a CrowdStrike short strangle in CrowdStrike, and that one you'll see there as well. Sorry guys, making you jump back and forward, but was short that at $5 and then got filled at 152.
Nice.
So
yeah,
that-
CrowdStrike, they've had a great return to form post all that. The internet problems
Yeah,
dropped down to $2 to 220.
that I think. Didn't you buy some at?
Not
down
quite
there?
at that level.
You
no.
wanted to, yeah. Yeah, that nice trade there. So ASML, we have on the long position now. I think I will hedge some of that because Thanksgiving can have some funny moves.
Yeah.
So what's that? It's only $13,000 of stock. Hedge that against Euro stocks, do you think, old boy? Not that you're giving advice, but you know, if you were in that position,
Well, the ASML one,
yeah.
I think you should keep it.
Oh no, sorry, but just to hedge. So Euro stocks, yeah, there we go.
So yeah, traditionally Thanksgiving week, stock market goes up 6 out of 10 times. It's 1928. The S&P has gone up with Thanksgiving week, and it usually goes up double the amount of a normal week. So seasonality, all that sort of stuff. People just generally.
Because it's a drift, isn't it?
Yeah. And then obviously you've got Black Friday. Then you've got all the stuff about the sales and all the numbers and all the rest of it. And then you've got the straight into December, in theory.
Yeah, into the Santa rally.
Yeah. That's
But
it.
say Santa rally has become Thanksgiving rally last year, I think. Shall we have a look back at the?
The rally really started in October of last year. You remember?
That's
Absolute
right.
lows, and then all of a sudden we went like 130 NAS to 170, and everyone thought it couldn't go any further, and it just kept screaming higher and higher.
Right. So let's go back then to November of 23. So that's us there at the. Right, so, and bring this one back. November, there we go, end of November. Oh, blimey, yeah. So we flatlined really. Look at that, absolute flatline last year. And then, as you say, Pete Ward, good memory, from the 7th of December, we took another leg higher, which was another 150, 200 points on the S&P.
Yeah. It often does it late December, late to mid-December, and then over the Christmas period of low volume, and yeah, it seems like if the bulls are out, the market just squeezes higher and higher and higher, especially at that sort of time where you've seen that really low in October, and that most people would go, well, it's probably time to enter some kind of short covering or short positioning. And that just perpetuates the squeeze.
It's almost as if you know my book.
Yeah.
So
I was there too.
Well, we have to talk about your great call on the FTSE afterwards as well. But as you can see, I am long. I think you'll like this one actually. Long the 31st of December calls on the S&P. It's the 6,030 points, but I'm short the 6,050 points for March.
Okay.
So I'm doing a bit of a calendar.
Yeah.
A bit of a pop-up.
So you think a pop up and then a drift off.
And then a drift off during January, maybe February, and then close it, 21 days before expiry, as we know from the Tasty protocol. But yes, Pete Ward had a cracking call in the FTSE.
So,
and I think I bottled it.
I mean, I spoke about it on here, and I also spoke about it on the Talking Shop podcast, just saying how with cable coming off 4 big figures and cable being at lows, relative lows, at 125, 126, the US market's screaming ahead. There was a big disconnect between the UK and the US.
Yeah.
And everyone was saying, oh, it's because of the potential tariffs, it's because people don't like the budget. It's just all that sort of stuff mixed together. And we were trading at like 8,000.
Let's get
and so
wrap up for you.
Yeah, so what I really wanted to do was I'd started purchasing 81, 80, 80, etc., buying the underlying. But what I'd done is amassed too much of a large size for what I wanted in the underlying.
Yeah, uncomfortable.
Uncomfortably,
especially the way it was traded.
Well, especially with, and you've got open-ended risk all the way down. So really what I wanted to do was get out of that and get into options.
Right, if we just show the chart here and we'll walk through. So yeah, this 80, you were long about here, the 11th of November.
Yeah.
And you and I were both buying futures here.
Yeah.
And it just
I remember it was when I came to Manchester because I saw you. Just before the close. But yeah, so basically I wanted to come out of the underlying and get into options, FTSE options for December. And
so swapping undefined risk for defined risk.
Yeah, buying calls. So I was looking at the 8300s, but this was when we were at 8,000. So the premium on those was fairly attractive.
Yeah.
I think I paid 30, but they're trading at 85 now.
Wow.
Yeah. So now it's the question of where do you try and pin it? So where do you think it's going to get to? Where do you think it's going to, finally land on the 20th of December on expiry? And so you can get into a bit of fun with it, I suppose. Options being you can keep it, you can sell underlying against it, or you can sell higher up calls. And so that's the weapon that I've chosen.
So you've sold calls even higher.
I've sold 84.50 calls, only a fraction of the size.
Comfortable with that.
Because now I'm hoping that we kind of pin around 83.50, 84.
So
if it squeezes and goes crazy, I saw an article this week from one of the IG analysts saying that 9,000 is not off the cards.
Really?
So I read that and I was like, right, okay, I better sell some higher up.
For next year, I guess.
Well, yeah, I mean, just as a working target. And so with that, you kind of think, right, okay, well, yeah, better put some sort of protection around both sides.
Well, here's the...
So you end up with a covered scenario. So if it does scream higher, yes, you're making on one, but you've got the other side of it as well.
Nice.
Yeah, so we'll see.
Right, 8,600 calls for March are trading at 90. And then the 8,900s are trading at 20. So you can get a 8,600 to 8,900 call spread for 70 ticks. Is that good value? Maybe not. I'd be more tempted to do a 1x2 there for 50.
So you'd buy
one of the 8,600s for 90 and sell, actually I'd sell 2 of the 8,800s for 66.
Yeah, so that would effectively finance your long.
That would finance them long because the McDonald pension would be doing all right at 9,000 as well. Yeah. Right, Pete Ward, I've kept you far too long. I won't even tell you what time it was. I said, Pete, what time do you want to be out here? I said, 10 past, quarter past 8.
Once you're in, you can't leave.
That's
the Hotel California in here.
Studio California.
That's it.
Right, let's have a final look at where our direct line is. See who's going to be paying for that Guinness Zero at lunch today. Reminder, Pete Ward short at 210, 217 bid. Oh boy, buy them back. Thank you very much.
Okay, yeah, on that bombshell, I'll get out of here.
Yeah. Great. Right, we'll see you after the break for confirm and send.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Hey there, trader friends! Welcome to Thanksgiving. It is Thanksgiving today, and for those of you who I know, Andrew, you are formerly from Florida. Many of you who've lived in the States and been in the States, today is a day where traditionally we eat all the crimbo food, but without the stress of presents.
Oh, yeah. Oh, we're going for a big lunch as well. Big lunch.
Ooh.
Huge.
You're going to go and do that thing tonight where, you know, you head out to like the US Embassy or many of those places that serve up expats the Thanksgiving dinner tonight.
Is that right? Are you off to the US Embassy tonight for dinner, are you?
No, but my Thanksgiving party at my friend's place is this Sunday.
Nice.
Yeah, so it's going to be 3 big turkeys. I'm in charge of the desserts.
Oof. Ooh, what's the choice? Oh, Sharon in the chat.
Hey!
Welcome to the chat room, Sharon. Happy
Sharon.
Thanksgiving.
Yeah. If Director Phil can let me know how to move my my Gmail on. Hopefully we can. I've got a picture for you. Here we are. Ah, the magic of big screens. There you are. That is my Thanksgiving cake from last year.
Oh, that's great.
And it's a pumpkin cake. And so I've promised...
You've spelt it wrong.
No, I haven't. I've promised the gang that I'll bring some in on Monday. I normally make about 3 because my friend has she's from Philadelphia. She has about 150 people over.
Oh, that's wonderful.
Mad. So what have we got for confirm and send today?
First question, let's go.
How important is back testing? I love back testing. I know you have gone as far as saying you hate back testing.
No, there's some things. Backtesting options makes complete sense to me. Backtesting single stocks is looking back into history when a company changes all the time. So I don't see that a single stock you can backtest on, but very much indices and options. Yes, I do agree.
I agree with you there. I also like backtesting strategies and backtesting products before using them. And so, case in point, trader friends, we always talk about guardrails here. Always backtesting before you put on the trade. And on Tuesday, you heard Tom W. Take a look at the trading signals on the IG platform, and I backtested that on Tuesday, and I put on some of these trades. If you whack up my screen, you can see some of the ones that I put on at 11:30 and took them off at around 1700, 5 p.m. that day, because these were intraday strategies from PIA First and Auto Charters. I have to say, really mixed there, more to the downside, but we will continue back testing that. If you come back to me just talking about back testing, we do that all the time, market measures. I do like back testing indices, as you heard Rich say this earlier on, especially when it's utilizing things like technicals. And backtesting ideas like the Bolly band and also how to trade it. Like, for example, I've realized from many painful experiences in the past that for some reason I have a better chance of being up money if I am trading up into a Bolly band, and that's why I never trade down.
Axel Rudolph will go to up. We'll go to up here. MR. So there's MRK. Oh, so Merck or Meta.
Moderna? Do they have Moderna?
No. I wonder if I can type that in. No, let's go for what? Starbucks?
Yeah, why don't we do Starbucks?
Or Spider?
Why don't we do Starbucks for a change, since it's Thanksgiving?
Okay, so we'll go for your pumpkin latte. When do you want to see how an options? So these are great. Look at all these. The post-pandemic surge, no. Pandemic sell-off. Were people still happy to buy coffees during the pandemic sell-off?
Did Phil just say, I never buy a coffee from Starbucks?
You can choose which strategy you want, right? So why don't we look at a short put during the pandemic sell-off of January to, 1st of February to the 1st of May 2020. We'd be selling one contract. We'd be doing the 16 delta with 45 days to expiry. We put on a new trade every day. That's this selection here. But we would limit the number of active trades to 5. How do you think that's going to do?
And what was the time frame?
So the 1st of February. So the market crashed, right? So we're selling puts when the market crashed. But how did we get on with that?
It would probably be down arrow, so good for us.
You would imagine, but then it did bounce back, didn't it? Yeah. So no, not good for us because you're selling puts.
You're selling puts, right?
Right. So
bad for us.
You would think that this would lose money, but it was the 16 delta. So let's see how it did. And yeah, there you go. Look at that, down 66% on capital. So you can see next time we're going into some kind of crash scenario, then you would know that's how your strategy got on. But if we did a new back test on the spiders, where are we on the SPY? Selling puts during that time, and we go exact TTE match, let's say, buying calls, right, and buying the 25 delta calls, and we put the active number of trades to 10, let's see how that did. So there we go, 72% return on your capital. So you can see how useful.
Because everyone's locked up at home with nothing to do but trade.
Well, no, just the you know, if you're buying the calls, and the that huge injection from the Fed, then you can see what happened with the that was the spider closing price there. You saw the big drop off, and even with the bounce not being as pronounced, then you got that return.
I love this tool on the Tasty Trade platform because it gives you real-time analysis and also I love the handy buttons there where you can even sort of decide on the exit conditions.
Yeah, that's right. You can literally put in anything you want, and there must be what 120 stocks there, I think.
Yeah. Oh right, so it doesn't cover the entire. It doesn't cover the entire gamut. Doesn't give you the whole.
If you would like Dr. Data to add something to it, I'm sure he would oblige. He's a big fan of yours.
Oh. Because I asked him a lot of crazy questions there. He calls me on, not off.
On, not off.
Yes.
We like that. And whenever I answer the phone to Ange, I say on number.
So backtesting is a really useful tool. One other thing I would like to add, because our clients love this very much, especially if they come from an algo background, backtesting also allows one to think like an algo. Call out to Adam Deleuze there, who runs his own outfit. We've had lots of discussions about this and trying to backtest before we put a trade on. With that in mind, hit us up with if you've not got another one to add.
Yes, sorry, not Andrew McKelvey. So, oh, you've jumped ahead of us guys there. Jumped ahead. So we've got a question in the chat room from Neil Cavendish. He's asking, can you trade Euro-Pound options on the IG platform? Yes, you can. Euro GBP options. You can see on my screen here. We've got the dailies, we've got the weeklies, December expiry. Let's look at that one. There you go. Euro GBP trading at 8330. Yeah, there's not too much trading there into December, but March you can see a bit further out. So yeah, where would we be looking? Euro weakness, GBP strength?
Yeah, I think so, at the moment anyway.
Yeah, so maybe down at the 82 level. But yeah, they are available, Neil. So yeah, have a good search through there, see which, and for longer data expiries, you can call up the desk as well. Right.
Right, so we've got a couple of people calling and writing in. Carlo saying good morning. Monkey Man, hey there. Away from the numbers, hey, the options on the IG interface are option price markets. We already covered this. Is it possible?
That's exactly what we just covered. So now we can go to question 2.
Question 2, there we are. What are the best momentum indicators in technical analysis? So I'm going to show you one that I use quite often. So I'm just going to bring up the US Tech 100 for you. And what I like doing is I try and get the RSI, because for the Tech 100, it gives me a real sense of where this is heading. So if you just go to that bit, RSI, and you just press that on, and even cooler, there's an I button there. For those of you that have never used this before, it explains it. Relative strength is a popular momentum indicator bound between the values of 0 and 100. This indicator is commonly used to find overbought or oversold conditions, and it can also provide bullish and bearish divergence signals. The one that is on default on the IG platform is set to 14. And also, those of you who want to change it, you can as well, just by easily going down here and clicking on that, and it allows you to change the respective inputs. But this RSI on default uses the 14 periods as default. And just remember that they're called momentum indicators, as the principles behind price movements are similar to the ones used to calculate speed and momentum and acceleration, like when Rich is running towards the hurdles, right? You're calculating his momentum. So that's the easiest way of understanding RSI, and it gives you a good guide. So at times when you're trading the NASDAQ, you want to see whether the rally is still going to continue at the same momentum. You're watching the RSI. If you want to see whether, you know, it's decreasing, you're also looking at that RSI line. What is important though is that with any technical analysis, don't use it in a vacuum, and also think about what algos look out for as well, and what technicians look out for. And so bullish divergence and bearish divergence is something that technicians look out for. And that's when the price makes a bullish divergence, is when the price makes a lower low, but the RSI makes a higher low. And this indicates rising bullish momentum and could be a signal to open a new long position. Rich, conversely, when the price makes a higher high, but the RSI makes a lower low, this could potentially signal a shift to downside momentum. So also pay attention to the fact that technicians, algos use this as a divergence signal.
Excellent. Right, we've just had a question come through from Mark Knapp. Now, Mark Knapp is an Ibiza DJ, amongst other things. He may have spent 15 years in hedge funds running portfolios of considerable size, but now he has retired from the city and gone into his own music label, and he's asking about Direct Line. Any thoughts on Direct Line? Not involved, but interesting situation. I agree, I'm not involved, but I'm definitely keen to watch this. Pete and I were talking about it this morning. Is this an indication of more things to come in the FTSE 250? You know, it's now we've got through the budget, we've got through the election. I am pretty sure that there will be a lot of M&A teams throughout the City of London working on deals, because we've got lower cable, 126. We've got, let's say, a lot of the tail risk out of the way with the budget. Okay, it wasn't not necessarily people happy with everything, but you can see that stocks like Direct Line trading on 8 times earnings previous to this, you get a huge bid, 57% premium to the night's before's close. You know, there's clearly a lot of value in stocks around the UK. So I think it's, yeah, no view, obviously, no advice on this particular situation. But in general, companies don't put their highest bid out in their first go at a company.
Yeah.
But yeah, very interesting for the future of M&A throughout. But also somebody asking there, what is Mark's music label? Well, you can see that on screen now. So here you go, Napster, which is a very clever name, isn't it? Napster Music. Napster. There's his first track from the new label, Make It With You.
Ooh.
See if you like that one, team. Make It With You. Making markets with you this morning, Angeline.
My question is, are you going to be performing? Can we catch you anywhere in London? Because we'd love to do that.
Absolutely. Well, yeah, because I missed that. I was meant to go to Ibiza, but I was sick. And all this was just kind of kicking off as well. But yeah, Napster playing And sunset in Ibiza, I got the videos, of course.
We were trying to figure out whether you were like a, like Monkey Man was saying, you are still partying at 5 a.m. or you tucked up in bed.
I was tucked up in bed after going out last night for, a few drinks. I was tucked up in bed by 10, 10:15. Junior Fred just told me he got home at 2 a.m.
Well, June, and I can believe that, because I also had Wardy here telling me the next day that he did try to get you out for a drink downstairs in a hotel, and he went, to his surprise, he went, I need to go back to bed.
That's very sad, isn't
I need
it?
to call
Yeah.
Mama McDonald. He was like, oh. But that's why he's got such great skin, people.
But, I get enough of Wardy in here. Never mind going down for a drink with him at 10:30 in the bar. Right, we've got Tom for Tom's takeover. He's knocking the door behind us, banging the door down.
You should be lucky he hasn't unplugged you.
Yeah, that'll be the next one.
Tom, for those of you that love that bit about trading signals, and I have been back testing this Tuesday. You saw me do that. Very, very mixed, so be careful, but do back test before you trade on whether it's the PIA first or the auto charters. Today we have a special segment because on Tuesday our viewers, trader friends, asked us, is there a way to trade via the IG platform but via TradingView? Ooh. And that is what we're going to do today.
Fantastic. Oh, I'll be watching that. Now, so Tom's takeover after the break. Then after Tom's takeover, Aaron Bright will be joining me just before he heads off to Heathrow to fly to Argentina and Brazil for the next week.
He's going to get mugged upon arrival, you know that, right?
But, to be honest, if I got to spend the next week in Argentina and Brazil, I'd take a mugging.
Yeah.
I wouldn't mind.
I mean, he's got this pinky ring going on. I said, please take that off. He's also quite tall.
And his nice watch.
Yeah, he's got a nice watch that looks like his grandfather's watch, and he's got this bracelet thing going on. I said, if I was one, I would pick him, right? If I was a mug, I would pick him. But also, he stands quite tall. Yeah. Right? And apparently, he was saying that he did some research beforehand, and they tend to pick on taller guys. So.
Good morning to you. But yes, Tom's takeover is coming right up after this break.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more, without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Hey, 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 welcome to Trade Expectations, otherwise known as Tom's Takeover.
Correct. Hi.
But before we, I was just thinking, is that a new shirt? It looks box fresh.
I am fed up with every time I come on comments about my appearance.
About your shirt?
About just everything. I'm sick of it.
It looks like it's been ironed this time.
Yeah, well, I made a special effort.
Okay. Is it box fresh? You didn't answer.
It's not box fresh.
Or is this like the stuff that is not in a box because you are about to make
everything.
mark a milestone tomorrow, right?
Everything's packed up in boxes.
Trader friends, we're all going to this place for the pre-move party. Okay, I'll send you details later.
Yeah, and also we've got because of Thanksgiving.
Yeah.
The IG dealers aren't very busy, so we're going bowling tonight.
Oh my God.
And obviously, dealers are so competitive, they can't just go bowling. They have to set up a spread bet market on who's going to win the bowling. So everyone's got a bid and an ask, right? Now, some people, so it settles, so the winner settles at 50, to give you an example. Second gets 25, 10, and 5.
Okay.
So
okay, where are you going bowling?
Queensway.
Okay.
And the best, so the people that people think are the best guy's got a bid of 24 and an ask of 28, right? Yeah. That's what we're talking about. So the favourite's got 24, 28.
Okay.
I'm on 0 and 1.
No.
You can sell me for 0. You can buy me for 1. So I think tonight I'm going to have to cause an upset.
Yeah.
Because it's tragic.
This is good though. You're the underdog.
I'm the underdog.
People always root for the underdog.
I know. Well, they're not rooting for me
Like
because if they rooted for me, because Elliot, head of options, is running the market.
Oh right. Okay.
So he's changing the prices all the time.
Okay.
So this is reflective of current demand. But yeah, we'll see, won't we? I'll prove them all wrong.
I'll have a word with Elliot later.
Well, no, you don't need to because I'm gonna win the bowling and you know.
All you need to do. Can you spin? Can you spin the ball?
Yeah, but I don't typically. I don't see the advantage of doing that.
Trader friends, this is where back testing comes in. If you stand dead center and you practice and you spin it as you drop it and you get the 6th line to the right, as long as it's halfway down the lane and you spin it, it touches that 6th line down the middle of the lane. You know, it's got lines, yes, got dots.
So 6 from the centre.
Yeah,
to
6
the right.
6 from the left, right?
Oh,
so
6 from the very left.
Yes.
Right.
And as long as you touch that 6th dot with a spin,
yeah,
it will knock everything out. Okay?
Yeah, but
you must touch. Do you understand how much practicing has gone into this? You must
a lot.
touch.
You good at bowling? Do you want to
I'm
count?
an underdog.
So you've got to, hang on, so you've got to bowl, you've got to apply the spin, obviously, immediately as it leaves your hands.
Yes.
But you want...
As you, middle of the lane, those dots, right? As long as it touches the 6th dot and gets to the end, it will take out every single pin. Okay. Every single time. I will draw this out for you, my friend.
Yeah, well...
Because I want you to win. I always root for the underdog.
Thank you, I appreciate that. But
It's back testing. Bowling back testing.
I'm not going to start off with some rogue move I've never even tackled before.
That's why you're going to practice right after the show. You're going to go ahead of everyone to Queensway, and you're going to practice this so that when they arrive, you look like, hey, I just arrived, guys. You've already been practicing that move.
Yeah.
You can spin, right?
Well, yeah, of course.
Yeah, some people don't spin.
I don't know if I can touch the sixth line.
You can. I have faith in you. I have faith in you.
Thank you. Oh, I appreciate the vote of confidence.
I'm very excited about this trading view link because when everyone started asking about it, trader friends, emailing ask at IG, I thought this is great.
Yeah.
I had no idea that you could trade with IG, but via TradingView. Right. So I'm very excited. Show us how to do this.
I will show you. The reason this has come up a couple of times is because we were showing indicators, and someone asked if you could write a script for your own indicators. Now the answer to that was you can't do it on IG, but I've never done it, but I know that you can do it on TradingView. So you can write your own script for your indicators on TradingView. That's the first time it came up. The other time it came up was, I think, backtesting. We were talking about backtesting, and
I messaged you about the trading signals backtesting, which I'm still doing.
Yes, well, you're doing it manually, aren't you?
I am.
You could also do it automatically. One of the places you can do that is TradingView. So it came a couple of times. Nice. People have asked about it, so we thought we'd run through how you do it. So if we could bring up my screen. So we're currently on, this is the IG website, and this is a step-by-step guide of how to use, how to trade on TradingView, but using your IG account. It's got 5 steps, which is probably a bit overkill because it's actually quite simple. But TradingView is not part of IG. It's very distracting. You're typing all the time. I can't.
No, it's to do with you.
Okay.
It's all to do with you, darling. Away from the numbers saying when attempting to connect to TradingView, it is not recognizing my IG user ID and password.
Okay, so
related.
We'll get to it.
We'll get to it. We'll get to it.
So the first thing you've got to do is you want to go to TradingView. And if you go to TradingView.com, you can.
It's a Black Friday sale.
We're already being sold something.
Yeah, we are already being sold something.
So you can see I've already got an account. So if you don't have a TradingView account, the first thing you would need to do is set up your own TradingView account.
Got it.
So you need to have a TradingView account in order to do it.
Check.
That would be the first thing you do on the TradingView site. The next thing is if you went to their charts. So I went to products and I went to super charts. This is their charting package. So we're on TradingView now. We're not on IG, and we're logged in. We're logged in with the TradingView account at the moment.
Got it.
So you can play around with this. Replay is their backtesting tool. Indicators is where you can use their indicators, etc. I happen to know that you can write scripts for your own indicators, which I don't know. We could always go into another time. But this is just your view of NASDAQ, and you can see that you have sell and buy here. So the quickest way of hooking up your IG account is if you go to buy, let's say, you're going to have to connect up your broker. So they have a load of brokers that you can use, but we're ultimately going to want IG. So
that's a monster list, isn't it?
It's a monster list.
Wow. Yes.
So this is an easy way of getting to the point where you add your broker account. So here you're going to put in your IG details, not your TradingView details. So whatever you log in with on IG is what you would log in with here. Now, it's interesting what that person said, because I'm having, I put my password in incorrectly. I'm having an issue today logging in through my IG account. And it's interesting, if someone else had said the same thing, we might have an issue. So it's interesting that they say that, because I'm getting this error.
So this might be a TradingView issue.
Yeah, so I've messaged TradingView to find out what's going on. And if other people are having the same issue, that's very interesting, and we can look to get it sorted. So that's how you log in. Once you're, if we just go back to the screen, once you're in, at that point, you'll be able to use the TradingView charting package, but you would be able to place your deal. If we were hooked up, we'd be able to place your deal to TradingView. So what that means is it gives you the the suite of TradingView things that people might like to use, but you still can trade with your IG accounts. You're still trading with us.
Yeah.
It's still IG products you're trading.
Yeah.
It's just if you wanted to take advantage of anything, people have different preferences, don't they? If there was anything you particularly liked to use, you could use that on TradingView, and then you could trade.
Execute with IG.
You could execute with IG. So you're executing with IG. Your flow is going through us. You would still get in touch with us, you know, with any kind of execution things. But ultimately, it just gives you a different platform to view the markets that you're interested in.
That's it. And that's nice, isn't it? It's nice to have options out there. And I know loads of people who are, you know, really comfortable and they started off with something and they're used to the functions and where to find the functions, but they still wanted to execute via IG. And this is a really handy tool.
Exactly.
To use.
And I haven't played around with it that much, but it seems like there's quite a lot in there. So I think I'll have a bit of a play because we've got to test out the back testing thing. And got to test out the indicators as well.
Does it tell you at any point that trade, if you logged into your IG account, and once you put this trade through, is there any distinction whether or not you made it via TradingView or via IG? Does it tell you?
Good question. We can. I think we need to test it out a bit. And I think we could do, if this is something that's of interest, we can certainly take a look in a bit more detail.
Yeah.
And see exactly how you would spot the difference of where you placed your trade. But it would still be in your IG account because it's still through IG.
And because a lot of our trader friends, including myself, we really like back testing. I mean, I like back testing. I like knowing what I'm trading before I use any instrument or any technical analysis, right? What is that replay button? Can you show us?
So replay is where you would pick a point in the past and you would place your trade. Now, I haven't set this up yet, so I don't think I could do a live demo, but you would pick a point in the past, you would set up your trade, and you would say, I want to put a stop here, I want to put a limit here, here's my size, etc. And it would replay how that trade would have gone for you over time. Yeah, so that's how their function works. So that is one way of back testing. And I don't know if, another thing is, have you tried the backtesting tool on Tasty, on IG at Tasty Trade?
Yes.
Have you tried that one?
Yes. So we just demoed that for our trader friends.
Okay.
I really like that one. It's very intuitive. There are lots of options. Plus, I like how it draws in real time.
Yeah.
As well. So I'm just wondering whether this does the same thing.
Yeah, it draws it out. It draws it out as you go. So it's over time, it'll play it through and you'll see how your trade would have gone.
Yeah. Loads of our viewers saying, thank you so much, Tom W, because it's been so useful surfacing all these tools. And it's also helped me to find some tools that I'm now using every day. So if you whack up my screen, this is thanks to you.
Okay.
I knew that there was an alert system, which I use a lot, especially when trading gold and oil because of my golden lines. And I like to be sort of alerted. But I didn't know there was this message function, right? So I can say stop loss at whatever and PT and just price target, right? And enter at this point. And it conveniently sets the alert when I get to a certain price level, which you enter right here. But then I went back to Tom W after Tuesday. I went, where is my ping, right? And if I didn't know this, our trader friends might not know this either, but you showed me where to find it, right?
Yeah.
So those of you that use this, I wanted a ping, because what happens is I set my alert, I write a message to my future Ange, right? But I have a really busy life, and I'm sure all our trader friends do. So I switched to, another browser because for some bizarre reason, the Bloomberg was better in Chrome. Don't ask me why. And then I'm looking elsewhere, and I don't hear anything, and that alert doesn't come up across.
You want to ping?
Yes.
You want to know about it?
Yeah, I do, because I have short attention span.
And did you figure it out? I can show you.
Yeah, show me, because I was doing multiple things that day.
If we bring up...
let's whack up Tom's screen.
We have down here...
Settings, everyone go to your settings button.
Settings, which is bottom left of your screen. opens up this panel, and you have here alert sound effect. So it looks like that's defaulted to off, but if I turn that on, then the alerts that you place, like the one you just showed, if you placed an alert on a market, you'd get that ping.
Nice. Amazing.
And out of interest, how did you find signals that we talked about on Tuesday?
I have to say, so I have trader friends, very interesting time frames, and many of you that went to the Tasty event understand why. It's not just that I'm used to trading those time frames, but I have to be very disciplined because I have 2 young children, and there's specific times when I'm driving, picking them up, right? I can't look at it, so I'm very disciplined with my stops and my take profit, and that's why I need these reminders. So I had specific time zones that I was testing, because obviously I don't want to test when I'm not there, right? I want to see how it works.
Yeah.
So my test was between 11:30 a.m. and I think it was 4:45, because then I have to head to do the school run. But I can show you. And it was really, really mixed. So just trying to get my screen across now, if you want to whack that up. And so I just picked the 3 first auto chartist ones, and I picked the first few PIA first ones. And this is between 11:30 and around 4:45. And as you can see there, it was really mixed. I didn't really change the defaults. I just went with the prices that it churned out. You know, when you hit copy trade or
Yeah.
And so it was really mixed.
Really mixed bag. Yeah. Okay.
You've tried it, right? What did you think?
I probably wouldn't. I found it about 50-50. But I tried it for an entire day. I applied
The intraday one. Yeah.
on the intraday one. So if anyone's forgetting what we're talking about, it was when we were talking about the signals. If we just quickly show it.
You whack up Tom W's screen, guys.
We showed this on Tuesday, which is this signals feature. Now, yeah, when I tested it where I did all the signals for a day, I found it about 50-50. So I think it's an interesting tool to take a look at. But yeah, it's interesting that you did a back test. But yeah, you don't know how. It's good to test to see how good you think it is, really.
Paxos coming on saying the IG PRT charting has a great back testing function, as well as a walk forward test, far better than TradingView. So
okay.
Thumbs up, thanks there.
PRT being pro real time, yeah.
Yeah, which you can find as well via IG. Nana Fletcher saying, hey guys, enjoying the show. It's great that you can trade IG via TradingView, but Nana was told it only works for CFDs and not spread betting. Is that correct?
I don't know, but I can find out.
Find out for you, Nana. And away from the numbers, saying thank you very much, Tom W.
Honestly, again, no problem.
And also wearing that brand new shirt.
Okay, enough about.
On that note, everyone, TradingView, we have to bid the wonderful Tom W goodbye. But he is going to do us proud on the bowling alley, right?
I really am. I'm gonna train for the rest of the day.
Andrew McKilvey is like already messaging here, going, "Go on, Ange, get him to do that back test." So I will draw out for you.
I'm gonna need a diagram. Yeah.
I'm going to do a diagram. I love diagrams. Exactly which point you have to hit.
Got it.
You like geometry, right?
I'm agreeing with you. I'm saying yes, please.
And we'll let you know what happens when Tom W is back with us next week. Of course, everyone's saying congratulations on the move.
Thanks a lot.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Trading the news is an essential skill for all traders. Major news announcements can often cause large price movements, particularly in Forex markets. So, here are 5 key pointers to help you try and make the most of those moves. 1. Do your research. Know the times and dates of important events. Use an economic calendar, for example, the one on IG.com. It's a vital tool to help you plan ahead. There are many announcements on any given day, and it's essential you know which will affect the assets you're trading. For a Forex trader, generally any event impacting the US dollar is important. Events like non-farm payrolls, Federal Reserve minutes, and GDP. If trading shares, look out for company earnings, dividend payments, and stock splits. 2. Check what the market expectations are for the event. Look at a chart of what happened last time. How did the market react? Was the data better or worse than expected? Did earnings beat or miss estimates? Use what happened in the past to inform your future trades. 3. Study related news and events. What else could impact the market in the wake of the announcement? Take crude oil as an example. US inventories are due on Wednesday. If there's an oversupply, the price should drop. But say OPEC ministers are meeting Thursday. If they reduce output, the price could rise. So, it's essential to look at the overall picture and not take each event in isolation. 4. Put a strategy in place. Know what levels you want to buy or sell at, and where to put your stop losses. This will help you to have the courage of your convictions and avoid knee-jerk reactions. And finally 5, learn when to fade the news. Here's an example. The CEO of Company X announces he's leaving. The stock falls, but you believe the company's fundamentals are still sound, and the market is overreacting. So you hold your position. If you're right, and the price rises, you could profit. Of course, if you're wrong, and the price continues to drop, you'd make a loss. Remember, these are all just guidelines. While trading the news can be exciting, it is also risky. Unexpected results can lead to high volatility in the market. So, make sure you're well prepared, and always have a solid trading plan.
Welcome back, everybody. So as promised, we have Mr. Aaron Bright joining us from home, about to leave for Brazil and Argentina. Oh, I could not be more jealous.
Yeah, I'm really looking forward. I'll bring you back some Malbec, Rich. Don't worry.
Some Malbec, some empanadas, please. Yeah. No.
I'm gonna buy a new suitcase and pack it all for you.
Oh, geez. Well, so Aaron and I had a good discussion on macroeconomics last night, on geopolitics. We're going to continue into that today. But first of all, let's just have a quick look at where we were last night. Should be able to see that on screen. This was Aaron and I enjoying our evening. Oh dear, it doesn't look like we can get that. So maybe if I take this over here, technical issues. There we go. Now can we get that up on screen? There we go. So that was Aaron and I last night in Wall Street Wednesdays, and that was about 6 p.m. And then this was a little bit later. Yeah, that's as he's toasting his holiday. So Aaron, how was the drive home? No, I'm only joking. That was yeah, we popped that into Aaron's hand just for the picture.
No, it's good. It's an interesting bar that where there's a stock market crashes and then you can get cheap drinks. And then we were trying to see if we could move the market because supply and demand plays a role in the prices. So that was good fun.
That's right. And then the food also went on discount, but it still wasn't discount enough for us, was it? We decided to go off to Five Guys instead, and 5 of us ended up having the Five Guys. That was that did the job actually.
Yeah, that always does at Five Guys.
Better than chicken tenders that was in the discount. Right, where do we start, Aaron? I mean, it's we're coming into year end. I'm guessing you're making the sort of decisions now in the smart portfolios that you and Martin Harris look after. What kind of considerations do you take into year end and going into 2025?
Yeah, a good question. I mean, we tend to sort of, when we manage the portfolios, we look at them on sort of a very long-term basis, but we do make some tactical tweaks. So we recently made some tweaks in November, beginning of November time. So we're quite happy with how we're positioned. We trimmed a little bit our long-dated fixed income to essentially, we felt that sort of the inflation dynamics were picking up a little bit too much again. So we decided to trim that sort of long end, added a little bit of small caps in our equity sleeve to have a bit more diversification away from the Magnificent Seven, and we added some REITs pretty much based on the fact, well, we're getting more diversification with them, and if interest rates do come down as they're forecast to do so, we expect REITs to be an asset class which should perform well. So end of the year, it's always just a case of making sure everything's in order, and I guess we're closely tracking our performance, which we're quite happy with. So from our sort of balance to aggressive, we're looking at around 7 to 12%, and all above our sort of benchmark, which we're very happy with.
Very nice. And that's just to clarify, when you say move into small caps, that's US small caps, not UK 250 or
so
anything,
it's actually a world small cap index, but it is predominantly US, Japanese, I believe. There'll probably be a little bit of UK exposure, but yeah, the majority of exposure we're getting is going to be US, I would imagine.
MSCI World Small Cap.
Yeah,
that sound about right. So let's have a look at the chart there. Oh, and that's not going to be on this page, is it? Yeah, we got new monitors in this studio, and we're having a lot of fun getting the whole technical. Fred is going to be choking into his wine over in in France. Let me see if I can get that. We'll give it one more go. Yeah, that should work. And now, no, it's we're going to struggle there. So let's see if I do this. There we go. Right, that's good. That's staying there now. So there we go. That is the last few months. Let's look at a daily chart of, wow, what a performer the world small cap is.
Yeah, it's done well pretty much since for the past few months, and really I think on the back of Trump's win and the fact that it might be a deregulated environment, a good environment for M&A as well. When I had Anthony Ginsberg on our podcast, he's a sort of tech specialist, US equity investor specialist, and he was very, very bullish about sort of the small cap and I guess the M&A activity that we saw that we should see essentially coming out of the USA because of Trump's deregulation policy. So he was quite interested on that, particularly on the tech side as well.
Right, so that's up about 10% since October, and then of course you see that big gap higher on the open on the night of the election result. Great. Okay, MSCI World Small Cap. I like that. I want to see what is in that. I'll get that in a second. You can tell that I'm thinking about putting that into the McDonald pension the way that I'm furiously tapping to get the.
Yeah, I mean, I think with this type of index, it's also important to note that you obviously get the downside volatility as well, because you look at the top tens there, and okay, some of them are known, Interactive Brokers, Carvana, but you're going to get names which are kind of unfamiliar with many people, and
Sure.
with smaller companies, you do tend to get more volatility, on occasion. Yeah. So it's really, really important to be aware if you're putting this in a portfolio that but it can be volatile. Yeah,
can be volatile, but certainly diversified at the same time, because top 10 constituents doesn't really tell us anything, because that's only 2% of the total. So each name is, well, it looks like an average of sort of 20 basis points. So we're talking of at least 500 names in there. Yeah, that's really interesting. I'm going to take a look at that. First time I've ever heard of it.
4,034 names.
4,000 companies. Yeah. Wow, that's incredible. Right, gonna have good look at that one. But the outlook for next year. I know sometimes our outlooks differ a little bit, Aaron, but what are you thinking? Look at the sun already glistening on his face there. He thinks he's on holiday already. Is that some kind of extra feature you've got on your background, or is that
it's just that I'm right by my window, so the sun's just broken through the clouds, I think.
It is quite a nice day outside, not in a small 4 meter by 4 meter studio painted green walls. Let's talk about inflation. We're just starting to get bond yields come off again after we saw that march higher. Shall we have a look at those? Let me get those up now. God, this is great seeing these new systems. CNBC bonds, there we go. Right, so 4.26. We're actually close to going into an inversion again, which I hadn't noticed until yesterday. Yeah, so 10-year at 426. 10-year at 426, the 2-year at 423. What do we think, Aaron?
Well, it's a really interesting dynamic. We obviously saw a bear steepening sort of kind of this time last year, and then we saw the disinversion. And then I remember speaking to you probably a couple of months ago where we saw rates beginning to ease in the United States, and we still saw the long end of the curve react kind of negatively a little bit. So I think there's this sort of lingering concern of inflation, and the bond market is a very good, indicator, I guess you could say, at these sort of things. A bit of a canary in the coal mine. It sort of speaks quite clearly and says, well, we're a bit concerned about the future, about the inflation. I think what the consensus seems to be is that we might be, particularly in the United States, at a 3.5% is going to be the normal inflation figure. So we might have to adjust to that.
3.5% on CPI.
Mm-hmm. Yeah, that way it might sort of creep up around that, particularly with Trump's new policies, even though we're at that sort of 2.5 mark now. So I think that's what the market is a little bit concerned about, is that could be the new normal.
As it should be, because what would real interest rates be? You'd have to have positive real interest rates. So then exactly where that 10-year is probably about right then. If inflation can't be sustainably below 3%, that's a real concern, especially for the indebted companies, obviously, but also for households as well.
Definitely. Yeah, absolutely. And what that means for interest rates coming down, is that going to alter the path? I mean, I think I've also spoken to you about this before, about how the sort of swaps market and I guess how people price in rate cuts that tend to be very optimistic about the future. And even towards the end of 2022, there were massive cuts were being priced in 2023, and we didn't get a cut for another 18 months after the initial one was priced in.
Yeah.
So we can be the market participants can be a little bit exuberant when it comes to this sort of thing.
Breaking news: the interest on net debt in the US has just gone above $1 trillion for the first time ever. Happy Thanksgiving, everybody. In the US, you're now paying $1 trillion a year on your debt. Does that, Aaron Bright, start to impact confidence in the dollar at any time? Does it start to get the bond vigilantes interested and certainly, you know, raising their eyebrows?
Oh yeah, absolutely. Because you know, what it's going to say to me, you know, if we see rising debt, is that we're going to have to see more borrowing, and it's just going to be a bit of a downward spiral. I guess the caveat to that would be that we've got a U.S. Treasury nomination, a Secretary of the Treasury nomination, who is arguably quite prudent, I guess. Yeah,
Jinx.
and and you know, he's touted to be an individual who wants to keep, I guess, tariffs from being extraordinarily high, or, you know, national debt in the US becoming unsustainable. So that, I guess, is the caveat. Yes, we have a high figure, but is it going to be changed? And potentially it will be under this sort of new guidance and new administration.
So just for anybody who has missed that news, Scott Bessent, of course, the famous hedge fund manager across there, tremendously successful with Soros. Of course, he was part of that 1992 team that bet against the British pound and somewhat broke the British pound in that 1992. Soros making, God, how much was it they made, Aaron?
$1 billion, I think.
Was it? Yeah, over $1 billion. Wow, back in those days as well. Probably about the time you were born, Aaron. Is that right?
Not for another 6 years.
98, so 98 birth.
Yeah.
My goodness. I was at university then. That doesn't make me feel old at all. Right. So yeah, Bessent certainly is probably the most positive thing that I've seen come out of this Trump presidency. It's the first thing that's given me some hope that, you know, it's just going to be a blank checkbook being given.
Yeah, absolutely. And I think also investors will probably take, I mean, regardless of what you think of Elon Musk and his approach, I think investors and people who are cautious about US government spending will be, I guess, pleasantly surprised about this Doge committee, the Department of Government Efficiency. And, you know, it's an interesting approach, quite unconventional. But if that keeps US spending under wraps and stops the national debt growing and improves efficiency, then yeah, there can be some positives, you know, regarding the US economy in general.
I wonder what the kind of defining moment will be, because there's always something within the first 100 days of a presidency. Will Bessent stand up to Trump, right? Because Trump's obviously going to try and do what he strongly believes in, which is low taxes, but he's not going to want to cut spending, is he? So do things, we know in the past that anybody that's told him no or tried to talk him out of his policies hasn't lasted and hasn't stayed around long. Does Bessent's track record allow him to actually guide Trump to change his mind, or at least
I think to an extent, yes, because he's got such a good record in investing and will understand global macro on a level more than Trump. So I think there's definitely that. And Trump, I think, knows he's got a team of experts, and I think we'll listen to him. But it's just whether he wants to, you know, make it his way or the highway. It's a case of time will tell. We haven't had the administration sworn in yet, so it's difficult to speculate on these things. But I think probably in the first 6 months or so, when policies start getting taken to Congress or executive orders get signed, then I think we'll have an idea and things will start coming out.
Well, let's have a look at the CME Group's FedWatch tool. So we obviously know that in December, we've got a 68% chance of a rate cut. But let's go further out. Let's look at January. So we are 60% chance we'll see one rate cut between now and the 29th of January. So that's very much favourite. So either they skip December or they skip January. But then we go out to March, so 425 to 4.5. Then it's a bit more balanced. So the market looks like it's expecting a skip and cut, and a skip and a cut. So every other meeting, in other words. You know, does that well? Let's look at June next year. Then by June we're looking, still 4 to 4.25.
Mm-hmm.
So it's really come in, hasn't it? These this whole dovish rhetoric has largely disappeared now.
It has, and I think it's been a big factor on how the inflation figures have come out, how the data has been strong on the whole coming out of the US, and I just think we're in a situation where the Fed are going to be incredibly data dependent. Powell doesn't want to make the mistakes of Volcker. That's what I think we've said, and have this double whammy of inflation. So I think they are trying to be prudent, and I think the market is now beginning to price in some degree of sense.
I wonder if there'll be any more questions around the sustainability of his position as head of the Fed, because he was very clear and very quick to say even if Trump asks him to go, he will say no.
Yeah. I mean, they don't have the best of relationships, so it's going to be interesting to see how that dynamic unfolds.
Yeah. I wonder what Besant's relationship with Powell's like. Actually, I hadn't even considered that, but that's maybe worth a quick chat GPT later on to see if the two, if their paths have ever crossed. I would assume they have at some point.
Yeah. I mean, Powell used to work in banking, so I'm sure that they know of each other.
Definitely. Good. Right. So just run us through the itinerary for your next week.
So flying to Buenos Aires on tomorrow evening, there for a few days, lots of steak, then going to Iguazu Falls for a few days, and then I think Rio for about 5 or 6 days. So lots of relaxing and beaches and a lot of fun, hopefully.
That's great. Yeah, well, it's a real shame that all those flights are getting cancelled to South America tonight on the back of the weather. But safe travels, Aaron Bright. We're very jealous. Yeah, bring us back. Send us some good pictures and we'll update everybody next week. But yeah, have a fantastic time. It is truly 2 or 3 of the best places in the world you go in there.
Brilliant. Thank you.
Good stuff. See you all after the break for Market Measures.
Corporate earnings reports are quarterly reports that reveal the financial results of a public company. They include valuable information such as revenue, net income, and earnings per share. Investors can use corporate earnings reports to gain insight into a public company's performance. They help investors decide whether it's time to buy, sell, or hold on to shares. So, how do corporate earnings reports impact trading? 1. They affect market indices because indices are made up of publicly traded stocks. Index values go up or down based on stock price movements tied to company earnings news. 2. Corporate earnings reports can signal a healthy or unhealthy economy. They could influence central bank decisions on interest rates and monetary policy. 3. Unexpectedly positive or negative reports have the potential to induce volatility in the stock's price and prompt activity in the market. 4. This surge of trading activity could result in more liquidity. It becomes easier to enter and exit trades when there are more active buyers and sellers. However, increased volume can also introduce greater unpredictability and price swings. 5. Positive reports can bring in foreign investment to a country's market. Negative reports could make foreign investors less interested and reduce their involvement. 6. An earnings report has the power to sway how investors feel about a company or the market in general. How an earnings report impacts the price of a stock depends greatly on what investors expected. If earnings exceed estimates, the price tends to go up. If earnings disappoint, the price often drops. Meeting expectations is key. Even good news might sink a stock if investors hoped for better news. Likewise, a stock could jump if bad news wasn't as bad as predicted. So, how do you trade corporate earnings news? The challenge is to work out how you might react to news that will thrill or disappoint investors. Have an action plan in place for earnings that exceed expectations, or earnings that might disappoint. There is also a chance that the earnings might be exactly what the market expected, and there won't be much price movement at all. Keep in mind that the market can be unpredictable, and these changes can happen in a flash. Option strategies can allow traders to trade big price swings in either direction. Strategies involve buying both call and put options on a stock prior to the report. Call options can protect short positions from rising prices, while put options can protect long positions from falling prices. Finally, it's essential to have risk management practices in place, such as an airtight trading strategy, stop-loss orders, and portfolio diversification. Consider bird's-eye view factors like industry trends, the health of the economy, volatility, revenue growth, and trader sentiment. With preparation, agility, and risk management, you're on your way to trading corporate earnings news effectively.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Hey trader friends, welcome to Market Measures, where we take you through all the maths, all the back testing from Sahil, all the way in Chicago at Tasty Trade, and tell you what it translates into when you see it on those flashing lights on the Tasty platform.
Right, so today we're looking at the probability of expiring in the money, right? Probability of your position expiring in the money. So in options trading, the difference between in the money and out of the money is a matter of the strike price's position relative to the market value of the underlying stock. So of course, when it's out of the money, it's got extrinsic value. And when it's in the money, it's got intrinsic value. For short options, right, so when you're shorting options, then profitability is obtained when the option is out of the money, because out of the money options expire worthless. The probability of going in the money can be calculated based on the short options delta, right? So the delta is your friend when looking at the probability of the option finishing in the money or out of the money. The higher the short strike delta, the greater the chance of it going in the money. The probability of expiring, so that's a new one we haven't spoken about before. The POE, probability of expiring, is a vital element to trade options. This is because trades are entered and managed based on the probabilities. But the options POE constantly changes throughout the option cycle. What determines the probability of expiring? Right? What determines the probability? What goes into the calculation? Well, it's based on the formula of POE. There are three key factors: the stock price, the number of days till expiration, and the implied volatility. So how do these impact the probability of expiring in the money? Now, a change in the days to expiration has a greater effect on changing the POE when IV is lower, right? So when you've got IV low, which is in the case of a lot of options at the moment, then a number of change in days does really matter. However, the change is much smaller when IV is high in percentage terms, because volatility is a much bigger component of the value of that options. And we can see there the difference in when the stock's at 100 and in a low vol environment and the expiry price is 105, you can see there's an 18% chance of it finishing in the money at 45 days out, and only at 5 days out, only 0.3. Now, in a high vol environment, it's much bigger. It's double in the terms of 45 days. And look at the difference in that 5 days to expiry, 17% chance, because obviously things are so volatile that a 5% move in the underlying stock isn't as unimaginable. Now, change in volatility has less of an effect when there's more days to expiration compared to when there's less days to expiration in percentage terms. So you can see there on an IV of 15%, then at 45 days to expiry, it's an 18% chance. And if the IV is 45%, then it's double 45 days out. So yeah, change in volatility has less an effect when there's more days to expiration. But when you've only got 5 days, of course, intuitively, the difference in a high vol environment, basically what it's saying is in a low vol environment, even with 5 days left, there's just hardly any chance at all of such a big move. But in high vol environment, there is a decent chance. Now, Ange, do you want to take us through this?
Yeah, this makes sense, right? I guess this is why all the Tasty Nation people talk so much about IV rank and, you know, volatility. What's the volatility, mate? You always hear them, you know, shout out cross and, hey, shout out the volatility for me. A change in time has the greatest impact on the probabilities when IV is low and the stock price is low in percentage terms. So you have this comparison that Sahil has made for us very handily so that you can print it out and look at it at your leisure.
Everything on one screen there, isn't it?
Yeah. I often wonder what it's like going out for a date with Sahil. That's quite something. You need to be really awake for it. So 15% IV, right? Target price all remains the same. The lower price, 100 bucks, 45 DTE is 18%, and 5 days to expiry is 0.3%. Whereas a higher price, 101 bucks, you can see that the 45 DTE is much higher than the 5 DTE. Conversely, when you look at the 45% IV, same target price yet again, but with the lower price of 100 bucks, we have 45 DTE at 35% compared to 17% when you compare it to 5 DTE. Whereas the higher price, 101 bucks, you have 38% on the 45 DTE side and 22% when compared with the 5 DTE.
Definitely. So I guess, you know, very much in summary there, that the time element has much bigger impact on low IV rather than high IV. So, right, takeaways. Moneyness.
Yes, describes the intrinsic value of an options premium in the market. The probability, guys, of expiring in the money numbers are dynamic and are constantly impacted by stock price, implied volatility, and days to expiration. So in short, it's always changing. You need to keep an eye on these factors. And understanding the relationship of these key factors will help us identify better opportunities when it comes to entering and exiting, so managing your positions.
Fantastic. Right, that's today's market measure. Thank you very much, Sahil. I hope you're enjoying your holiday.
Probably eating turkey, like there's no tomorrow.
No, he's on holiday.
Oh, really?
Yeah.
Where is he?
Yeah, I'm not sure exactly where. I would imagine the Bahamas.
Nice.
I'd imagine he's laying back, sipping those margaritas somewhere.
I can see him in a big flotation device, actually, sipping the margarita.
One of the nicest guys that I have spoken to, either IG or Tasty. He's just such a gent, isn't he? Absolute gent. And does all this work for us as well. So much appreciated, Sahil. Enjoy your holiday.
See you when you get back, Sahil.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Trading the news is an essential skill for all traders. Major news announcements can often cause large price movements, particularly in Forex markets. So, here are 5 key pointers to help you try and make the most of those moves. 1. Do your research. Know the times and dates of important events. Use an economic calendar, for example, the one on IG.com. It's a vital tool to help you plan ahead. There are many announcements on any given day, and it's essential you know which will affect the assets you're trading. For a Forex trader, generally any event impacting the US dollar is important. Events like non-farm payrolls, Federal Reserve minutes, and GDP. If trading shares, look out for company earnings, dividend payments, and stock splits. 2. Check what the market expectations are for the event. Look at a chart of what happened last time. How did the market react? Was the data better or worse than expected? Did earnings beat or miss estimates? Use what happened in the past to inform your future trades. 3. Study related news and events. What else could impact the market in the wake of the announcement? Take crude oil as an example. US inventories are due on Wednesday. If there's an oversupply, the price should drop. But say OPEC ministers are meeting Thursday. If they reduce output, the price could rise. So, it's essential to look at the overall picture and not take each event in isolation. 4. Put a strategy in place. Know what levels you want to buy or sell at, and where to put your stop losses. This will help you to have the courage of your convictions and avoid knee-jerk reactions. And finally 5, learn when to fade the news. Here's an example. The CEO of Company X announces he's leaving. The stock falls, but you believe the company's fundamentals are still sound and the market is overreacting. So you hold your position. If you're right and the price rises, you could profit. Of course, if you're wrong and the price continues to drop, you'd make a loss. Remember, these are all just guidelines. While trading the news can be exciting, it is also risky. Unexpected results can lead to high volatility in the market. So, make sure you're well prepared, and always have a solid trading plan.
Hey, 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 welcome to Trade Live with IG with the wonderful Rich McDonald and Angeline Ong, where we help our clients get the best out of the platform. Speaking of which, I hope many of you are starting to wind down for the weekend, and some of us are counting down to Thanksgiving.
Do we know somebody who's winding down already?
Producer Fred is probably, you know, with his
Oh, what's that? What's that on screen? Who's put that up? You can't put up pictures of producer Fred.
Are you sure he's going to be cross with us? And you went, he's on holiday. He can't say anything. There he is in all his glory, having a well-deserved break, right?
A very well-deserved break. And we can see because he's telling us he is enjoying his break with the picture from his lunch yesterday. How good does that look?
Oh, my goodness me. What's in the glass? What's in the
Everything
glass?
there.
Do we know?
Oh, he told me what's in the glass. He doesn't normally drink Chablis, but the location where he was especially good, and it was a Joseph Druhan 2022.
Nice.
Because Maison Joseph Druhan knows how to make great stuff.
And I get that because he just recently went to this wine fair / convention, and I was interested in his buying style. Just like in a stock picking, I was interested in his buying style.
Absolutely.
And he always buys from just this small little village, this small little region. And he knows about all the terroir and, you know, why, you know, clay sands give you this impact on the wine and everything. So I was like, oh, taking notes, going, oh, I'm going to try these wines. But yes, he's having a well-deserved break. We call it his sabbatical, don't we?
Yeah, 5 days.
Don't forget about
days
Fred. Yeah.
sabbatical.
Bring some of that wine back, Fred.
Now, of course, we don't have all sessions, but we do have a very lively European and UK market. Pete Ward had the breaking story on Ocado this morning. That's now down 2%, with Aviva down 2.5% after that direct line bid. And then in the ignore the Imperial brands because that is ex-dividend there. On the upside, we've got for Expo up 5.8%. I do know somebody in our WhatsApp group that was in buying that yesterday, so that was a great shout there. No, it wasn't. No, that's not the WhatsApp group. That's the comments group. JD Sports strong, up 104, recovering from a 93 pence low last week. So a nice 11% rally for JD Sports over the week after their warning, essentially, the week before. Sainsbury's up 2.6 on the back of a double upgrade from JP Morgan. Tesco up 2% on back of the same. Kingfisher recovering. EasyJet recovering. EasyJet had a very bizarre day yesterday. Let's go for an intraday of EasyJet because it opened at 560. Let's go down to a 15-minute chart. Yeah, it opened up at 560 and it closed down around the 530 level. So something, they clearly didn't like the call at 9:30 yesterday in EasyJet, but it is recovering again today. So I would imagine some positive talk there from analysts.
I'm sure Pega will be extremely pleased as well that there's some recovery. She holds EasyJet, doesn't she?
She does. She holds EasyJet and Kingfisher.
Yeah. Your portfolio. Interesting to also note, because I like trading retailers, that they're all slightly higher.
Retailers.
Yeah, you had it on your screen earlier. So the Tesco's, how is Sainsbury's doing?
So there's our UK retail there.
Because I think that they will probably have a bit of upside, but as we get the numbers from the Christmas season and also the
Black Friday.
Black Friday, we're going to see meh numbers coming through, and it'll show that people are buying, but they're buying sort of lower down the scale, suppressed. I don't know. Did you hit the shops last weekend? Like
it was absolutely rammed. It was incredible. I've never seen Westfield so busy.
Ram because people were just out eating and not buying very much, or ram because everyone was like buying stuff.
Buying stuff, yeah. It was incredible. I couldn't believe it. I was put interest rates back up. I was shouting at the shoppers as the German girlfriend got very aggrieved at getting bashed on the way past as we were trying to go through the crowd.
You were protecting her, weren't you?
Now, Neil Cavendish talking about Mobico, which I do not know much about, I must admit. So there's a 15-minute chart looking up 4% today. And on the daily, there we go. That's quite an interesting chart. So that's over the long time period, but this is recently. I would think you would like that, wouldn't you, Ange? From an analysis point of view.
Yeah, it's got a good, upward. Is that the daily chart?
That is, yep. That's the from April this year.
And if you zoom in slightly, we are seeing, an uptrend there, and we're seeing higher highs. It did try and retest around that. It did try to break low, but failed around that. Is it November? If you go further that side. But it then managed to bounce back upwards. So I would say, yes, that's looking like an upward momentum chart.
Right, now we know what it is. Sorry, this is the former artist known as National Express. So thank you for that, away from the numbers. Now I understand. One of my best trades of COVID.
Nice.
Because this thing traded down to, well, you can see here. So let's focus in on 2020. Down here at £1, the CFO went into one of the banks, and he was talking about, look, our share price has just fallen from £4.50 to £1. COVID lockdowns, obviously nobody were using buses, right? And there was a chance this thing, obviously it was hemorrhaging cash because there was no revenues. But if at that point National Express had gone out of business, right? And the UK obviously is going to need, there's going to be a hole in the market where National Express had gone. The CFO said, we could sell all our buses now for more than our market cap. So there is no way that we are only worth £1. It just doesn't make sense. And I think at one point his stepdaughter was even buying stock, putting all her savings into that, and it bounced. And so I definitely picked some up. Was a big fan of this stock as it went from 105 to 150 in about 3 weeks.
What's also really clever, and I think I remember watching this with great interest, around August 2024, did it have a bit of a bounce there? So August 2024.
21st of August.
Yeah, because it also did something very smart there, and I was just coming back from the US. I say that as I touch my eyes because it was a really tiring trip. But I read this with great interest because they sold off their North American buses. You know those yellow buses?
Right. Oh, the school buses.
Yeah, to sell off to lower their debt pile. And I think they did that at a really good time. They, as a result, they have a very low debt burden, and they also sold at the right point. I had no idea this company was based in Birmingham, though. Like, if I had to pick a place, I wouldn't have picked Birmingham. I don't know why.
Well, it's the centre of the country, after all. Good stuff. So, Mark Carberry saying, just before we finish, absolutely have a wonderful Thanksgiving, all you tasty viewers across on the other side of the pond there. Enjoy your turkey, enjoy your Thanksgiving, everybody in the UK. Now, tomorrow is going to be a relatively quiet day, so anybody, please hit us up at ask@ig.com.
Or comments if you want us to look at any of your specific trades. Also, I will probably be needing your emails because I won't be able to celebrate tonight because I have to be awake early tomorrow with Rich. So my Thanksgiving is going to be on Sunday. So do.
But if you're having Thanksgiving, please send us in pictures.
Yes.
So tomorrow we do want to feature some pictures from you. Andrew McKelvey, you got to send us in a picture. Monkey Man, I dare you. I double dare you. Some people think that you work at this company. Some people think that you are the mysterious, unknown.
Isn't that a man, international man of mystery, or woman?
International man of mystery, that's the word I'm looking for.
Or woman.
Or woman. Monkey Man, that would definitely
It's
be.
double N.
Ah, right. So yeah, please, all of you, send us any pictures you want and are happy to feature, because we've put up producer Fred. He's not going to be happy with that. So yeah, tomorrow, help us out and send us in your pictures there. I'm off to the ETF Awards tonight, so you're going to see me potentially hungover tomorrow morning. So treat me with sensitivity.
Kid gloves. I'll bring out the kid gloves
tomorrow.
Yeah, we'll be gentle.
Thank you very much, Adam Deleuze. Thank you away from the numbers, Neil Cavendish. Thank you all, and we'll see you.
One quick thing for one of our viewers: gold. Just showing you the golden lines, people. We are up money now on my trade, which is a short-term long, because we have passed that 2627 level, and I've put a 2646 perforated yellow line, because if we pass that, we will enter another leg with a target to 2663. There you go. Happy Thanksgiving, and he's gone. He's gone already. See you later.
A very good morning to you all. How are you? Wednesday, 28th of November. Welcome to the show. Ronnie, fresh back from holiday.
Thank you very much, sir. I think it's the 27th today. Isn't it?
27th, I was thinking in my head when I said that. Is that right? 27th, I'm jumping ahead. How are you?
I'm good. Back from holiday, and there's no better way to come back than be here with my Scottish brother.
This is your first day back?
First day back.
Oh, fantastic.
Like right into the deep end.
So you've got no idea what's going on in the markets at all?
Absolutely none at all.
This was perfect. You see, this is what
freestyle.
happens. Fred goes away on holiday and he goes, I'll get the bloke who's just been on holiday to come in and join Rich. Mate, very, very good to see you.
Likewise.
Where were you on holiday?
I was in Boston. I was in Boston with my mate from Sweden.
The Boston?
The Boston,
Ah.
in Massachusetts, not in the UK.
Yeah.
It was really nice, actually. I went for a Freedom Trail tour, saw the Harvard campus, and it made me feel really bad because all the kids there were super young. They were like 16. And they were going to the best uni in the world, and I was just there on holiday.
Yeah.
But it was proper nice. It was a nice city.
So we did the same in Dublin, actually, with Trinity University.
Right.
And it's, you know, half the people there are tourists, but it must get quite annoying for the students. Just...
Yeah, I can imagine, like having people going around on tours and everything. I would just tell them to piss off, but better people than me.
And now, how is Boston? I've never been.
It was very nice. It has this sort of like big city feeling still. But it's not as busy as New York or similar.
Yeah.
So it had a nice little mix between, you know, the high rises and the hippie vibes, which I really enjoyed. So I highly recommend it to anyone out there to go visit Boston for sure.
And I have this feeling that just the sort of the pubs and the bars will be really, you know, good vibe and
Very much
happy
so.
people, chatty people.
Yeah, it was a lot of talks. Me and my friend, we sort of, after 4 days there, we realized that they talk a lot, but they say nothing. So
You must have fitted in perfectly.
we'd sit on the tube. We'd sit on the tube and just listen to what people say. We're like, we have no idea what they're talking about. They're just talking, but it doesn't make sense. But it was really good. The public transport was really nice. Fun fact: they took their logo from the Stockholm tube.
Really?
Yeah.
Look at that. I hope you told people that.
Trendsetters.
Yeah.
That's what we are.
And remind us, give us a good morning. How are you in Swedish?
God morgon, hur mår ni? Välkomna till IG Live.
Look at that. We're going international. So how are you all out there this morning? I see already we have the Monkey Man on the chat. We have also Rui and Carl. Very good morning to you. Do you know who we haven't seen Naked Johnny for a while? I'm going to have to see how our Finnish friend is doing. But lots to go through. It's been, obviously, the US compacts everything into 3 days. Yep. Right? Because the market's open on Friday, but nobody really comes in and works. So, yeah, we saw quite a few results last night. We'll go through those. And we've also had a fundraising for... after March. So we got to talk about that. We got numbers from EasyJet. But just a quick idea of what's coming up on the show. So today's a great one because we've got Tom Lehane, who is the head of compliance. And we're going to go through all the procedures that the company has in place on
compliance, risk departments, all of this. I'm wondering how they're getting away with it.
So it partly due to COVID, because he was doing it from home.
Right.
So I would imagine, you know, obviously the bank had to scramble to get new policies in place for people working at home, because traders had never worked at home. Yeah, I think that's when it probably started. But it was a whole web of lies. He got junior traders involved. He kind of, you know, talked them into helping him unwittingly. And it's just, yeah, it's crazy. But yeah, you mentioned Nick Leeson, the
Nick
role
Leeson,
trader.
that's his name.
Now, but back in then, he's part of the reason why there are so many checks and queries now. You would never think that in 2020 a bank would get away with this.
Is that why you're no longer at Credit Suisse, Macquarie, no longer trading? You're a rogue trader, Rich?
Yeah, no, I must admit that is Credit Suisse had one. Macquarie have now had one. But I think the funniest story of all, my very first compliance officer in 2001. So I started at Credit Suisse and work experience in 2001. You obviously meet a compliance person and they take you through all the do's and don'ts, but they know you're on work experience, so you're not going to be trading, you're not going to be doing anything like that. So it's quite a light touch. A year and a half later, my compliance officer was called Asif Butt. A year and a half later, he got arrested for insider trading and he got jailed. It's like a compliance officer, you know. So, you know, these things happen, but it does tie in with our theme today of when you get yourself into trouble, you can make terrible decisions. And really, you know, it's such a drain on your emotions. And I can't imagine what Travis would have gone through for the 2 years. And since as well, I noticed they haven't fined him personally. He was going to be fined £72,000, but it says, you know, due to financial hardship, then they haven't gone ahead with that. So yeah, but, you know, poor guy. But you know, mistakes in trading, everybody makes mistakes, right? Well, on the Tom tour. Tom Sosnoff's tour in London, I made a couple of mistakes and I bought instead of selling. I mean, that is literally...
I've been there, unfortunately, too many times.
Yeah, and it is, but it's human nature, unfortunately, that we do make mistakes. But as soon as you do make a mistake, you never, ever trade a mistake. As soon as you make a mistake in your own trading and at home, you just have to take the loss.
Yeah, correct.
And you have to get out of it, because being in a position that you didn't mean to put on in the first place, especially if it's the opposite way round to what you meant, you can't run that.
No, definitely not. That's what we do. We say, if you make a mistake, you're going to make a mistake. Everyone's human. Sort it right away. There's no point. Yeah, hands up. Yeah.
And I had to do it in front of 300 people. And to Tom Sosnoff as well.
Oh, wow.
So it's Tom, sorry, I've bought instead of selling. Let me just get out of it. So, and yeah, it's, you know, it's never as bad as you feel either. Right, shall we go into what happened overnight?
Let's dive in.
So Dell down 11%. Q3 revenues missed consensus, suggesting the long-awaited recovery of personal computers market is stalling. HPE down 5% in sympathy as well.
I mean, personal computers, they're not really something you buy every day, right? I mean, we have Dell computers. We have to be...
Well, that's why we should have been short.
Exactly.
They're terrible.
They are.
Absolutely.
The battery life is about 20 minutes when it's not plugged in.
That's it.
And then you see as well, you know, the personal computer segment, it's not growing nearly at the rate of mobile devices, because everything you can do on a computer almost nowadays, it can be done via your phone. Yeah. So consumers are, you know, shifting more to mobile, so are every software service or anything similar. So the fact that they're not growing is not surprising at all. And, you know, the personal computer space in general, as you see, HP is doing poorly as well. So it's continuing to go downwards. And I don't see it picking up anytime soon.
Elsewhere, Abercrombie had numbers yesterday. I managed to get away. You won't know because you've been off there, Ronnie. But I had one of Sosnoff's favourite things, of course, is to trade the wings.
Right.
You know, he'll sell a strangle 16 delta. So I was short the strangle on, short the puts on Abercrombie and short the strangle on CrowdStrike. So CrowdStrike also had numbers yesterday.
How did that work out for you?
And I think it's worked out so far.
Like it. From the P&L, it looks
so
like
good.
it.
Let's have a look at those positions there. So CrowdStrike, I have got, excuse me, short the 300 puts and short the 440 calls. So short the 300 puts, short the 440 calls. There we go in CrowdStrike. And that one was only down about 5% yesterday. So that'll trade around the 340 to 345, I think. So that's relatively safe. And of course, the vol gets crushed. Yeah. And then Abercrombie, we're short those 120s and it closed at 146, albeit down $7 or nearly $8. But the vol got crushed in that yesterday as well. So that was a nice little 280 to go into the fund for the next time I make a big loss from a trading mistake.
I quite like Abercrombie as a company. They've done a pretty good comeback and turnaround, changed the brand, but the stock isn't doing super well. But I still like the company. I think they have a bright future ahead with the continuous move towards sort of more casual and business casual rather than just the topless models and the sort of young.
I don't think they were ever topless.
Were they? Like,
you mean the men?
Yeah, exactly. The men
yeah,
were topless.
Say,
the men were
that'd be a bit much.
Yeah, I think Luke Moore was actually a Hollister or like Abercrombie.
Stop.
I think he worked in one of the stores. I don't know if he was topless.
Hold up. Luke Moore was a model in Abercrombie.
I think so. You
right,
have to
that's
ask
it.
him.
We need to. Is fact check, everybody. Fact check. Is that true?
It's not hard to believe, you know. It's not hard to believe when you look at it.
Yeah, he's a stud, isn't he?
Yeah, definitely.
So, right, good stuff. Andrew McKelvey, I'm very happy to see you this morning. And he is pointing out EasyJet looks set to take off today with some good numbers. Very good. Back in force. Also, we've got, away from the numbers, Neil, good morning. Yeah, we've all had a fat finger event. That's exactly right. I had one in Spain. My worst fat finger was in Spain. So I've been sent out there, second year graduate, and if you did a risk trade in Spain, it had to go through the Spanish market. So if you're doing it, a buyer and a seller, you're matching them, right? Then that doesn't go through the market because you're just filling both counterparties.
Right.
So we had a buyer, a seller. You wait till the end of the day, you put them into the closing auction as a buy of $10 million, sell of $10 million without any price, just at market, but it's in the closing auction, so it crosses right, at the same price. So there's no risk. So 4:30 came along and I'm sitting in the Madrid office and I'm over there for a week and it goes 4:30, 10 seconds, okay, great, sell, buy. And I put both orders in within a second of each other and I just see the price going boom, boom. And I'm thinking, what the hell has happened here? It's the auction.
Right.
There's no way that it shouldn't have affected the price graph. What's going on? It clicked. It's 4:30 in Madrid.
Oh.
So I'd completely missed the time difference.
Mate. Rookie mistake.
It was 3:30 in London. The Spanish market was still open. So I caused a 4% drop in Telefonica, the 10 million shares, but then put the buy order in, so caught the vast majority of them and bought it all the way back up again, made 16,000 euros.
There you go. That's a good mistake. That's a good
mistake. I had to phone my boss, and they obviously had to phone the exchange and explain what happened.
Oh.
And
I remember when when I just passed my bet test, and I got a dealing call, and it was a guy looking to trade UK options. So historically, he's only traded US options when I looked at his account. And obviously, UK options, one lot is 1,000 shares rather than 100 shares like in the US.
Yep.
And he said, oh, I want to buy 10 lots. He assumed that it was 10 times 100 and not 10 times 1,000.
Ooh.
So I was like, it's a pretty big trade. I think he was in Ocado or something similar. I go to the desk. They say, yeah, it's fine. We'll work it. desks working the order, and then I go to book it on the client's account, and I see that he only has money for one lot.
Of course.
And I said, oh, geez, guys, I think I messed up here. They say, all right, call the client, ask if he wants to put on like the remainder of the trade, or if, you know, we have to just carry the trade.
Yeah.
So I call him up and I said, sir, can you put in
any chance you want 10 times the size, mate?
Actually, you have to put in the remainder of the funds if you want to put on this size. And he said, all right, how much is it? It's about 750,000.
Oh, no.
Yeah, I don't have that kind of money.
Yeah.
My guess. But luckily, so IG had to carry that trade, but it was a profitable trade. They made money out of it.
Yeah, well, it's, you know, and of course, it doesn't matter whether it's profitable or
no,
lost.
it's still on the stage.
Yeah, it's a mistake, and of course, it gets booked to an error account and all this. Oh, it's just
I think I was, my heart rate was at about 200 beats per minute at that point.
It's a horrible feeling, but as we say, everybody's been through it. So you put up your hand, you say, I've made a mistake.
Yeah, we're only human after all.
Yeah. Now, talking about EasyJet there, Andrew McKelvey, shall we take a look at those in detail? So, bucking the budget airline trend with a record-breaking summer, you can see there we've got a good rise in annual profits there. The CEO was just on CNBC as well, actually, and they're forecasting a positive look for next financial year and increased flying schedules by 3%. So EasyJet trying to eke out the growth there, and you can see big jump versus a year earlier. So
I'm actually quite surprised by this, because if you look at historically, just not historically, but just through COVID, all the airlines had to borrow funds to keep the operations flowing, right? Mm-hmm. And then when COVID ended, they had to find a way to pay these loans back. So the majority of the sort of more established airlines, they could cut down routes, they could cut down overhead costs, and they could finance the debt structure that they had. But these sort of budget airlines, they're already operating on so thin margins, and they already have so low costs and overhead and everything that they have. Yeah. So they can't really cut down. That's why we saw Spirit Airlines. We saw what happened to them and the American budget airlines. But EasyJet is really defying this, and they're going against the grain. But personally, I'm still not a massive fan of EasyJet, because I think they have too many other non-core businesses. I think they should divest from the other stuff and focus on the airlines.
So I'm the opposite. I would buy this one. As this is a constant in my portfolio. If it has a good run, yes, I sort of I trade it basically. But I trade it because I love the company. I love flying EasyJet.
Oh,
so our partners across at Numis this morning have spoken to the investor relations, and the bottom line is solid Q4 numbers, better than expected cash, and enough in the guidance to broadly underpin current consensus for full year 25. Year-to-date EasyJet shares are up 6%. And they only trade on 8 times earnings. That's one of the main reasons that I keep on coming back to.
Very low.
Results presentation at 9:30 this morning. So let's see how that one does. But one that's not in such good form is Aston Martin.
Yeah. I'm a big Aston Martin fan. I love the Aston Martin cars. I think they're incredible, but the stocks is just doing horrendous.
Yeah, how's that stock doing for you? It's just absolutely brutal, isn't it? I mean,
plummeting. It was what's his name? The father of the Formula One driver, Lawrence Stroll, I think his name is. Mm-hmm. When he bought them, I think he bought them quite cheaply, and he was hoping for a quick turnaround. He sold, I think, 13% to Saudi Arabia to cover some of the debt. But they just haven't turned around in the way that they was hoping for, and they're continuously looking for capital to fuel up.
Well, this is what happened last night. They came to the market for another $200 million. 200 million sterling in a mix of debt and equity. If we just want to get that story up, it raised 211 million pounds. So that's made up of 110 million from institutions, 1.2 million from retail. So retail punters have come in to buy the stock at £1, and then 100 million of debt. So the raising was done at £1. You can see the stock closed last night at 107.90. So it was done at a discount of 7.3%. And let's just take a look out further on the daily there. So yeah, that one this morning will definitely be one to watch. So yeah, it was done right at the bottom of the chart. The placing 13% of additional capital for Aston Martin done, successfully raised. But what pressure does that put on the stock this morning?
Massive pressure, and I don't really see where the sort of uptick is going to come from. Where's the revitalization of the brand's going to come from? It's a classic brand, of course, but you also have classic brands like Jaguar, Ferrari, Porsche, etc. I just don't see Aston Martin, as much as I love them personally, I think it's the ultimate gentleman's car, but I just don't see the stock bouncing back. And with the EV, you know, you're not buying an Aston Martin because you want an EV. You know, you buy Aston Martin because you want a classic James Bond car.
Yeah.
So I really can't see it sort of like coming back to the levels that we saw at the top of the slope. But I really hope so. I really hope so.
Yeah, exactly. It's one of those companies that you love, but you can love a company and you can love a car, but you don't need to buy the stock.
Yeah, yeah. I mean, I think, but it could always be worse. They could be like Jaguar. You saw their sort of rebranding that they did, and they got absolutely demolished in social media for their rebranding.
They really did, didn't they? Oh my goodness, that was horrific. Right, let's have a quick look where the futures and everything is then. So, yeah, we've got the S&P looking unch, but 6,021. Good set of the Fed minutes last night. That put the S&P above 6,000. So, you know, that's more important than any Trump tariff the market believes. And then we've got oil up 40 basis points, copper up 1%, and yeah, the FTSE holding its head just above water, 8,270.
I'm actually, well, two things. First off, your ETF swap tracker can't be really happy about that in the pension. But secondly, I also think that oil, I'm a bit surprised that it's up, especially after the ceasefire between Israel and Lebanon. You know, because it always sort of works as a counterparty towards, you know, worry in the world. Mm-hmm. So a ceasefire is the quite opposite of that. So the fact that it's going up, it's beyond me. But I did see that American reserve levels dropped significantly. So it could be.
Yeah, I think this. So this was rumored Monday morning, first thing.
Yeah.
The ceasefire, and gold was down 3.5%. Oil was down 2%. So I think it has already dropped from over $70 down to where it is. But
you think we see a sort of stabilization? This is where it's going to trade at, around this 69, 70.
That's a tricky one, isn't it? I'll tell you what. Let's debate it in the break, and we'll come back for market open in a few minutes.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Welcome back to Trade Live with IG. My name is Rich McDonald, and I'm joined here today with Ronnie Agnig from the Premium team.
Good morning. I don't have the such slick hair as you do, and the cool beard as well. I'd never be able to grow that.
It's coming. It's coming. Once puberty hits, you'll get it.
Right. Let's just remind you of the headlines this morning. Then EasyJet recommending full-year dividend of 12 pence a share, and decent numbers there. HP, Hewlett Packard, saw EPS 70 to 76, estimate was 86. CrowdStrike was decent numbers in line, and Aston Martin profit warned and offered 13% of equity at £1 a share. That's our stories of the morning. But there's another one in Anglo American. Anglo American tried to do a placing in Amplats. And you can see that they sold 17.5 million shares of Anglo American Platinum, representing 6% of the total issued equity. So, yeah, one to watch on Amplats as well. We'll have our eyes all over that. But it's almost time for the bell, Ronnie.
You ready?
There we go. The opening bell is here, and we are off and running. Let's see what's happening. Oh, I almost dropped the bell. That would have been a shocker, wouldn't it? Let's see what is set to move this morning. I would imagine Aston Martin may be in an extended auction. Let's just get that a bit bigger for you all. So, right, Ronnie, take us through some of the big movers there.
Oh, well, yeah, we see, for example, Aviva. They've launched new funds, long-term investments. They really like it. Air France, KLM, that was a bit surprising to see. I think that it's as a result to the rising low budget with EasyJet. And I'm quite surprised to see Renault dropping so significantly, but I think that's all sort of automakers that are taking a hit right now.
Yeah, I saw that Vauxhall had announced they were going to close their plant in Luton as well. Yeah. That's a blow for the area there. But yeah, Air France down 2.5%, Renault down 2%. I'm hearing Anglo's is up 2. Let's see if we can get that. We don't have the sign of the mining prices there, but let's try and get them. EasyJet up 2.3% on numbers. All the fives, 555.
Very good stuff there. I think what I'm watching quite carefully today is the sort of commodity stocks. So the Glencores, the Anglo American, etc.
Should we get those up for you?
Because I think we can see a potential bounce back there, because there was a lot of worry there with the tariffs coming in, because they're so import and export bound. They dropped significantly yesterday, so I think we can see somewhat of a bounce back today, which I'm quite excited to see about. And then also the auto manufacturers and every sort of We saw Best Buy dropping significantly. We saw Ford, Stellantis, GM. They all dropped significantly.
Yeah.
Now that the sort of potential trade war is coming up. We saw that Trump was threatening a 25% tariff on US, Canada, and China.
Yeah.
And then Claudia Scheinbaum in Mexico said that every tariff they put on us will put a similar one back on them.
Yeah, it's just starting the retaliation, isn't it there? But there's your mining stocks, Ronnie. So Anglo's up 1.5%, but Anglo Platinum that it has sold down 3.3%. That's been a shocking few months for that one. Let's just see, look at that, the bottom, very bottom of its range there. So Anglo's managing to sell some of their Amplat stake yesterday. Right, let's go back to EasyJet kicking on, now trading 560. 560. So EasyJet up 3%. And you can get the prices up there, please, again, guys. Yeah, there we see. So Heineken managing to go up 5%, 0.5%. Yeah. But really, it's about those losers in France, isn't it, Ronnie?
Yeah, the sort of the big banks are really taking the hit. The French markets in general, SocGen, BNP, Renault, Air France, they're all taking a massive hit. But it's also all the biggest name in Europe. So we got LVMH, ABB, ASML. They're all taking a hit. The European markets. I think it's growing concerns of the sort of volatility that will come with the tariffs.
Potential tariffs.
Potential tariffs, yeah.
Because we all know they're not going to happen. It's just negotiation tactics.
Yeah, I think that's a bit what we'll see with this time around with Trump, is that he always had a threat because nobody knew him before, but now people know what he's actually doing, what he's saying. So we'll see how that affects him.
You'd think that they'd remember that it's all just...
Exactly, yeah. So we'll see, but we all know that he doesn't care much about the European equity markets, but for the American equity markets, they're also, GM, Stellantis, Ford, all of these companies. He cares a lot about what happens in the equity markets. So if he sees a continuous drop, we might see, a different change in tone, and that will affect all of these stocks in the red now. It'll affect them positively.
Yeah. Okay. See, Nvidia up 3.5%. There's Anglo's up 1.5%. In Divior, yes or no? Nvidia. What's Nvidia?
I'm yet to find out.
It's a new company I've just invented. Right, there we go. So yeah, airlines. So yeah, France having a really tough day actually. Those European stocks, as you say, Ronnie, are the weak ones. Talking about stock markets and government's interest in them. There's a great article in the FT this morning, and it's with somebody who was in the Chinese sort of top ranks, and he said whenever China drops through the 3,000 level, then that causes panic amongst the upper echelons of the government, and that's when they'll come in to support it. So you almost just right puts at 3,000 on China. But let's see where it's trading. I haven't see if I can find that story, because it was an interesting one there this morning. I'll try and find that for later. But the Chinese. Let's see where the whole.
We saw that twice this year with the stimulus from China, but the markets don't like their stimulus. The markets want money in hand. They want that sort of Keynesian, Bidenomics, money in hand of consumers instead of for the local governments, who are the main drivers of the economy. But people want to see increased consumers. So how it's working with the 3,000 levels?
Ronnie, we've just Junior Fred. We've got a Junior Fred for the next 5 days, and he's doing a blooming good job, probably better than the Frenchman himself, if you're watching, Fred. But there he is. He's called it. Down 7.3%. Aston Martin trading at the exact level that those shares came at overnight. That worries you, doesn't it, Ronnie?
Yeah, I mean, what's the point in buying something at discount if it's going to be retail price as soon as you buy it?
That's exactly my thoughts. So you got a 7.3% discount on those shares yesterday. that lured you in, but the stock has dropped exactly to that £1 level. Let's see if it holds there. Let's see if the buyers are able to keep that above. I would not want to see that trade at 98 pence if I had just bought some.
It would be quite brutal if you think you got a steal, you got a good deal, you buy it at 7% discount, and then it's down below the price that you bought it for.
Yeah.
But I do think that it's gonna I do think it's gonna bounce back. I don't think it's gonna finish lower than 100. We see that
Big
it's
call.
sort of like
Big
testing
call. I
those
don't know
resistance
what you're
levels.
basing that on. That's a big call.
Yeah, I just think if you see it's sort of touching the resistance levels.
Yeah.
And I think people will see that it's sort of, I think people will call the bottom at 100. It's sort of even number, people call the bottom, it'll come back up. That's my prediction, and it's fully mine. Don't.
Yeah, I would. Well, that's what makes a market. That's what makes a market.
Exactly.
I would not touch this.
Well, for every reaction in the market, there's a
reaction.
Yeah,
exactly. Unless you're talking about this.
Oh, look at that.
When it
Going
IPO'd,
upwards.
there is no reaction to that. And yes, I bought the stock there.
You did.
I bought the stock for Macquarie, and oh my goodness me. Yeah, the guy, Terence, saying it would have been cheaper to buy the car. Had one of those as well.
Oh, really? Look at
No,
this guy.
it's whatever I managed to sell my Aston Martin for back in 2016.
I need to talk to IG about changing jobs.
I actually sold it to go traveling around the world.
That's a good investment.
I had a DBS back in 2016 that was probably my most favorite car that I will ever own.
I can imagine.
I'll never bother going back to a sports car. But yeah, a DBS Casino Royale colour.
Oh, yeah.
So it's the car from the Casino Royale film. Now I drive a zip car for £6 an hour. Yeah, how days have changed. But yeah,
how the mighty have fallen, eh?
How the mighty have fallen, indeed, Ronnie.
I didn't know you were a baller like that, Rich. I would have been nicer to you then.
Well, back in the day, in fact, I remember there was one day we were going to an intern event.
And you showed up in the Aston Martin.
No, better. Because the Aston was, I used to drive to Credit Suisse in this, beautiful thing. It put a smile on my face every single time I pressed the button to start the engine. Because in good cars, you just press a button to start an engine running.
I wouldn't know.
You don't need the keys.
I wouldn't know.
And anyway, so it was parked downstairs, but the interns needed to get to this thing. So I took 3 of the interns.
Oh.
And actually now, big shout out to Tintin and Anthony. He was our intern on the desk at the time, and he managed to sit in the front seat, and he was the happiest intern in town.
I can imagine. I would have been too.
So that made me buy the stock on the day of the IPO like an idiot, and it's currently down 99.8%.
I hope you're still not holding.
No. That was, thankfully, it was for Macquarie. So, yeah. Right. Pets at home. Now, we are getting some great shouts from Junior Fred. So, Junior Fred is Daniel, as in Daniel San, the Karate Kid. And he's just shouted me through that Pets at Home also down 8%, which is interesting because Ange was talking about these yesterday, saying that there was always a Pets at Home next to a B&Q, next to a Halfords.
Yeah.
Right? You always see them next to each
holy
other.
trinity of strip malls.
Yeah, and they just exist, don't they, with like a Costa Coffee in the corner or something. But Kingfisher down 15%, warning a few days ago. Pets at Home down 8%, but Halfords was up 10 yesterday, 12% yesterday.
Is it based on something, or is it just a bounce back? Because they've been dropping significantly, these past levels. We talked about it the other day when I was on. I don't think it's based on anything in particular.
Could it be better management? Because if your core customer is pretty much the same, right?
Yeah.
You got a car, you got a house, you got a pet, right? It's the kind of it's Middle England,
the middle class dream.
Yeah, and just what I wonder what Halfords are doing right, to avoid that profit warning yesterday, like Pets at Home profit warning, Kingfisher profit warning. Good.
What are pets at home doing wrong?
Yeah, what are pets? Well, or just looking through the chats here. Adam Deleuze, thank you for joining us. Ben, thought I gave you a red card yesterday, Ben. You said you weren't coming back today. I'm only joking. So, yeah, we're talking about EasyJet, we are talking about today. So growing their holiday business up 25%. I saw Andrew McKelvey. They were going for year on year and cost per seat. My sister's just taken an EasyJet holiday.
You guys are proper EasyJet family.
Yeah, I think we are. Well, they fly out of Inverness, and they live right up in the north of Scotland, Inverness. But they absolutely loved it.
Well,
to be said.
As we established prior, I'm a bit of a snob when it comes to travel, so it's BA or nothing for me.
Did you fly BA to Boston?
Of course. I updated my BA app to see my Avios points come in. It was a beautiful feeling.
Nice.
I had a lovely flight. It was really nice, but I did take like 2 melatonin drinks. So I'm gonna sleep.
Oh, you get them in drinks now?
In America, anything is possible.
I didn't know that.
So I took 2 melatonin drinks. And I said, right, I'm going to knock myself out and just going to sleep for the entire flight.
Yeah.
I took 2 of them and I was just doozy and groggy, but I couldn't sleep. I was sat in the middle and I was just sitting like I was drunk, but I couldn't sleep. But the BA was a pleasure. It was a pleasure traveling with them.
It's great. It is, yep. Oh, I haven't been across to the US for a while. Hopefully a trip to Chicago. Nudge, nudge, Mr. Sosno, if you're watching at 2 a.m. in the morning. Yeah, Monkey Man says the Holy Trinity. That's your B&Q, Pets at Home, and, well, actually, no, we've made it 4. What's the 4 of a Holy Trinity, Monkey Man? Because we've also got Tops Tiles.
Oh, yes.
Tops Tiles also, I think they...
I've actually never shopped at any of these.
You're not?
Never.
Dear me. IKEA, yeah, all the way.
IKEA, I'm IKEA. You got everything you need there.
Yeah, you get your little hot dog when you go in. Or is yours a chipolato?
No, I'm more of a meatballs guy.
Do they do Swedish meatballs as well?
Of course.
Brilliant. Yeah. That's right. Yeah, Ben, your yellow card's good enough for me. Sin Ben, and you're good to go. You missed the first 10 minutes.
Just on EasyJet before we move on. What I thought was interesting is that you say your sister took an EasyJet holiday as well.
Yes.
I think they're really. If it's showing something, the uptake in their travel is that European travel and holidays and tourism is bouncing back, and one sort of sign that it's here to last for a bit longer is that Blackstone has bought 500 million euros worth of hotels in south of Europe.
Wow.
So the tourism is, the bet is big that tourism is bouncing back.
Yeah, very true. Yeah. Well, EasyJet not kicking on. It is now trading back down to 5. Oh, it's fairly volatile, right? It's trading 50. Basically, the market is 53 to 57. Right, if I was making a price in 10 million shares or whatever, it would be 53 to 57 right now, because that's where it looks like it is sitting. Anglo's up 2% now. Progress is being made there, isn't it? They got that divestment of the Met Coal on Tuesday. They've now done the placing, so it's just nice to see when a CEO puts a strategy out there. It takes a few months to get it moving, but when it starts moving, it goes, doesn't it?
The market's always a big fan of divestment and focusing on core assets, and especially with coal really dropping, they are divested from that. And then palladium, we saw palladium, the Anglo-American palladium dropped, but the main Anglo-American, they're really uptaking from this. So the market loves it, and they're doing a good execution.
Yeah.
I think going forward, we might even see some acquisitions from them. They were teasing it earlier, so I think we can see a big acquisition and sort of consolidation in that market.
Interesting. Well, I hadn't thought about that. In the Anglos, I think they're so spread out through the world, obviously, right? From Brazil to South Africa to Australia. I think consolidation of what they've got at the moment is, once they get the South African assets divested and, they clean everything up.
That money needs to be invested somewhere.
Yeah, or maybe defending themselves from getting bid for again would be a good start. Yeah, might be actually worth looking back at when BHP walked away.
Exactly.
Because when you walk away, there's a 6-month
Cooling off period.
cooling off period.
Yeah.
So let's have a look at that right now, because it's always worth knowing. It must have been, I would imagine, here was the start of the sell-off. So let's go to a daily. Let's get that back to the start of this year. That well, no, sorry, I'm way too far back here. So let's take a look at this year. That was the bids there, because I remember I bought them in the opening auction. Yeah, I'm shouting at Pete Ward, "Get me in, get me in!" But this must have been the walk away here. So yeah, £27. That was the 23rd of May. So 23rd of May plus 6 months, Ronnie, what's that? The 25th of, oh my goodness, of November. Go, we need to get that official date. So
Yeah.
6 months since BHP walked away is pretty much in the next few days.
Very interesting.
That is very
We'll
interesting.
have to keep a close eye on this one. You think they'll come back?
Do you know what? I am tempted to buy some on the back of that. We're gonna have a look at that and come back to it, because I haven't heard anybody mention that, and I wouldn't be surprised suddenly a research report in the next few days goes, it's now been 6 months since BHP walked away. I'm gonna triple check, because I don't want to start talking about things that aren't true. BHP walks away from Anglo bid. Right. Okay, on the 30th of October, they did say that it's moved on from the failed Anglo bid.
So it's still a bit.
Focus on other growth opportunities instead. Right. So it's already said it's away for good. But yeah, 29th of May it was. 29th of May. So 6 months in 2 days. Good. Right. How do you fancy answering some questions, Ronnie?
Go on.
Shall we?
Let's do it.
Let's go to confirm and send. That's right, everybody. The part of the show when we take your questions and we hopefully give you some insightful answers.
Hopefully.
Or at least we go, yeah, we don't know what the answer is to that. We'll come back to you tomorrow. So yeah, let's go to question number 1, please. Ronnie, how important is it to stay updated with financial news?
I think it's it depends quite a lot on what your trading is. If you're doing day trading, intraday trading, or like short term, absolutely, it's absolutely vital to stay up to news with what's going on. But if you're looking to just buy and hold, you don't have to care too much about the buzz and the nonsense and everything that's going on. So depending on your trading strategy, it will depend on how important it is. For example, if you're looking to trade BHP or anything similar, you need to know exactly what's going on, look at hints, look at movements. But if you're buying ASML and holding it forever, you don't have to focus so much on the daily intraday movements.
Yeah.
Stay up to date what's going on, but don't make it a full-time job.
So it depends if it's an investment or for a trade.
Yeah.
Or if you're like Axel, you believe that everything's priced in.
He believes in a completely efficient market.
It's a completely efficient market, that's right. And my girlfriend does absolutely agree, which is bizarre because she's an economist.
I do not agree.
No.
I do not agree with completely efficient markets. I think it's a theoretical concept that it's impossible to achieve. But also, Axel is balling out with his trades, so I might have to stand corrected.
Well, that's right, and I absolutely huge respect for Axel's knowledge and experience, like just incredible on technical analysis. And I think if you can marry up knowing the fundamentals,
yeah,
and knowing the technicals, even 25% of what Axel knows, then that puts together a real strong skill set, doesn't it?
Then you might be driving around interns with your DBS if you have that combination.
But not at 250 kilometers an hour like Axel. I would have loved to have taken that Aston on the Autobahn in Germany.
That would have been insane.
Oh. Dreams. Right, let's go to question 2, please, gents. what role does fundamental analysis play in trading strategies? So that's almost exactly what we're talking about there.
Much like we said, yeah. If you do your fundamental analysis, you go on, for example, tip ranks or check their smart score, and you see that you believe that a stock is fundamentally undervalued with the assets that it have. You believe that it's undervalued and it's trading at below its price. That's an excellent opportunity for you to look. Okay, I see this is what the assets of the company is worth, and this is their future value, and now we're trading at a lower price. Then that's an opportunity for you to go in and believe and hope that everyone else realizes this. You just have to be the first one to realize, or maybe not even the first, but one of the early ones to realize, and you hope that the market will catch up. That's the fundamental analysis of trading. But it also works other way around. If you find a company that you think is completely overpriced, you think that it's not, the assets are overvalued, that it doesn't have a long-term prospect, then you can take the other trade as well. So understanding the fundamental value of the company by doing your analysis, it will allow you to take a longer-term position trade and hope that the rest of the market catches up with your opinion.
Absolutely. I think everybody at home knows my strong opinion on this, that fundamental analysis to me is everything, right? As a macro trader, as a catalyst trader, I very much valuation. So I base the vast majority of my trades on where the stock is valued relative to where I think its earnings can be. Completely agree with Axel, is that everything is in the price for today's earnings estimates.
Yeah.
But what I try to be ahead is, ahead of the earnings estimate. As we heard from Martin Price last week, which was a really great interview. So head of investor relations for IG, used to be a research analyst on the sell side. So we got his view of what it's like as a research analyst and what it's like investor relations, both sides. If you missed that, let me see if I can get up that interview for you, which was really, really insightful. But he says the nirvana is that you find a company that's beating and raising and beating and raising.
Yeah.
Because not only do you get the increased earnings estimates, but you probably get some kind of premium PE ratio as well.
Easier said than done.
That's it. Yeah, and that's that's exactly what NVIDIA is, the kind of holy grail of finding that one somewhat early.
Yeah, for sure. But also NVIDIA has been moving insanely. They're in the right place at the right time, really. It's like probably stock of the century.
Oof. That's a big shout. Could be.
Who's up there?
GameStop. Right, so quick look at the chat. Now, away from the numbers, Mr. Cavendish has a question for you, Ronnie. Well, first of all, what are the minimum trade or deposit requirements for an IG account? So for spread betting or CFD, is there a minimum requirement for putting money in there?
Yeah, there is. It used to be £300, but now we've lowered it to £50 to make sure that everyone can get in and trade. And we also have, if you phone us and do the card deposit over the phone, we can even do it lower than that. Not sure how many trades you can place with less than £50, but you can place 50 online and less than that if you call us.
Cool.
And we're also very happy in the first month to give you reduced trading sizes. And if you call us in, we'd be more than happy to give you an extension of that so you can place smaller trading sizes with a smaller deposit so you can get your feet wet in the pool before you dive in.
Great. And then on a Tasty Trade account, minimum trade or deposit requirements on a Tasty Trade account. Of course, you can open a Tasty account through the IG platform.
Yeah,
it's great, isn't it? It's so Pete Ward actually walked me through it, and I'm so glad he did, because now I trade on Tasty pretty much every night.
Oh, really?
Yeah, because you've got so many on the IG platform for American options. Without calling up, I think there's about 20 options, right? Which are all the main ones that you want to do. all the Nvidias and
I mean,
Apples.
Tasty is arguably one of the best options platforms in the world. That's why we acquired it.
For retail, it's number one.
It's
Yeah,
definitely,
for
that's why we acquired it. And it's giving the sort of, we were number one in spread bet and CFD. And then now we have the options as well. So it's the complete platform really for the retail traders to trade online. And I can't really say much bad stuff about the Tasty platform, even as much as I like to, the Americans coming in, but it's a very good platform.
And that's the exact thing I did to start with. I think I just put £1,000 across. Is there a minimum for
that opening? One? I'm not completely sure to answer.
So we'll get an answer on that for you before the end of the show, Neil. But yeah, minimum trade or deposit requirements on the Tasty account. I know I just definitely started with putting 1,000 across. So we'll have a look at that for you. Adam DeLue's talking about looking at the favorite structure in indices this morning, which of course for me is the downside. At the moment, Adam, I must admit, I've got upside for the Santa rally, for the Thanksgiving rally. But it is, you'll be happy to hear, before you fall off your seat, it's very much a calendar spread. So let me see if it's in, it's in my option account. Let me give you a very quick show of what I've got there. So for the 31st of December, right, now there was a big choice between getting this, so that one there. It was a big choice between choosing the December expiry or the 31st of December. I went for the 31st of December because that gets the full Santa rally and it gets the markup into the end of the year as well.
Very interesting.
So that's my I'm long £25 a point of the 60-30 calls, but you will see right above that I'm short £50 a point of the March calls, roughly the same level at 60-50. So that is my calendar spread there. You get an extra 120 points of juice. So I'm short at 200 and today that's trading at 80 for the debt calls. Basically what I'm saying is we go up into the end of the year and then in January, February, we realize, oh, maybe Trump isn't, hasn't got the same.
Tends to be a big sell-off in January with the sort of rise, but also I'd be worrisome with the big sell-off. It could be potentially be a big sell-off before the end of the year. People wishing to realize the losses for the tax year. So
well, yeah, then that doesn't work out. You're absolutely right. But that's where we are. Excuse me, with that one. Our wonderful moderator, while Fred's away, which I imagine is Leanne down in South Africa. Do tell us, Leanne, if that's you in the chat so everybody can say hi to you. So that's the Trade Live with IG in the YouTube chat. If it's not Leanne, somebody's hacked our system, which would be great. But they are providing value because they've sent me this fantastic interview with Martin Price from last week. So yes, feel free to put that up there, guys. That is Inside Equity Research and Investor Relations, and it's a 7-minute cut done by the wonderful Reese down in South Africa. He's taken all the best bits, right? This is what you wish could happen at the show is cut out all my rambling of 25-minute interview and put it into 7 minutes.
It's rich summarized.
There is the artificial intelligence of my otherwise diluted intelligence. So please follow that link if you're on the if you're in the YouTube on the comments. Otherwise, search Trade Live with IG, Inside Equity Research and Investor Relations. Good stuff. It is, Leanne, indeed. What a relief we haven't been hacked there on the. So yeah, wonderful to have our very good friends from Johannesburg joining us this morning as well. So, next question.
What do we got?
Ooh, well, it's a tricky one. What role do emotions play in risk management, Ronnie?
It's everything. Like really, you need to. I think it's one of the big things that a lot of new traders don't realize that they'll have. So people start with their demo account and they said, oh, I'm doing great. I'm banging in money on these trades. No worries, ice in the veins. But when they switch to the live account, that's when they realized, oh, hold on, I might not want to risk 90% of my account on one trade. Oh, it's going up 1%, I'm just going to close it. It's down 1%, I'm close, because it's real money now.
Yeah.
So as soon as you see real money coming into play, real emotions come into play as well. So that's why when we speak to clients who, you know, have difficulties getting started with their live account because they're trading with the demo, they say, oh, but I enjoy the demo, I want to learn, and I'm not still getting comfortable with it. Right, but you're missing the main key tool, which is the emotions.
Yep.
And as any trader can tell, as you can say from your time in, you know, Credit Suisse and Macquarie, the emotions of trading is a massive factor because at the end of the day, we're humans and we're trading with money and it's going quickly. And that's when the emotions come into play, and learning how to manage those emotions, just like you manage your positions, it's a major thing that sort of differentiates, I wouldn't say the good from the bad, but it is a big factor in trading, learning how to manage your emotions, because if you can't manage your trading.
It's we call it revenge trading.
Yeah.
Right now, there are some myths that just wind me up, and that is the number one myth that please do not tell yourself is it's not a loss until I close the position. It is,
yeah.
Because it's whatever you can liquidate the position for today. That's real.
Yeah.
It's not a fictitious P&L.
No. It's I think a lot of people struggling to realize that. And for example, it's, you know, sometimes it's the stubbornness of the ego not wanting to take a loss, and they keep that running loss going forever until they're forced to, or they get stopped out. So don't let your ego get into the way, and don't believe that, you know, I lost these trades, now I'm going to make up for it with a bunch of more riskier trades. That's how you end up in the sort of in the dugout. But manage your emotions, manage your trades, and, you know, you'll be able to deal with what comes at your way, thrown at you by the markets.
Now, this is the graph I've been tapping for looking at. This is just genius. Can everybody read that? So, you know, it's basically on the left-hand side. I'll go from number 3. I missed the consolidation, but if I wait any longer, I won't profit from the trend. Let's buy it, right? And that's here. Inevitably, it gets to the top and you're so proud of yourself. You think, good thing I didn't wait. Look at this. You know, so you're in the position then. The first drop, I'll use this correction to increase my position. And then it drops again. You think, brilliant. Okay, I'm going to go again. I can't believe I'm getting these stocks so cheap. And then suddenly 4 or 5 later, you think, oh no, I'm going to have to wait for this to recover. Otherwise, it's going to have to be a really long-term investment. And I'm classic for that, is turning a losing position into a long-term position because it's going down. And then, you know, number 11 down here, inevitably the panic sets in. Enough. I'm selling out and staying out and never touching this stock again. Right? And it has one leg lower and you think, good thing I sold everything. And then, of course, it goes back up. What the heck? Oh, these crazy people that are buying it here are going to get taken to the cleaners, and it gets back up to your original buy price. And all you've done is created a load of stress and a load of emotion. And I'm working with Ben Buswell. I'm working with him down in New Zealand at the moment because he's classic for this.
Yep.
Still jumping in. Now, he's had the best call in the world on Upstart. I'll just remind everybody of exactly what Ben is trading in this stock, Upstart. And he told me about this. I hate to admit it, but he told me about this when it was trading at 35. So it is now doubled. And this is when he told me about it, mid-September. And all it's done is I think he made good money from this one here. And then, you know, but you know, I'm not talking about this company. I don't know much about this company at all, but it's the classic one of you still want to get involved here.
Yeah.
Right? Because you've had that thing, but who knows, next it could be down here, and then what do you do? Right? You've lost a load of money in this bit here.
And then you're holding on to it.
And you're holding on to the position, and you don't know, because remembering it's come a long way. And the reason I can tell you, we can actually go back to the graph again, because we saw it, we would have seen it back in 2021. If we go to the weekly on this, yeah, look at that. There's the perfect example, right? People that bought here at the end of 2021, that a lot of people were involved in these tech names, and then suddenly, that's just horrible, isn't it? Oof. You know, and the emotions that you go through there, oof, it's just, it's a real horrible roller coaster, that.
Yeah, you know, I often arrange sessions with Axel and our premium clients for those who wanting to learn more about risk management, etc. And so I sit in on these sessions, and if there's one thing I take away from these sessions that Axel hosts is let your winners run and cut your losers. And unfortunately, people often do the opposite. They see 10 basis points profit, close it out, oh, easy money, money in the bank, 15 quid made. And then their losers are down 300-400, and they say, oh, it's gonna turn, it's gonna turn.
That's it.
And then they hold it up until they get to, you know, if they're lucky enough to have it come up to the level, they just close it out, break even, and they just locked up their capital. So let your winners run, cut your losers short.
And it's so hard to do, because you obviously put on any position because you think you're going to be right.
Right, yeah.
Okay, and we all like to be right. Okay, I am a stubborn, you know, we get my girlfriend in one day to sit in that seat, Ronnie, and she'll tell you how stubborn I am. But you cannot be stubborn when it comes to trading, because you'll get yourself into a whole load of mess. It is admitting that I know for a fact that 3 times out of 10 I'm going to be wrong. I know I might be wrong 4 times out of 10.
Yeah.
So what I have to do is those 4 times that I am wrong, I have to minimize those losses. And the 5 times or the 6 times that I'm right, I've got to maximize those gains. But what you cannot do is maximize the losses and minimize the gains by selling it too early. It's simple when you put it through.
Exactly,
like
it's
that.
easier said than done, but that's where the emotional part comes in. You have to be able to manage your emotions and make those decisions.
Yeah, and admit that you're wrong, and don't think that it's not a loss until you close the position. That is utter rubbish.
It's just a different form of loss.
Yeah, it's a unliquidized loss, unmonetized, unliquidized, unrealized. That's it. Thank you, Ronnie. That's why you're here. Unrealized loss are, you know, still the same thing. And yeah, the final thing that I would like to say about this is earnings. Earnings. The question earlier was, what part does fundamental analysis play in this, right? If a company profit warns that its profits are going to be down 50% lower than they were before, the share price, right? Yeah. Just because if it drops 10%, that share is now more expensive than it was before, because it's all about earnings. All you're buying into is a stream of future earnings of the company. So if it's like Nvidia and it keeps on raising and raising and raising, yes, the share price keeps on going up. But if a company keeps on profit warning and profit warning, the share price means absolutely nothing.
Yeah. At the end of the day, you're buying into companies. And that's what we often forget. We're buying into companies, and we're buying into the fundamental value of the company. And if you don't know the fundamentals of it, you don't know what you're buying.
And that's when it's tricky to if we just go on to screen one last time, that if this company's earnings, right? Well, first of all, if the company's not raising guidance here, then it shouldn't be going up, because all you're doing is expanding the valuation. And if it's cutting earnings here, then you shouldn't be buying to manage a position. Sometimes we buy to manage positions, right? Yeah. But sometimes you just have to, you know, just admit that you've got it wrong. Okay, good stuff. Right, Ronnie, it's been wonderful having you back from your holiday.
Thank you for having me, Rich.
And yeah, very much a friend of the show. You can see that Ronnie's brought me some luck this morning, because the euro is turning round and we're up 105.26 on that euro. The DAX is killing me, and the S&P is all right, but my autos position, terrible there. I need to get a stop loss ready for that one, Ronnie. What's it going to be, do you think? It's trading 47.15 and I'm long European autos.
Can't advise you on that, Rich.
Yeah, you know, you're right, because I am a client. You're correct. That was a test.
I got Tom coming in later.
Yeah, exactly.
I can't advise you on that,
tricky,
mate.
wouldn't it? Right, I'm going to stick a stop loss of 1% more on that one, 46.7, because, yeah, that has been an ugly one. And then on the DAX, I'm in there at 191.90 at my stop, so that's only 23 points away. So, some point during Angeline next section, I'll probably get stopped out on that.
Hopefully not.
Good stuff. Ronnie, thanks for joining us. And we'll be back in 5 with Angeline, a significant upgrade in the average looks in the studio.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Trading the news is an essential skill for all traders. Major news announcements can often cause large price movements, particularly in Forex markets. So, here are 5 key pointers to help you try and make the most of those moves. 1. Do your research. Know the times and dates of important events. Use an economic calendar, for example, the one on IG.com. It's a vital tool to help you plan ahead. There are many announcements on any given day, and it's essential you know which will affect the assets you're trading. For a Forex trader, generally any event impacting the US dollar is important. Events like non-farm payrolls, Federal Reserve minutes, and GDP. If trading shares, look out for company earnings, dividend payments, and stock splits. 2. Check what the market expectations are for the event. Look at a chart of what happened last time. How did the market react? Was the data better or worse than expected? Did earnings beat or miss estimates? Use what happened in the past to inform your future trades. 3. Study related news and events. What else could impact the market in the wake of the announcement? Take crude oil as an example. US inventories are due on Wednesday. If there's an oversupply, the price should drop. But say OPEC ministers are meeting Thursday. If they reduce output, the price could rise. So, it's essential to look at the overall picture and not take each event in isolation. 4. Put a strategy in place. Know what levels you want to buy or sell at, and where to put your stop losses. This will help you to have the courage of your convictions and avoid knee-jerk reactions. And finally 5, learn when to fade the news. Here's an example. The CEO of Company X announces he's leaving. The stock falls, but you believe the company's fundamentals are still sound, and the market is overreacting. So you hold your position. If you're right, and the price rises, you could profit. Of course, if you're wrong, and the price continues to drop, you'd make a loss. Remember, these are all just guidelines. While trading the news can be exciting, it is also risky. Unexpected results can lead to high volatility in the market. So, make sure you're well prepared. And always have a solid trading plan.
Hey, welcome back, trader friends. It is Trade Expectations with myself, Angeline Ong. Many of you I've been talking to as I marched across London Bridge getting here, but we are expanding this hopefully in the new year, so I'm building out the latter half. Here with me is Matt Arbour, the one, the only. We've got tons of new viewers. Matt, just give them an overview of what you do here at IG.
I am the head of volatility and equities, so that encompasses both our options product and our equity product.
So the key thing here, Matt, is that it's been such a crazy few weeks, right? We had like the Trump the win, then we had very swiftly after that the whole Musk thing, the Doge. Then now there's this whole talk of the new people that he's putting in his inner circle. What is everyone talking about right now on the desk?
Not so much about Trump. To be honest, on the desk at the moment, what people talk about, we've got a Thanksgiving bowling event coming up. Everyone's taking positions on who they think is going to win the bowling event. This is the kind of thing that traders get excited about. We get excited about markets, but we also get excited about personal performance and just competing against each other. Trading is like that. You compete against the markets. You're competing against, everyone. The world, it's competition, its most distilled form. Bowling, is close. And that's we're talking about. Aside from that,
do you expect it to be heightened? We always see this heightened volatility ahead of Thanksgiving. And I used to study in the States. Do you think, especially on the crypto-related side of things, that we might see people in the lead up, to Thanksgiving, everyone talking about that, talking to their grandmother, over turkey. There's nothing else to do but eat and talk and talk. Do you think, potentially trade, do you think you might see heightened volumes going into Thanksgiving?
Generally, experience tells me that what we see going to Thanksgiving is a gentle rally. People are sat there thinking about the holidays. They're buying equities. They're spending their money. Black Friday, but buy some tacky goods, buy some equities as well. This is often what happens. That said, we do have a whole raft of economic data today. The whole week's condensed onto a Wednesday. We've got the PCE and we've got the weekly jobless all coming out today, so packed day at 1:30. The market has been quite interested. The PCE was the Fed's favourite number for about 6 months, less so now.
Yeah, it was.
The
Is
market.
that because you think most of the key data comes out ahead of the PCE, and therefore that's why it's not as key anymore?
But the shift has moved more towards looking at the unemployment metrics rather than those headline inflation metrics. We've been seeing much sharper moves, particularly on FX, on weekly jobless numbers than we've seen in many months. We're often seeing good sort of 50, 60 pip moves on dollar yen over the weekly jobless, whereas before you could have had weekly jobless out and the market barely gave a glance at it. So it's often in the sort of the engineering of the markets, there'll be various things that traders like to look at as this is the thing, this is where the Fed is looking, this is where the Fed's focused. So for a long time it was that core inflation measure, and now it's the sort of broader state of the economy with respect to jobs. In reality, should there be any direct knock-on at the moment, the real story should be the tariffs coming at the moment. Hitting 25% tariffs onto Mexico and Canada. What does that look like for inflation? The inflationary picture overall.
Exactly.
It kind of feels, again, covering lots of bases here. We had the Fed minutes last night where the message was generally that we're going to continue to ease. We're going to continue to ease slowly, a gradual easing into the new year. You put 25% tariffs on Mexico, 25% tariffs on Canada, God knows what on Europe coming up. this is inflationary stuff in reality. So, you know, is that Fed guidance real?
And to me, that first, when I saw that line first come through on a red sticky, I immediately thought bearish on the yuan, bearish on the Mexican peso. I was up yesterday. Jack McGuire keeps teasing me now because he says Anne's got no life. I messaged her at 9 o'clock and she's on because I took off the yuan yesterday, but I put on for the first time ever the peso. First time ever. So I'm waiting for Cam, who's twiddling my screen, to see how my peso trade did. But meanwhile,
it's a funny looking number looking at the peso. It's a very big number, yeah.
When you put it on, there's the exclamation mark next to your trade. What is with the exclamation mark?
I've not seen that. I don't.
It comes up right next to numbers, maybe to tell you that it's such a large number.
Yeah, I think it's that large number. I'm assuming so.
I was putting on my stops and my limits. I had to count the number of digits at the end. And trader friends, as we always mention on the show, make sure you got your guardrails in place. Always make sure you have your stops and your limits. And actually, lots of people make fun of me. Rich makes fun of me. He always says, you know, Ange, and you probably laugh at this.
I was about to make fun. No one should be trading the Mexico peso on a casual whim. This is not for the faint-hearted. I'm sure you've done lots of analysis.
I did. I also back-tested the trading signals.
Okay, well, there we go.
Yesterday. I spent
apologies. Here am I questioning, thinking this is I hear the words Mexico, let's put on a trade, but no.
No. And I only like trading what I'm comfortable with, what I'm used to. So I'm normally a gold and WTI and cable kind of person. But because I've been looking at the peso for quite some time, drawing lots of what our trader friends called Ange's golden lines for the levels, it looked right to me. And the story, my thesis, everything aligned. So I went and tried it out, and I have to show you the exclamation marks that come up because it is quite interesting. Maybe it's just a big number.
Well, I'd say, but on that, I'd find, you know, years of having done this have taught me that the specialization, you cannot just be distracted and think, I'm going to trade this because this is flavor of the day. Trading the same instruments and the same set of instruments is the way to
forward.
Well, yeah,
I agree.
The way to give yourself the best chance of success, you know, becoming more of an expert in one thing rather than trying to cast your net in a very wide manner. That's a recipe, you know, for getting into difficulties. You know, you're trying to look at too many things. Sort of specialization is very much the way forward, I would suggest.
If I had to pick one, it'd be gold. So, Black Friday is coming. Have you bought anything yet?
I bought anything. No.
Any football gear, maybe? Because I know you were five-a-side last night.
I was at five-a-side last night. I tweaked my hamstring. There we go. So hopefully that doesn't impair my performance in the bowling. They'll all be going mad on desk watching this, selling me now. Anyhow.
Or on the desk.
Yeah, but no, you know, I'm not. I'm terrible at consumerism and leaving things late. Are
you one of those crazy people, like, you know, 2 days before Christmas, and you're just grabbing stuff. You're just grabbing stuff blindly at more than full price.
I might be on Amazon blindly in the week before.
And
anything to avoid the actual shops generally. But you know, Amazon, the whole online, you know, sounds like an advert now. That the online experience, it's great, and next day delivery is great. This make things much easier.
I absolutely detest going into shops. I mean, you can tell, can't you? Absolutely detest going into shops. But what I like doing, it doesn't quite work because somehow or another my family keep wandering around the house and what I call rummaging around. What I like is to buy everything that I know I'm going to get in the summer and have it stashed away so that there's no mad panic during Christmas.
Nice.
And in a very strange way, that's kind of like how I like approaching my my trades as well. We talk about guardrails all the time.
So there's a professional link there. There we go. Step right from Black Friday into trading again. This is good stuff.
I like understanding the story, putting my lines down, And then even before I go into trade, I know where the exit and entry is, for me, anyway. That might not be, for the trader friends, might not be the way you trade, but it's the boring Ange way of trading. And that way, I try and cut out that emotion, right? Speaking of emotion, with all the numbers that you talked about earlier, you know, coming up today, what does it feel like from the markets, the mood music? Are we seeing a rise in volumes ahead of those numbers, or people generally don't care after the FOMCs, you know, didn't make any waves really?
Yeah, there's less excitement, I suppose, on desk around these numbers, unless it's you know, your 50-50 Fed announcements tend to be the ones that get traction. The payrolls still always generates excitement, but the midweek numbers much less so. Even the CPI, PPI, which used to be the big events, are generating less interest, I suppose. As much of that is down to perhaps the slight irrationality that we're seeing. It doesn't matter what the number is. Equity markets go up has been the order of the day across the last few set of numbers. You know, numbers come in line, numbers miss, and we still see that taken as a positive, which is, you know, sort of counterintuitive. And to be honest, it's very difficult to sit there as a sole trader trading these numbers when whatever you've war gamed for the outcome of the numbers and whatever you're expecting, that the market is getting it wrong against what you would expect the obvious outcome to be, the outcome to be. You know, what I would say we've noticed is it does very much tend to be the trends are continuing after you get the initial volatility, the initial spikes on the number. You might get a spike lower and then a move higher. Once that move has started, in the sort of the minute after, that move's extending much further than perhaps we used to see, and it's very much going with the trend after a number rather than trying to pick a top. You know, gold being a particular one. If you've looked, and I'm sure you have looked, you're trading a lot of gold. On a lot of these US releases, the gold move is perhaps a delayed move. That the move initially in the first 5 minutes, the first 7 minutes, when you expect the most sensitivity to be, is not quite there on gold. And then we're seeing an extension, you know, from a H1 number into 2 o'clock, into the H2 Dow opening, and you're looking at sort of some 20-point gold moves in that period after, rather than that knee-jerk reaction like you see on FX.
Totally.
You know,
and here you see my Ange's golden lines for gold, which has helped me trade. I became a bear after Trump won. I was a bull beforehand, and those lines helped me track when I should re-enter to go lower. And then so far it has worked in my favor. It's quite handy as well. I use the alerts to send myself messages as to when it crosses the lines. So at the moment, I'm waiting for it to cross 2,665 before going long again, with the next level up 2,685 as the next target. Vice versa, if I start seeing this pattern, this is the hourly chart. Let me show the daily chart here. If I start seeing a reversal towards 2,631, it breaks through with conviction, right? With conviction, then my next target, my next on price target is 2,611. But obviously, always with guardrails in place, always with limits.
Oh, very much so. And that alerts feature is really useful because...
It is, but why is it, Matt, tell me, why is it, I'm sure you'll tell me it's a button somewhere that I haven't spotted it. Why is there no ping? Because I find I set it up, and then I go off to do something else, and I open up different pages, right, browsers, because I also use the Bloomberg, and I also use the icon. And then if the alert pops up, but I'm not on the platform, I don't hear it.
It would seem like a no-brainer to have a ping, wouldn't it? It would seem. I don't know. That's one for our developers, isn't it? There's noise. I think noises and alerts it gets a mixed reaction. We have various alerts on desk which are audible alerts, and everyone switches them off because they become so annoying, which of course is poor practice and not to be encouraged. But that constant build of noises that are designed to be annoying and to alert you, it becomes annoying. But the concept that you can have alerts coming, so you don't have to be wedded to your screen, is a really strong thing. I was going to say, back in those early days in the 2000s when I was trading quite a lot, the concept of good alerting just wasn't there. It was I'd like to say on your handheld device, but of course it wasn't. You were sat there with your laptop.
Or is it someone throwing a dart or paper airplane at you from across the... Because I come from old school, right? When it used to be when things quietened down, then there'd be a dart board or there'd be a... right? I think at BGC this is on their floor in Canary Wharf, pre-GFC, there used to be like screens of sport on. And certainly at the SIBO, when I was there visiting the tasty people, I went to the SIBO and was on the floor of the VIX and also the Russell. You put your trade through it, you see this like cacophony and they're splitting out the trade and, there's a lot of yelling because they're, splitting 1,000, 2,000. But once it dies down, everyone just watches sport, right? But in the good old days, it used to be someone literally throwing something at you. Or like, I remember Post-it notes. Do you remember Post-it notes?
Of course,
everywhere, everywhere. But now we have this technology, and I'd really like that ping. I'm sure I'll have to ask around the desk. There must be somewhere. So I'm just going to show you cable because this is one that I like trading as well. We're currently up money on this, not by much, Rich calls this my breakfast money. So had this on for, I think, 3 days now. But as you can see that I have stops and limits in place, people. I never trade without any of those guardrails. And it frightens me when I see someone just open something and just let it run. I have, as you can see in the text box there, to remind myself what the thesis was. But also what you can do now, I just discovered this, is you can copy that. And in the alert, I had no idea that there was a enter short message area.
Well, there we go, yeah.
No more Post-it notes, mate.
No more Post-it notes. Sell 3M.
Which, funnily enough, was a 3M, that Post-it note technology was a mistake, wasn't it?
It was a mistake. It was always one of those great things with some of these companies. What do they actually do?
Yeah.
And 3M was, which of course was Minnesota Mining and something else. I don't know what the third M was.
Yeah. It was rubbish glue.
Yes, but it was, what do 3M do? This huge company in the States, they make Post-it notes pretty much. And that's a great thing. But that's, often it's less what the equity does, more what the wider story is, or what the momentum is, and what the flow is.
Yeah.
This is what people like to trade. People like to trade things that move.
Exactly. I like hunting the volatility. It scares Rich sometimes, but yeah.
Which kind of, I suppose, is why what gets talked about, what's being talked about every day. It's MicroStrategy is the stock du jour.
So let's put that up. MicroStrategy.
And which is an interesting one. There's story here, but sort of bottom line, what do MicroStrategy do? Everyone's kind of aware now that they own a lot of Bitcoins. There's a rump business. It was quite interesting. Aaron, who you might have seen on on the show, he was telling us that he was shocked to see on his girlfriend's screen she was using MicroStrategy's software. MicroStrategy actually, and I hadn't realised this, they actually are a software company. They're not just holding Bitcoins. I went on their website. They are AI for BI.
Oh.
This is their strap line.
What does the BI stand for?
Business intelligence. This is putting together a lot of good acronyms. No wonder the stock's up so much.
Yeah. If in doubt, confused with acronyms.
Yeah. So, but this is of course what people are trading and there's a lot of discussion because it's one of these stocks where you can see what the story is and you can look at the price movements and you can scratch your head much as in the early days with Tesla when it was all about can Tesla get enough funding to stay solvent and actually make the cars and realise the dream and sort of the legion of must devotees made that possible by
Buying into the dream.
Buying into the dream and letting him sell more stock and raise money.
Did you know what Musk sent analysts in the early days who were negative his stock?
Or something terrible, I imagine, through their letterbox, but no, maybe not.
He said only the ones that had negative. I know that because I knew some of the analysts who had positive ratings. They were like, "Why don't we get this?" The ones that blasted his stock got it. He sent red, silky Tesla red knickers with the Tesla sign on.
There's a Christmas gift. Yeah, exactly. Look for those on eBay or on Vinted or wherever one
does.
does.
Sign on. It's so funny. Also in the US, it's also really weird that a legion of very obscure, but believe me, if you Google it, you'll find out. Tesla fans who love Harry Potter, apparently the Venn diagram intersects, and they call the Tesla Model 3 the Voldemort car because of the no nose.
Okay.
So odd. But to MicroStrategy, you're right, with the whole kind of, all the cacophony going on surrounding the stock, the excitement, shall we say, surrounding the stock. We did have a close look at this. I'm trying to bring this up closer for you. There we go. You're right, it has that intrinsic software side, but also a lot of people trade this because you also get that AI play. But look, I've written down Beecham. Chris Beecham is our chief market analyst, and he was talking about looking for closing lines below where my yellow lines for direction, or closing above, because he's written a piece about how there's a real danger here of FOMO if you're not careful, and understanding when to get in and when to get out is as key as what instrument you are trading. And on that note, just a reminder, to all our viewers, we will be having a special segment with our head of compliance, Tom Lehane, and also Luke Moore a little later on, who will be joining Rich to talk about all the safeguards that we have in place here on IG. But otherwise, been such a pleasure, Matt, talking about, my goodness, not just, what a gentle rally we might have coming up to Thanksgiving, but also I know what to get you for Christmas now.
Some Tesla.
And on that note, thank you very much. I will see you after this short break.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Hello, you people. Welcome back, live from the trade desk. And we have, I know he's looking away from me because he's, I was ribbing him about his gilet. This is Martin Harris here, the one and only from the Smart Portfolios. Were you looking away? Because I always say you've got all the cool merch and you get all these wonderful gilets.
I do get all the cool merch.
Yeah,
yeah.
yeah. Do you know that's code for get Ange, the gilet? When you grab a gilet, someone says, hey, do you want a gilet? He's like, can I get one for Ange too?
Okay, all right.
Okay.
I'll try to get it. The same size.
How long have you known me? Right. So I heard you were recently at the rugby as well.
Oh yeah, I was at Twickenham on Sunday watching England play Japan.
With our clients?
With the clients.
How was...
Great. Met some really interesting IG clients there. Fantastic day out. Don't know if we're allowed to say names, so I won't. But yeah, really good to meet some of the premium clients from IG. Decent game of rugby, a little bit of one-way traffic for England, coming up against former coach Eddie Jones, now coaching Japan. So entertaining game, and sort of where we were sitting right on the Japanese try line in the first half. So lots of action right in front of us.
Nice. Well, I hope you were rooting for the wing, because I was a wing for my sins.
Now, you mentioned so.
In Australia.
You were a wing. Rugby wing in Australia?
Yeah.
Okay. I was a fullback.
Never been so scared in my life, right? And the coach always said to me, where's my little Jap? Even though it was incorrect.
Right.
Actually incorrect. But we became quite fond of each other. I had this female team was doing so well. So don't ask why I was in Australia. Even Sosnov's like, why did you go to Australia to do your bachelor's? I'm like, why would you do it in the same country?
To play rugby.
Rugby, no. But we were doing well. So he put us against the female Norwegian team. And that was when I decided I need to keep my teeth.
Yeah, Norway, famous for their rugby teams.
No, but famous for large. I mean, they're bigger than our Scottish men. They're bigger than Rich, okay? And you combine. So speaking of combination and positions, what do you think so far? What's your reaction been? Has it changed any positions? So I know Aaron's now sort of headspace in Argentina, but he was very hardworking, telling me about how you've repositioned some of the allocation after the Trump win and potential incoming tariffs before he goes off to Argentina. But now that we're getting a sense of the people that will sit in Trump's inner circle, like Besant and the like, has that changed any of the view of the allocation?
Right. So I think there's a lot to unpack there. Let me try and make sure that I give as much detail as possible. I think the big thing that has, the big trade effect that has happened is that IG Smart Portfolios, from a benefit side, have been overexposed or overweighted towards US markets for the last 12 months. So that's been really beneficial for us. What we are seeing now, though, is that US equities, there's now a clear gap between those that are domestic facing and those that have a kind of foreign exposed component to their earnings. And so we're seeing this outperformance of the domestic facing US stocks compared to any of those that have a lot more exposure, particularly to a place like Europe. So we've seen now this rotation, Europe really underperforming in the last couple of days. United States yesterday looked quite positive, especially for a lot of the consumer businesses. We are slightly, some data that's coming out, we're slightly bearish now on some of the consumer goods companies, United States, really taking a look at a business like Walmart in particular and their peers. So just with the data that's coming out, we saw housing starts yesterday looking quite weak. We've got PCE happening later today. I've got some notes that I can
GDP,
go through on that.
right?
That's right. So we should get that October PCE coming out, be 10 a.m. in the United States, about 3 p.m. in London. And that's just due to the Thanksgiving holiday. Normally you'd get that earlier, but we're expecting that data to show another bump in the road, is how we've sort of described it, on the path towards the 2% inflation year-on-year readings. And so we expect things to remain slightly elevated. We've got 2.8% quarter-on-quarter core PCE penciled in, and there's potential for that to then start dropping early next year. But we don't expect any sort of residual seasonality to be as strong as it was in the beginning of this year as it will be next year. So we're slightly bearish on the US consumer in the short term. Things have been looking good. We're going to wait to see what the data looks like. We've got Black Friday coming up now.
And Cyber Monday.
Exactly. And so these sales, we'll start to see, preliminary data around these sales and see how the US consumer is looking, because we still haven't had any of the Trump tariffs take effect for, to see kind of the benefits for the average US consumer yet. So that's what we're looking at. Any other sort of questions on that you want to go into?
Yeah, so I've got a position, and you can tell me whether Ange is rubbish or Ange, that makes sense.
Okay.
I'm hoping that you're going to say it makes sense, but
Yeah,
you can say.
Let's try. I'm sure it's a genius position.
So with everything that you've said, especially after the FOMC minutes overnight and the line where it would likely be appropriate to move gradually towards a more neutral stance of policy over time, but also what we're hearing from the ECB, I'm thinking, and Trump's bullish pro-inflationary, likelihood of pro-inflationary stance for the dollar, which might lift the dollar. I'm thinking bullish dollar, bearish euro.
Bullish dollar, bearish euro.
Yeah.
Okay, so I think that was exactly the strategy that played out when Trump was in his first term.
Mm-hmm.
I think
Is it now fading?
So has that trade basically run its course? Potentially. We need to see now what Besant is attempting to do. So this is
ex-hedge fund manager.
Ex-hedge fund manager, worked with George Soros. This is goes back to all the way back to 1992, breaking the Bank of England. If everyone knows that story of George Soros shorting sterling using borrowed funds, basically, the Bank of England were trying to maintain a particular level as part of an economic agreement in the Eurozone, pegging it in a floating rate between a few other currencies. And so really it was against German mark and sterling. And George Soros banked $1 billion in a day. Bank of England weren't able to maintain a high interest rate to support the currency and eventually folded. And I think the currency fell 15% in a day. George Soros heavily short. I think he had a $10 billion position, £10 billion position at the time, and made a lot of money out of that. And so a guy like Scott Bessant was part of all of that, really understands the mechanisms of currency markets and global economics. So we're going to...
My aunts and uncles and my mum and dad still talk about that event.
Really?
Yeah.
Black Wednesday, something like that?
It's like seared into their psyche, right? And yeah, you're right. He is part of that fabric. He's, I think, picked someone really smart. Do you buy the whole thing that he might be a bit more business savvy and will be softer on the tariffs than thought?
This is a very sharp guy. I think one of the things is that what Trump wanted in his first term, didn't get, was to have a softer dollar, because they actually want weak dollars so that they could improve their deficit. They currently export very little. they import a lot because it's cheap for them to do so. So I think the tariff talk, stuff like that, is really just part of a negotiation tactic, and that's what we're going to see. A guy like Scott Bessent, interestingly enough, he did donate $2 million to Trump, I think, for this 2024 campaign. Now gets now gets hired by Trump. So
how much did Tesla put in again? Is it 1.9?
I don't know the figure.
I think it was 1.9. It was huge.
That as well as Elon Musk having the foresight to buy Twitter for, was it 40 billion?
Yeah.
Sort of a year or two beforehand.
Yeah.
So yeah, that's we're gonna have to wait and see what ends up happening with the likes of Scott Bessent, but they're going to be using tariffs. We've seen some
130 million.
130 million. There you go. So we're going to see. We've seen some preliminary stuff around Mexico and Canada, really going to
and China.
European markets already reeling in terms of auto manufacturers. We've seen them sell off quite heavily with the anticipation of these tariffs, and also because markets are looking a bit weak for buying cars at the moment. China in particular hasn't been supporting European car manufacturers, just because the new EVs coming out of China have been superior both on value and often on the product. So that's what we're looking at there. I think in terms of traditional trading stuff, the rotation earlier this year was, we saw mega cap tech move into semis, and then from semis, all things related to AI. At the moment, we are seeing things go into software. Profitless software doing quite well at the moment. I think that there's a underappreciated element that the lower interest rates are very supportive of the software sector. Not so much because of this kind of discounting of future cash flows, but because it really starts to bring in some M&A activity. So you get these valuations based on what sales have gone through. So Trump coming in, deregulating a few things, we might, as well as, already this push for lower interest rates from central banks, we should see some more M&A activity, and I think that's what's going to be driving a lot of the, the market movements in the software sector in the coming months.
Any particular software names that you like or are watching?
So one that we're watching has been CrowdStrike, simply because of all of the events happening there. I think yesterday down close to 7%. So that is one that we're looking at. But other than that, the cloud computing guys, Snowflake is a name to look at.
I mean, but just before we move on to Snowflake, CrowdStrike looks like it was pounded when they had those issues back in the summer. I know, because I was in the airport waiting to fly to Chicago O'Hare and got completely caught out by the mess that it left in its wake. But it did look like it was an opportunity for many to get in on CrowdStrike, because fundamentally it was still a sound company. And so we've seen its shares march up there from the wake of that event in the summer. It's now back at the 37,800 level. Do you think this can go higher? You mentioned the other one, Snowflake, as well. We just had earnings from them, didn't we, recently?
Yeah.
I think we did, yeah.
So that's exactly it. So I think what's happening with the earnings in the software sector and this broad rotation is that most of these companies were laggards in the first half of this year. What we're seeing now is that other sectors, as I'd mentioned, particularly around the semis, the AI-related stocks, really looking somewhat toppy. And so this is almost a diversification. We're starting to see, what analysts are saying is that earnings are coming out, they're meeting expectations. None of them are really shooting the lights out, but they're meeting expectations, and there's a path for, let's say, the overall sector to more profitability. And so that's been really positive. So we're still bullish on this rotation into software, probably up until the end of this year. So we kind of like being in a risk-on position on software through to the end of 2024.
Do you also like some of the, what I consider the belt and braces names, like SAP, for example? SAP in Germany business software provider. They also use AI, but it is seen as the bread and butter, provider of. And you can see from its shares, not a huge amount of volatility there, but a very strong upward trend. Trader friends, this is a daily chart. They're the ones that if you pay, pay for the full package, you get the business expensing software that is to die for, because it makes it so easy when you're actually traveling and having to deal with all the receipts and business expenses. It does it in real time. It even has software, people, that allows you to, it gives you an electronic key, and it books you into hotels that have electronic keys. So when you get there, you don't have to mess about speaking to someone in reception. You just swipe your key and in you go. But that is full business suite software. Any thoughts on that side of things? I mean, would this form part of when you say software that you're looking at?
Yeah, absolutely. So it's one of the companies that we look at in a basket of software businesses. So we don't take a particular view on the individual businesses. We want to take a look at some questions.
Yeah, I'm wondering, Monkey Man, putting that to, and feel free to message later if we're running out of time, but what are your thoughts? Have you got any thoughts on Datadog?
No, I don't have any thoughts on Datadog, unfortunately. I think for us, though, it's really just looking at, we've had a rotation away from healthcare, semis, and banks, and we're looking more for defensive leadership besides software at staples, utilities, REITs. We did see some a recent rally in small caps, as I mentioned, the profitless tech and regional banks, though. But yeah,
profitless tech.
Yeah, a lot of these software providers are profitless. So we like software. The next, as I mentioned, the M&A that occurs in the software sector is really positive for valuations. And then the next thing is that they typically avoid tariffs. So they are not impacted by tariffs. It's really that people operating in hardware and so on that are impacted by tariffs. And then if we were negative any areas, we would say some of the discretionary goods in the United States is where we're seeing things to be a bit softer potentially going into the end of the year, and that will also be go through to Europe and potentially luxury goods as well.
I like luxury goods, especially Hermes. Not to wear, but to take a position in.
Sure. So I think one of the companies I do like there is to, if you are looking at the space, is to look at Richemont. So they, instead of looking just at LVMH, Richemont have a very diversified sort of portfolio of luxury goods, somewhat heavily linked towards China and Hong Kong. So Hong Kong, I think, on its own represents something like 11% of sales for Richemont, but that's something for investors to look out for.
Do you know what's also incredible is that in China they have these, have you heard about the luxury cities? Have you got time, people, to? Very quick, they're telling me, get it out there and look up luxury cities in luxury good shopping cities in China, because they are about 50 times Bicester Village here, and it's almost like you go there and you just, not for me, I don't shop. I don't shop. I hate retail shopping, anything. Being in a John Lewis for any more than 10 minutes brings me out in a rash.
So you're not going to be there on Black Friday?
No, I will not be there on Black Friday. Okay. Yeah, you look like a Black Friday kind of guy. I know Rich already hit the shops last weekend.
I've already found what I'm looking to buy.
Okay.
And we'll take it from there.
I've been known to buy 5 base layers in one go, one in every color, if it fits.
Right, for 5 years.
Yeah, I'm not going to hit the shops ever again. But take a look at these luxury cities. I don't know whether I can hit it up for you, but they look a bit like cities. But you go in there, you check in, and it's wall-to-wall Hermes, Richemont, and gotcha. Richemont owns Piaget and those sort of places, right?
Cartier is a big one of theirs.
Yeah.
Dunhill, Montblanc.
Yeah. Interestingly, Piaget, if you go to their shop in KLCC, they look at you before they press the buzzer. And they sell watches to the Sultan of Brunei's second wife.
Normally they just keep the door closed if I'm there. Yeah.
But I will take another look at Richemont, because I do have a watch list for luxury. There we are.
Yeah, so one of the benefits of Richemont is that any stimulus in China, they are often able to absorb some of that. So when you get a bullish China stimulus coming through, Richemont can capture some of that that kind of excess liquidity in the market, if we could describe it that way.
Right, and on a note, Martin is here with his, it looks very branded, his gilet. Thank you very much for joining us. Always a pleasure. Those of you wanting more questions about, got reams of questions about why you're fascinated now and looking at these software firms, please email it to Martin Harris at ask@IG, under his beautiful gilet there underneath his laptop here. ask@IG.com. And on that note, we'll see you after the break.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Hey, welcome back to Market Measures. This is my favorite part of the show, where we bring you the maths behind the numbers and forecasts, and also, of course, our platform.
Right, this section of the show is specifically tailored to risk tolerance, okay? So, of course, we got our interview coming up with Tom Lehane, but also our Market Measures looks today at a review of different risk tolerances. So, let's dive into today's Market Measures. Right, a question often received over the past few months: which option strategy works the best under what different conditions? For example, when should we use iron condors? When should we use strangles? Seemingly a simple question, but the answer depends on an individual trader's risk tolerance and management techniques. So generally, of course, we know that yes, if you're trying to look for a higher reward, then that's going to take a higher risk, right? Lower reward equals lower risk. So there is a study here that we've looked at different spider trading strategies from 2005 to 24 to determine the risk-reward relationships of different adjustments in positions. Now, there's 3 ways we can adjust positions based on the risk-reward relationship. And number 1 is, and this is the big thing that I have learned from Tasty, because I was all for selling naked puts, naked calls, and I did get caught a couple of times on them, and the loss was not fun at all. So defined versus undefined risk, right? So you know exactly what your maximum risk is. It cannot blow up your account if it's a defined risk. Strike distance, right? How far away, and the width of the wings. So that's defined strategies, of course. So then calculating the win rate, the worst P&L, the average P&L, and the average initial credit. So here's a tricky table here, but we're talking defined versus undefined risk. For example, if you put a strangle on, then that is just selling a naked put and a naked call, right? If you want to change that into a defined risk, then you put on a put spread and a call spread, and you're selling both of those. So that's an iron condor. Again, defined risk, can't blow up your account because you know exactly what your maximum loss will be. Right, so that's a lower risk level, and the reward is, you know, your maximum loss defined. And so yes, it's a lower margin, but you're going to take up less premium in your account, and it also gives a lower chance of profit as well, lower percentage chance of profit. So then we back tested it and we looked at selling a spider iron condor versus that spy strangle, and the win rate was 60% versus 71. But look at those worst P&Ls, right? A huge difference in the worst P&L, 1,900 versus 7,400. So the average P&L is lower, and the average initial credit also lower there as well. So then looking at strike distance, what happens if we do a 16 delta strangle versus a 30 delta strangle? Well, that is lower risk as well. There's a higher percentage of profit, there's less P&L volatility, and there is less premium and lower percentage of profit on the risk side. So the reward side is that first thing you see, and then the risk side, you know, less premium and lower percentage of profit. So let's look at those back tests. The 16 delta strangle is successful 77% of times. The worst P&L was at least slightly less, 6,300 on the 16 deltas rather than 7,900. The average P&L, 21 bucks, and the average initial credit lower. Now, the width of wings, we looked at what if you're only doing it on a $2 wide iron condor versus $10 wide iron condor. Well, the risk level, again, lower. That's what this section is all about. How do we reduce risk? And the reward is a higher return on capital and lower margin. The risk being, of course, lower P&L and lower premium on the narrow side of the wings. Now, back testing, $2 wide iron condor, 58% win rate against 64 on the wide one. Worst P&L, 1,460, so almost half of that $10 wide iron condor. Average P&L doesn't look great, admittedly, and the average initial credit, 88. Now, Ange, do you want to run us through the takeaways? So we're focusing, of course, on minimizing the risk, but still trying to get our reward there.
I like this, because I know you hate back testing. So this is a lot of back testing here. So where is the salad dressing? There's always a trade-off when looking at risk and reward, right? There's no free lunch. Setting up reasonable expectations at the very beginning is essential, and higher risk strategies have a higher loss potential, but don't forget, also a higher reward potential, right? We talk about this all the time. You have to take risk to gain, and understanding that risk is also part of the journey. Traders need to learn how to adjust and pick the appropriate strategies based on their personal risk tolerance for that specified trade. And we talk about, you know, getting in and understanding all of this before you get into a position. Understanding as well that not every trade is the same, and experience in the market goes a long way as well, because you hear Rich and I talk about this all the time. Markets are random. They're random. You can't predict how markets will go. So understanding the market goes a long way.
Excellent. Right, so that's today's market measure, and just, very much underlining the importance of recognises your own risk tolerance, and especially when things can go wrong. And that is going to be our next topic of discussion with our head of compliance here, discussing all the company's policy on identifying vulnerable clients. That's coming up after the short break.
Corporate earnings reports are quarterly reports that reveal the financial results of a public company. They include valuable information such as revenue, net income, and earnings per share. Investors can use corporate earnings reports to gain insight into a public company's performance. They help investors decide whether it's time to buy, sell, or hold on to shares. So, how do corporate earnings reports impact trading? 1. They affect market indices because indices are made up of publicly traded stocks. Index values go up or down based on stock price movements tied to company earnings news. 2. Corporate earnings reports can signal a healthy or unhealthy economy. They could influence central bank decisions on interest rates and monetary policy. 3. Unexpectedly positive or negative reports have the potential to induce volatility in the stock's price and prompt activity in the market. 4. This surge of trading activity could result in more liquidity. It becomes easier to enter and exit trades when there are more active buyers and sellers. However, increased volume can also introduce greater unpredictability and price swings. 5. Positive reports can bring in foreign investment to a country's market. Negative reports could make foreign investors less interested and reduce their involvement. 6. An earnings report has the power to sway how investors feel about a company or the market in general. How an earnings report impacts the price of a stock depends greatly on what investors expected. If earnings exceed estimates, the price tends to go up. If earnings disappoint, the price often drops. Meeting expectations is key. Even good news might sink a stock if investors hoped for better news. Likewise, a stock could jump if bad news wasn't as bad as predicted. So, how do you trade corporate earnings news? The challenge is to work out how you might react to news that will thrill or disappoint investors. Have an action plan in place for earnings that exceed expectations, or earnings that might disappoint. There is also a chance that the earnings might be exactly what the market expected, and there won't be much price movement at all. Keep in mind that the market can be unpredictable, and these changes can happen in a flash. Option strategies can allow traders to trade big price swings in either direction. Strategies involve buying both call and put options on a stock prior to the report. Call options can protect short positions from rising prices, while put options can protect long positions from falling prices. Finally, it's essential to have risk management practices in place, such as an airtight trading strategy, stop-loss orders, and portfolio diversification. Consider bird's-eye view factors like industry trends, the health of the economy, volatility, revenue growth, and trader sentiment. With preparation, agility, and risk management, you're on your way to trading corporate earnings news effectively.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome back, and we're here to discuss a very important topic on IG's vulnerability policy. Welcoming Tom Lehane to the show. Great to have you here, Tom. Your first time in the seat.
It is.
And also we've got Luke Moore joining us there as well. So, as I say, such an important topic. I've been a client for 7 or 8 years now, and you know I have been in a position where I've been stopped out, I've been margin called. It's a horrible feeling. I've got shivers down my spine even think about it. I remember exactly where I was, and it's such a tough tightrope to walk, isn't it?
It is.
But what kind of work has the company done to to go some way towards helping the clients that are vulnerable and identifying? That's the hard bit, isn't it?
It is. I mean, so I've been at IG for around 7 years now. So we've always had a vulnerability policy, but I think it'd be fair to say that lots of work's gone into this in the last few years. It's been a big area of focus for our board. It's been a big area of focus for the FCA. So we've greatly increased the amount of training that we provide to our people like Luke. So Luke's on the desk, he's speaking to clients all the time. So Luke's now got specific training on how to identify potential areas of vulnerability. But we've gone a step further than that. We've spent a lot of time with our data science team, and we've built a predictive model which has been back tested against some known examples of vulnerability across the client base over a number of years. And what that model shows us is that we can identify through the model 84% of all of the known cases that we've ever had.
Wow.
We can identify them 23 days earlier than we necessarily would have done otherwise.
Okay.
And so effectively now every single client in the client base gets a vulnerability score of 1 to 10, with 10 being potential vulnerability. And now that drives outbound calls from people like Luke. It drives additional MI monitoring inside the firm, inside the compliance function. And that's the main tool that we have now, which is much more data-driven and using machine learning to try and identify sudden and changes in patterns of behaviour, the sorts of behaviour that might indicate that a client is maybe chasing losses or is getting into a bit of a difficult space.
Yeah, absolutely. And look, Tom mentioned training there. Talk us through some of the training that goes on with client-facing roles.
It's continuous, which is one thing. It's continuous, and we're often getting kind of further updates. I think the training mainly centers on how can we pick things up when we talk to clients, because we see a lot of numbers move through client accounts. We see trades open, trades closed. What we don't see is the kind of emotion on the other side of that. So we've got to use the data that Tom mentions to infer kind of changes in behavior, and then give people a call. So we'll try and reach out to you, and that's across all different levels of the client base. So we'll look after specific people that I know, and we look after on the one-to-one basis, but also our help desk look after people on a kind of more wider scale. And it's trying to pick up tones of voice or certain phrases or ways where you can identify, is this person showing some form of stress? Is this person, depositing funds in a way that isn't consistent with how they would usually have done it or kind of historically? And then when we reach out to them, we really want to be quite sensitive to say, managing losses than it is again, we try and manage profits. We all know that you make a very profitable strategy. Just don't necessarily bad outcomes for clients. What we need to be cautious of is when we have a conversation with people, is try to figure out, is this problematic? And if it is, then we take steps to close clients' accounts for a little while. We can enforce that on our side. So we as a set of staff, we're empowered to say to the client, I think we need to stop. I think we need to take a break here. I think we need to take 3, 6 months, whether it's a permanent block or, we need to take stops. And we'll work with Tom's team. If we have a suspected case, we'll send over call recordings, we'll send over examples of emails or live chats, and we'll send them over to the compliance team to say, this is what we suspect is happening. Do you agree with this? And then therefore we might take proactive steps to then kind of try to stop clients from, from doing further harm.
Yeah, I mean, this all rings home too much, because self-identification as well. I mean, I remember calling up because the system wouldn't take another £10,000 from me. So I remember calling up and, my hand shaking because I saw my losses building and building, and it's just a horrible thing. So, I would imagine I would have definitely flashed up on it, exactly what you're talking about there. Those calls.
And clients can self-identify themselves as vulnerable. So if clients are in that situation, if they go to ig.com/client vulnerability, they can get access to lots of information, and there's a contact us section there where they can fill in, and we'll get in touch with them. You can also find it right at the very bottom of the website, next to sort of the customer agreement section as well, if you're looking for the vulnerability link, but it's there as well.
Yeah. Now, let's take a step back, right? What can we do? What is the firm? What kind of tools does it provide to look at your performance and to try and, well, there's two things, isn't there? There's the back testing on Tasty that I learned about a couple of weeks ago. So you can look, before you put that position on, you can look at what, within a 97.5% probability, what's your maximum loss. But then on the IG platform, there's also the incredible tool of looking at your performance, isn't there? The trade analytics.
There is. I think trade analytics is a fantastic tool. So we're trying to push our clients to that more and more. We think it's a valuable resource to them. It's got some interesting metrics in there around their return rates, profit-loss ratio, win-loss ratio, lots of stuff in there. So we'd encourage any client to look at that. Engagement with it is very high. Feedback on it is good. We want to develop it further, so we'd love to get your insights from clients as to what more they'd like to see, and we'll make sure we get that into the UK roadmap. There's a stat within it called the return rate. And effectively, that just means that if your return rate is less than 1, all other things being equal, your trading strategy is at that point in time not profitable. Clients with particularly low return rates, we push notifications to them within the platform, within their mobile apps, to direct them to trade analytics, so they can take a break, have a look at the breakdown of their trading based on various markets, and hopefully gain some insights there into what's going on, or perhaps what's going wrong.
Yeah. Yeah, and that's exactly what I did. I took a year and didn't trade at all for a whole year, and then but that moment of the margin call, look, that it's not a moment I'd want anybody to go through, is it?
No, and being in the business of talking to clients for 11 years, I've seen plenty of examples where we have had to step in and close people out. It's an interesting one because, of course, from the client perspective, IG have stepped in and done something on their behalf, and it's taken control away from you. So it's usually a point of contention. You know, it's usually you close me out at the worst possible price, the market moves. It's always that way, and you know, often the way that clients say it to us. But I always challenge that back to say, you know, what we do is if you reach 50%, we close half of your positions, roughly speaking. So actually what we're doing is we are managing your risk for you. So it is something that nobody wants to do, but we're enforced to do it. It's something that the regulators, the FCA here ask us to do, and we of course oblige. But it's there to step in if you're not stepping in for yourself. And so the point is that you always have positive equity and you always have money on the account if we close positions. So if we close half of your positions, it means you've then got half of the value of your account. If it happens again, you've still got half of the value of your account.
Yeah.
So the margin process is there as a fail-safe to really protect from these types of things, because we see client behavior where, you know, there's a loss-making position, you leave it, you don't do anything. If we allowed that to go on, you know, the chance of that turning into a bad outcome for the client becomes increasingly high. So the margin is so important there. That 50% closeout level is for retail clients is so key. I think the other thing is the education. You know, one of the whole reasons why we set this network up was to create that sense of community, to create that sense of education, and to try and make, if we can rise you know, what's the saying? If the rising sea lifts all boats, and the rising tide lifts all boats. If we can try to improve outcomes for everybody through, you know, putting our faces on the screen and taking questions from clients in the chat, this is exactly what this is for, and we're trying to promote education, risk management, because I think it's the way forward.
Absolutely. It's the risk management, the tools that you can use around, like the back testing I mentioned on tastytrade there, not, you know, trying to hit the ball out the park and risking more than you can afford to lose, right? That's
agreed.
Yeah, it's such an important one.
Yeah, it really is, and I think it's one of those scenarios where we always try to talk to clients to find out what is your goal, what is your ambition, you know, what has driven you to start trading? Are we looking to outperform the market? Is it looking to express a certain view? And if it is, you know, talk to one of our agents and we'll help you set up, you know, a structure, a series of stop losses, a way that we can help you. Hopefully, we can't guarantee that you're going to make money, but we can give you guidance on how to set up those controls and use things like a guaranteed stop. We haven't mentioned a guaranteed stop. You know, that guarantees that you can't lose more than that risk that you set up on there. It's like insurance. You know, that is available to all of our clients across the vast majority of our products. You know, we would urge people to use those more often than not.
Right, we have had a problem with the YouTube, unfortunately, so we might have missed one of the questions. So Tom, I do apologize. Can we just go back to question number one? And it was, what has the client done in the last 5 years to help identify potential vulnerable clients? Because there's been a lot of work done on this hot topic, isn't there?
I think, and apologies for repeating myself if I've already said this, but the crux of what we've done is effectively we've tried to learn from known historic cases of vulnerability where clients have self-certified, and we've tried to make sure that we tailor our training around that, and that we give people like Luke on the desk the best possible chance to either identify themselves where they can spot behaviour that looks of concern, but also are skilled enough to speak to clients in a really compassionate and caring way, and give them the right sort of information that they might need. So that's the first thing. The second thing is taking the historic data that we've got and running it through with our data science team, a model, and trying to build a predictive model of vulnerability based on shifts in client behaviour and activity. And as I mentioned earlier, the model has identified 84% of the clients went into the model. It identified them 23 days earlier than before. And I think we're really highly conscious that, you know, hopefully the model takes 1 to 2 days to identify behaviour of particular concern, because it can take a client only 3 to 4 weeks to spend or to waste life savings. So
well, that 23 days is a huge amount of time for the benefit, isn't it?
Massively so. So that model, we've analysed the data within it. We've spent quite a lot of time analysing the client base as a whole. Are there any particular characteristics of the client base that might lend themselves more to ending up vulnerable. So we've looked at sort of things like, is it the youngest age cohorts, or is it the eldest, and it's neither? Is it the people who've got the least amount of experience that are more likely compared to the most experienced, and it's not that either?
Wow.
So we continue to analyse the client data all the time. So far, what it's showing is it's really difficult to identify that client on the way into IG. Yeah. But hopefully the data science model that we've built and we continue to build out is that's the game changer for us in terms of identifying systematically issues.
Hugely. And then we touched on self-identification, and I'm speaking from experience. If you can't sleep, if your the thoughts are being taken over by this one position that's causing you the losses, if your voice is shaking, your hand's shaking as you're depositing more money, then that would point towards, and we see it again and again and again, the rogue traders and banks. They make one mistake and they try to cover up. We saw it in Macquarie yesterday, the FCA. We've seen it, of course, from the days of Nick Leeson. It's taking a mistake and it's not chasing bad, putting more good money after bad, isn't it?
100%. And I think maybe some clients might be nervous about ringing us up or ringing someone like Luke and saying, guys, I feel like I just want to take a break, because they're worried that we might take the step to shut the account down. We want to work with the clients. We're here to help. We're not here to judge. We're not here to take drastic action, but we definitely would prefer them to come forward. And there's all sorts of steps that we can take. We can do cooling off periods that for a different range of periods. We can have check-in calls for when that time period ends to see whether they want to come back. But we're not going to force these clients into coming back. We're absolutely aware that for some people with compulsive behaviours, this maybe isn't the right product for them. But certainly we want to work with clients. So please do get in touch if there's anything going on, because we can maybe spot changes in behaviour through the trading, but what we can't spot through the data model is changes in emotion or changes in life events.
Well, that's
someone going through a divorce, someone who's going through a bereavement. The model won't necessarily identify those things, and so that's when it's really important for clients to give people like Luke a ring and say, okay, guys, I'm just going to take a break, and we'll leave them well alone until they're ready to come back.
Yeah, that's it.
That's exactly what I was just going to add to that, Tom. That's kind of where the client-facing staff can step in and help. So if we are in conversations with clients, either over email, text, over a phone conversation, that's where we can step in and we can, try and use our training to pick up on stressful language or kind of tone of voice that would suggest that this is uncomfortable, or when they are, if the model picks up that we're seeing deposits that are larger than they have been historically. Those are the kind of things that we'll try to look out for, and then proactively reach out to people to say, is this within your normal means? And more often than not, sometimes people say, yep, sorry, this is absolutely normal for me, and then we kind of keep monitoring them, and then we'll have those conversations again, because if we see that people are depositing more than what they've told us, we then try to verify, okay, well, is the data that we've got accurate? Because we might see that someone has given us a low earnings and savings figure on the way, and as part of our KYC, we want to verify that we actually do have the correct data on file. So we'll try to, run things like that through the model to make sure that we are, offering the most appropriate product set, I think, is the right way to be. Because we're here to try and look after clients for a long time. We would prefer that the investment that we're putting in through the risk management tools, the trade analysis, the back testing, this show, the education that Tom's team is giving us as a set of staff, and the work that we then do with clients, that then matters, and that we have a long relationship with you as a client, and we might say, actually, we don't think spread betting is for you. We're going to switch those off, and we're going to give you access to our share dealing platform. So we're going to take the leverage question out of it, and there'll be things like kind of wealth requirements, experience requirements. Not everybody can access an account on the spread bet and CFD side, so we do have all of these steps in place, and we'd be more than happy to kind of move you up or move you back down depending on the conversations you're having with us. And Tom's team and my team, we're in constant communication about, if we have a suspicion about a particular client, what are the best steps and what do we think is the most appropriate. And sometimes if you're having a conversation with someone like that, they won't necessarily be that open to us putting a blocker on their account. And so we have to deal with the other side of it to say, we're proactively looking to, approach you, clients, with a break, either permanent, temporary, whatever it might be. And that's not often wanted, but sometimes it's what's right.
And you're absolutely right. Look, and I as you touched on earlier, the show itself is not just providing you with education, not just providing you risk management of people that have been in the trading world for 20 years, and I think I've made every mistake possible. Fat fingers, horrible losses, being stopped out, getting the tap on the shoulder from the risk manager. It's not just about passing that education experience on, but also having somewhere to talk. So we're building this community on the YouTube chat section, and it's sometimes you won't speak to your significant other, your partner. It can be almost you're embarrassed by the losses. But we're trying to build something here in the community that by all means you can come in and chat. You can email me, richard.mcdonald@ig.com. Always feel free to reach out because it's such a difficult subject. And gents, thank you so much for joining us today to try and to run through some of those policies. Tom, thank you.
Pleasure, thanks.
Luke, thank you very much. We'll be back tomorrow with more of that education and the latest news on what's going on. Have a fantastic day and don't be scared to reach out at all. Thank you all.
Morning, it's Forex Focus. I'm Pete Momack, Glenn Freiberger joining us. Finally, the A team is in. We've been able to retire the Pony League, we'll call him.
Made it through.
Maybe Pony League because he likes to ride a horse.
This is true. He will be doing a lot of horse riding this week out there in Oklahoma.
He will be in
horse pony riding, yeah.
He will be riding, which will be interesting. So
it's great for the pony because it doesn't get a lot of use when there aren't any people to ride him around, It's a whole separate stall. The horses get to play all day, but the pony has to stay locked up until his faithful rider comes back from the big city.
This is our friend Frank, who is actually going to Oklahoma to spend a little bit of time with his better half and enjoy Thanksgiving. And so, yeah, a little trip to the country for our boy, which is good to see.
Glad to have you back.
I went riding with him a couple months ago, and he's a little reticent, but doing better on the horse. So it was fun to see.
Impressive.
Yeah. What do you have now? Again, weekend starts today for you. I would imagine. Spy Kids weekend starts on Tuesday. So
I know it.
I can only imagine what Laszlo's got planned. I don't know if she's going to take her Falcon out for its daily airing or whatever. But now, again, the whole week kind of starts with. How do you lay out this long weekend of fun? Do you have any plans to see your family, or is it strictly just wrapping friendship around turkey and a large amount of alcohol?
Yeah, I told Mom next year.
Next year.
Got some things in the city to take care of this year.
I'm grateful to be seeing you next year. I like that.
Exactly. No, I'm going to see my family out in the suburbs, in Oak Park, where she grew up. So mom, dad, sister, brother-in-law. That's about it. So keeping it pretty small this year, but no travel, which is very nice.
And what about, again, we don't mention Mr. Y anymore. That's been banned from conversation with Bridget. But what about Miss X, your significant, not so significant other? But where does she play in the holiday mix? Does she come along? Does she not come along?
Do you
guys just not talk for 3 days around the holidays? So it's like it's not an issue.
Yeah.
It seems to me that you guys, and I'm saying this because I've got a son who's your age too. It's like we just don't talk about those things, so they're not an issue. It's like fascinating.
We don't talk about it, and hopefully it's not an issue. I think that's more of the rhetoric.
So you're walking through the minefield with lead boots. I like that.
Exactly. This will be, a first holiday season, so we'll see. Tread carefully. But no, she is also from the area. Went to St. Ignatius, actually.
Poor thing.
Yeah, which is the same as Mr. Cabrera.
Those lead pipes, all that poisoned water. That's
all the
not
asbestos,
good.
yeah.
And the asbestos, yeah. They used to sort of like cotton candy. They'd spit it up and serve it as snacks on Friday.
But yeah, so she'll be in the area, spending time with her family. And so we'll probably do some Black Friday shopping, I imagine. My personal stylist.
Okay, so she's not coming to your tribe and you're not going to hers.
Correct. Yeah, that would be
interesting.
That
Was
would be
that
a lot.
like cleared or is it just ignored?
I think it's pretty understood.
Oh, so ignored.
Yeah.
You can say understood, but ignored. That's fine too. Ignored.
I'll go with understood.
Okay.
But yeah, so separate family time. But
does she ever watch?
Yeah. If I say that I talked particularly highly of her,
okay,
then she'll watch. So we'll see.
Very good. All right. So you do some Black Friday shopping.
Yep.
The whole Thanksgiving family thing goes in the rearview mirror. And now, do you sweat Christmas, or is Christmas going to be treated with the same benign neglect from a relationship standpoint?
Yeah, I'll be away for Christmas.
I forgot. Glenn,
I haven't put my time off.
Glenn found an exclusive role here, which is again key to so much of what you guys see and read about FX. But it's funny because I did never find that job requisition with the 12 weeks of PTO. I think that's exceptional. You were able to land that. Now, what country are you jetting off to for skiing? Because you are able to attach yourself in fantastic ways.
Thank you. I pride myself on it. Yeah, we don't have anything crazy this holiday season, but we're still open to it. So if I get the last minute call up to the south of France or wherever it may be.
It was Switzerland last time, right?
Yeah, Switzerland, France, Alps. Very nice.
So you got time booked off in December on the holidays?
Yeah, right now the plan is to go see family in Salt Lake City.
Really?
And then go back to North Carolina. Haven't been back there in a
now,
couple
if you go to
years.
Salt Lake City, will you go up to Deer Valley?
I don't think so, just because we're not there for very long.
Okay.
And a lot of families flying in, so there are a lot of kids. That'd be pretty hectic, but maybe I could escape for a day.
Is that too pedestrian where you actually have to drive yourself to the mountain and like put
Sounds
skis
like a
on
hassle.
yourself? You usually like a team to do that for you.
Exactly, yeah.
Okay.
If I could designate certain family members to, be driver, chef.
Oh yeah, that's going to work out really
then-
well from my family experience.
Then maybe I'll entertain it. But yeah, no, a pretty low key, family-oriented Christmas this year, which is good because last year I did jet out on my family on Christmas
You
Day.
had a great trip.
Yeah, that was a ton of fun. So.
Next time you'll remember some of your friends in the transition possibly and kind of bring us
We're-
along.
Yeah, we're working on a big next year.
Okay, but if you go to Canada or Mexico or buy anything from there, it's going to be 25% more expensive. Basis what we heard. Interesting time. They released it. We got news yesterday that the president is planning on putting tariffs in place on Canada, Mexico, 25% tariffs on everything, an extra 10% on top of China.
Day one. We're right in the door, sit down, tariffs.
Yeah, which actually they released it after the U.S. equity markets closed, but it was actually right around 5 o'clock, 5:30 our time because I started to see currency markets, the euro and some markets really kind of open quiet and then just start to fall apart. And hadn't gotten the news yet. I was a little surprised. And by the time I got home and got onto the desktop, you could see what was going on. And it was, again, thinner part of the day, that 4 o'clock to 6 o'clock in the evening, is who are the players in? Now, remember, there's 3 major regions of time zone. There's the U.S. region and trade FX, go into Asia, and then Europe and the UK. Now, as we go from late afternoon in the U.S. into Asia, China, Japan don't really come into the markets till 7 or 8 o'clock Chicago time, 8 or 9 o'clock New York time, Eastern time. So who's there? The New Zealanders, the Aussie guys are there. So are there people making markets in FX? Always. Are the markets a little thinner and susceptible to a little bit more movement? Absolutely. Now, you can look at that one or two ways. You can be a little bit mindful that event risk will tend to give us a little bit more elasticity. Now, as a trader, I like that. I like the fact that, now if you were long euros, you saw them open. They bounced all yesterday. They held on to most of their gains. And you saw them 60 pips lower, and it was like, that wasn't a good feeling.
No.
They did test another 30 points. Let's go ahead and bring up the euro chart. They tested another 30 points lower than that, but did what they do on announcements like this typically. We saw the break. We saw them challenge the lows a couple of times between 6 and 7 o'clock last night. And then they put it all back in.
Yeah, wow.
So the question is, why would this even affect euro? And it's the idea of a little bit of risk off. So where we saw it a little stickier, and we'll look at Canada and Mex in a bit, but this was a case where, remember, we've gone from 111 down to 103.5. A little bit of shakeout of, are these the lows? You can see why it would break in a little bit of thin market conditions. But this is the case where they put everything back in and then some, and we're actually railing right into the highs right now as we go into the U.S. session. So it's actually challenging if you were short and you were looking for that. I mean, I read 3 stories over the weekend. Next stop for the euro is par. And whenever you read everybody talking about, oh, yeah, we're going to move 14% in 2 months.
Sure.
Do we get there? I don't know.
Good.
Maybe we do at some point. Are we going to get there in a straight line? Absolutely not. And this is going to, I think we're going in, and we talked a little bit about this. We tried it higher Sunday night, gave back most of that. Interesting, we traded down to 104.5, which was right where we went out last Friday.
Right.
So I took all of what we put in Sunday night and Monday morning out, but couldn't kind of get through that spot. And now we're seeing the buyers reemerge a little bit. But we're seeing a little bit of dichotomy between what's performing and what's not. And let's take a look at where we're seeing the impact a little bit stronger.
Yeah, and is there any additional color around why it was released at that time? Was the intent not to shake up equity markets, or?
I think, honestly, if I was to guess, it's just a guess, it was that they did this post-equity close. Yeah. Not really, not focused on, oh, what is this going to do to the FX in the thinnest part of the market, which is usually that 2-hour window of 4 to Chicago time, 4 to 6 o'clock in the evening is the thinnest part of the time. That was the time, a week after Brexit, we saw the pound go from 112 to 105. This is times we've seen the euro print below par. It's thinner, it can kind of feed on itself a little bit. Aussie, the same thing. So 10% tariffs on China, that affects Aussie. We know there's a high correlation between the Chinese markets and Australia. But in this case, very much like the euro, they put it all back in. But albeit from much, why did it all come back in? We're not breaking Aussie from 68 cents.
No.
We're breaking Aussie from 65 cents. We're breaking euros from 105, not from 109.
Exactly.
So that is a little bit of context around where it is. The one where it kind of stuck was Canada.
Yeah, great point. 25%. I didn't expect that. I hadn't done too much reading on the tariffs in detail, but I didn't expect the same, just blanket across borders, 25% Mexico, 25% Canada. Does that have a large effect? Obviously, it should.
I think here's one where we had a big move from sub 140 to 141 and a half. 150 pip move is a big move in Canada. I would imagine that would probably sit well beyond 1 standard deviation, about halfway to 2 standard deviation.
Yeah.
So a big outsized move. And the fact is it off those really thin condition highs at 4 or 5 o'clock? It is, but not by much.
Right.
So I agree with you. This wasn't part of the, at least what I saw, the news cycle or what they were talking about. A lot of the focus, we looked at pre-election, the peso being a proxy for an election trade. So here we're getting a little bit different result where you look across the board, sterling up, euro up, yen lower as we'd expect. Canada is the one outlier here, kind of, where it hasn't basically taken out all the reflexive knee jerk, even though we were at higher levels there. So yeah, good one to look at too, is we can take a look at Aussie Canada if you want, or just go right to Max.
Yeah, and it is interesting because you can believe it in a lot of these like secondary markets to the news, like the euro, even Australia, where you're seeing kind of you need the initial reaction to the news,
right.
But then there is also the storyline of is this tariffs historically can be a very strong negotiation tactic, and so similar to how the Fed at least is taking a lot of this stuff, where they taking the stance of, yes, we hear all the news, but we're going to wait till anything's actually done to react. And so maybe some of that two-way action just coming from we kind of should expect these threats, whether they actually play out on day one, we'll see. But in these markets, you have to at least respect what could happen, so a leg higher.
And I couldn't agree with you more. This is, number one, this is him doing exactly what he said he would.
Right.
Which, whatever your thoughts
Surprise.
are, you're not getting any surprises here. And is it going to be a more tactical play, or is he just going to basically paper the tape and stick it all up there and then see what they can maybe negotiate? I don't know, but you're right. And I think that's why we saw a little bit of the pullback, not so much. I would imagine this is going to continue to be a little bit of a tailwind in Canada. And let's take a look. We're at levels, yeah, and actually tighten it up a little bit, Glenn, because let's take a look at, we're looking at dollar max here.
Yeah.
Okay, these are levels we haven't seen for quite some time.
Exactly.
So,
all the way back to, 2022.
Right.
In this dollar Mexican pair. And yeah, this 20 handle right there, a lot on the election news, but now taking a leg higher this past week and a half.
Absolutely. And does this then impact part of the play too? Is Mexico? Mex is a carry trade. They pay higher interest rates than the U.S. That has been something that's helped support the peso up to a point. Now are they going to be in the situation where they're going to have to lower rates to stimulate growth because the tariffs are going to impact it? A lot of things in play. So we're seeing definitely good two-way back and forth in this pair. And we're at levels we haven't seen. We're not through those multi-year levels, but expect a little bit more elasticity here. And this will be news sensitive. So if you're looking for a different type of trade, this is a little bit more, it's not more advanced because it's the same. Any currency pair, you're just trading one relative currency against the other. It could be against the dollar, or if you're looking for that next level of diversification, it could be euro against yen or Aussie against Canada. We'll take a look at that too, because that's a very commonly traded pair. But this one will have a little bit more elasticity to it, and a little bit more back and forth. So if you're looking at this from a contrarian, or, they're really going to put, it's going to be impactful, and we're going to see MEX continue to deteriorate in value. If we print through 21 or 22, we're going to get into that uncharted territory level, and you're going to see markets feed on themselves. This is not unlike equity markets, that when they get to new levels, they get more elastic. It's what is fair value is the markets price it efficiently, but there's more uncertainty around where it is. more people need to hedge, so you get greater volatility. So this is an interesting one. You can look at it from either side. Like, this is way overdone. They built in all the news. Now he made the statement.
Right.
What more can they do?
Yeah, no, I think you nailed it. And there are a ton of differing perspectives here, because it is easy to say, okay, we knew he would impose something day one. This news is played out. This could be the end of the move. But then you zoom out and you think, well, his presidency is 4 years,
right.
Historically. And could those effects, could he ramp that up throughout the 4 years? Then your time horizon for this is vastly different.
Right.
And you could see a completely new trading range. And to your point on this being a harder pair to trade, yeah, it might just be you need a little more focus into researching all the levers and moving parts, because just speculating here, but earlier in the summer we had a ton of Mexican peso news around their new government.
Right.
And so you bring it up that it will be very interesting to see if they react in terms of their own monetary policy or additional repercussions to trade. So a lot of things to consider, and a very interesting one to do a deep dive in.
Yeah,
if you are trading.
Absolutely. And don't get put off, though, by, well, this sounds too complicated for me. The markets are liquid, and they trade around the clock, and you're getting 2A action. Again, you can see the news play out in real time. This chess match is playing out in front of our eyes. You may have an opinion on the chess match. And that is where this becomes an interesting proxy to do. Be mindful, the bid offer's a little bit wider in here than what we look at in Euro. So there's a little bit more friction in doing this trade. And next week, we'll actually walk through a couple of examples of how the trade ticket looks on tastyfx. So you get a sense of, okay, how does this set up in terms of margin, depending on the pairs, is a little bit different. Margin for peso is a little bit higher than Euro, where it's 2% margin or 50-to-1 leverage. It's I believe it's 10-to-1 in the peso. So why is it higher? Well, it's a little bit more volatile pair. And just like in futures, you look at, well, I get 20-to-1 in crude oil. Why do I only get 7-to-1 in natural gas? Well, natural gas has more volatility, and the model, the SPAN model they use, which is a similar model, it says that there is more volatility, thus they require a larger initial margin to it. Same thing here. So you're mindful of that trading this pair. Again, the great thing about SpotFX is you can trade whatever size you want. So this may be one where you trade a smaller unit here because you have an opinion, it's moving, but you don't want to get too caught up into it. So scalability is a great piece of SpotFX. One of the things I like about it is that you're not compelled to use the same institutionally sized products for everything. So that's great. Replicatable in the ETF world? Absolutely not. Replicatable in the futures world? Yes and no. It's a bigger bite, and it can have its own challenges. So this is an area where stuff like Mexico is really interesting. But let's jump over. Where do you want to take a look at?
One interesting one to watch throughout
Kiwi,
the day.
absolutely.
Yep. New Zealand dollar getting a little bit of those effects. I think if we go to the 15-minute chart
But go back to the daily just for a second. And let's tighten it up. So to look at, are we cheap?
Yes.
Absolutely. For the technicians out there, this is a triple bottom. And again, if technical analysis works for you, that's great. If you use it as a reason to stay in bad trades longer, that's the problem. It's not. It should be a tool, not your decision maker. But it's great context, especially for new traders who, I watch guys like Tom who could trade 100 underlyings, and he just does it with a ribbon of prices. And I've been trading for 42 years. I talked to my old friends, and it's like nobody can do that.
Right.
He is unbelievable. He's exceptional in his ability to keep all that information warehouse. Charts are great visual to give you context around where things have been. Things are here. Again, we're at a very interesting inflection point. this has been a bottom for a lot of the moves here. Have we kind of pierced the closer two bottoms? Yeah, but again, not by a convincing way. We're just sitting around that level. What does this mean? This will be an interesting time for either we extend and roll over towards the end of this week. And this is an interesting week because Thursday's a holiday, although FX is open.
Right.
So you can trade FX around the clock. There's no like half day or anything like that. Friday, we're open all day. It's not like a half day like it is in equities. So you can get a product, which is something as an active trader I love and a lot of people do. It'll be interesting to see if we stage a bounce off these lows or this is just the capitulation. Now we've got U.S. employment and non-employment. We've got GDP and inflation numbers tomorrow. We got
New Zealand Reserve Bank of New Zealand meeting tonight.
And what time is that?
That'll be at 8 p.m. Eastern with the press conference at 9 p.m. Eastern.
Okay, and where do you find that, Glenn?
You can find it right here in the economic calendar on today. And we've got it right down there. And yeah, this will be interesting because we have forecasted a 50 basis point cut. And this is a continuation on...
I love this calendar. We just rolled this out about 6 months ago, and I mean, we had a bad calendar. Why would I put lipstick on a pig? This is really, I mean, going through this was something, again, from this, I'm not going to make a macro determination. What I'm going to do is I know the event risk. I know what the expectations were. I know what has happened in the past.
Exactly.
That's the information I need as a trader to act. I'm not going to build a whole macro theory off of this. As traders, we want to know when information is coming out that can move markets. So great context here. They're on a fairly aggressive but similar easing cycle to us. Now, they're debating, actually, as that net news came out about the tariffs, one of the Fed governors, Kashkari, came out same time and said, the neutral rate may be higher than we think, and December is not a foregone conclusion for a rate cut. So you saw bonds trade a little bit lower, notes trade a little bit lower. So U.S. interest rates pushed a little bit on that. But this is, so in the U.S., rates not guaranteed to be cut in December. Here, they're looking for a big 50 basis point cut. It's a large cut off the rate.
Definitely.
So this will be an interesting spot. So you've got two things to keep track of. Rate cut at 7 o'clock my time in Chicago, 8 o'clock Eastern time. Then the press conference, just like they do in the U.S. here, from the Reserve Bank of New Zealand's governor at 8 o'clock Chicago, 9 o'clock. We should see movement off of both those. One will be whether or not they do cut the full 50 basis points, because it's not a lock whether or not they will. And do they cut by less? And do they come out and then tweak it with verbiage? Or do they cut by more and then tweak the verbiage back? I don't know. All I know is that we'll get movement off of it both sides, which will be interesting. So from a scalper standpoint here, I would say you're taking your ranges that you're interested in. You're probably adding between 50 and 100% to it. In other words, if I'm going to scalp around 40 or 50 points in Kiwi right now, I'm probably going to look for 60 to 75 basis points, pips, excuse me, of scalping range on these events if I want to be the contrarian or I want to manage positions. Just as context. Everybody, you determine what works for you. Right. It's really up to everybody to do that. But this continues to be an interesting play. Markets here continue to offer us good two-way action. Very much looks very Australian-esque, very Euro-esque in terms of they hit it hard, they hit it through the lows, and they recovered off of that a little bit. So I don't know if there's enough to make a story here. We've bottomed, especially with rate risk coming. But I think it does mean this is something that's going to be on top of my board when we go through tonight.
I agree. Yeah, a lot to look forward to. And also, if you saw on that economic calendar, we have Australian data tonight as well. So a lot to look for with the FOMC minutes today. Not sure how time sensitive that'll be now with all these things evolving so quickly. But a lot to look forward to on the economic calendar, and a lot of good dollar stories playing out this week ahead of the holidays.
Good job out of you today, my friend.
Thank you, sir.
All right, well done. Guys, coming up next, Tom Sosnoff, Tony Batista, Vanetta Logan. We'll be back with you next week, actually. Have a great day.
Thanks, guys.
We built tastytrade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. tastytrade.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at tastylive.
Got the need for speed? No problem. On tastytrade, adjusting your option positions is a right click away. Rolling just got quicker. tastytrade, make your move.
It was a beautiful fall weekend in Chicago. Lots of sun, warm temps, and tons of people out in the neighborhood. To try and be more normal, I decided to work from the coffee shop all weekend. You know, mingle with the common folk for a bit each morning. In fact, I wrote the cherry bomb yesterday while talking markets with complete strangers. What started as a discussion about fried clams and Cape Elizabeth evolved into a heated debate about junk bonds and cashless collars. That was fun. You see, every once in a while, you need to challenge yourself. That's why, for the Bears game, I made Jamaican-inspired oxtails. Who says I'm not a risk taker? But the real reason I'm sharing the story about talking finance with random strangers is because that's what makes Tasty so special. Unfortunately, we live in an incredibly divisive era of interpersonal communication. When talking to people we don't know that well, we can't talk about politics, religion, social issues, education, or even current events. I feel like every topic becomes an instant powder keg. Every topic except for finance. Tasty Nation speaks their own language. They're different. They can articulate certain aspects of investing that always intrigues and engages random strangers. I commonly hear, "How do you know that?" Strategic financial know-how and articulation skills are an amazing bridge between people with very different views and opinions. Let me give you some examples. The next time someone says, "Isn't Trump amazing?" you say, "I just bought a broken-winged butterfly in the SPX." Or, "Kamala is just incredible." You say, "I just sold a jade lizard in NVIDIA." On immigration and taxes, you say, "I really love the leverage of span margin." Tasty Live really is making the world a better place.
Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat.